Hi guys, welcome to BCCA. This is Ravi Teja and I'm your faculty for Corporate Financial Reporting at CMA Final Level. As promised, I have come up with the most awaited CFR Endgame Marathon. So if you observe the screen, it is totally filled with the figure 18s everywhere. Our CFR, which is at paper number 18, its marathon is Endgame, which will be released on November 18th. That is nothing but today evening itself at 6:18 p.m. If you observe what are the topics which are covered in this marathon, I will just give a brief overview. If you observe part A, I have covered the most super duper three important set of Indian accounting standards. Those are nothing but IndAS 16, 38 and 36. Along with these three standards, what I have covered is the super important financial instruments also. Along with this, I have also included internal reconstruction also in part A itself. If you keep these part A topics aside, other topics, other standards like IndAS 115 and 116. Along with this valuation of goodwill and shares and NBFC also, I will be including all these chapters in part B. Another things, for example, business combination and CFS and SFS. Super important. A plus category chapters. You should never miss these two. My kind of strategy is you have to definitely attempt any one question out of these two standards. If you aim for both, excellent. You will easily get 90 plus. Mark my words. But you can prepare like this also. Just prepare any one question out of these two, but don't ignore two. Okay? Yes. So next, other. Sir, what about part C? If you observe part C, I will be covering balance theory chapters. Very, very important. Government accounting and recent trends in financial reporting. Those two I will be covering in part C. Along with that, MCQs related discussion also I will be doing in part 3 itself. Other than that, whatever the balance indices which are there, my guess is out of these five standards only, they will be asking three questions. But sometimes there is a little chance that they may ask a question from IndAS 102 or 108. So I don't want to take any chance. So what I will be doing is whatever the miscellaneous sort of indices are there, I will be covering in a separate video. That is in part C. So part C you just have to watch the theory and MCQs very nicely. Others, even if you leave, still you can aram se get 90 plus. That is my assurance. So what you have to do is just sit back and relax, follow part A perfectly, part B also perfectly, these two also, your choice. If you want, watch these two perfectly, or even if you attempt any one question only out of these two, still it will get you more than 90 plus, provided you have watched that theory topics and MCQs perfectly. Okay, so that's it guys. Happy learning. A very, 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 very all the best. Mhm. So, hi guys, can you please confirm whether the audio and video is fine? Let's wait for 2 minutes so that other students also have to join. Then we'll immediately get started. So first of all, before starting, can you please confirm that have you watched the yesterday's lecture, what I have shared in our WhatsApp group? You got some time to watch that or not? Please confirm. Yeah, good afternoon, Banu. Good afternoon, Surya. Can you please confirm that whether you have watched that or not? Because that is totally important, because I will not be going that much in depth to discuss. Since we have already covered in detail in that video, I just wanted to take you guys leverage of that video. Okay, yes. So most of the students are saying that they have already watched that. So within the next 1 minute, we will be starting with the things. Okay. So another compulsory question. Compulsory question. Compulsory means compulsory. Not even a single attempt also they have missed any question from this concept, which is valuation of goodwill. And basically the chapter ka name is valuation of the shares and goodwill. Okay. Yes, sir. So just 20 seconds, guys. We'll be starting immediately. So as I think most of the students have joined, but let us just wait. Okay. So yes, sir, we'll be immediately starting with the things. So just a moment. Just a moment. Where is it? Okay. Yes, so before starting with goodwill, let me just give you an introduction of quick 2 to 3 minutes as to, sir, why this goodwill ka valuation is very, 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 very essential. Slowly, let us try to understand the things. Okay, I will not be going into in depth because, as I have already been mentioned, that there is one recorded video wherein it will be covering all the methods of goodwill ka valuation and all. So I think if you guys have watched that, probably you will be understanding the things. So, but yes, guys, assume you have started one business. For example, assume you have started a stationery business kind of a thing, or any business for that matter. If you are doing one business for a long period of time, long period of time, along with the normal profits, along with the normal earning capacity of your entity and all, you have earned something which is called as goodwill as well. ठीक है, since you have the advantage of doing such business for a longer period of time, customer have developed an invisible trust in you. ठीक है, so that is nothing but the concept of a goodwill. But if you wanted to sell, if you wanted to sell your goodwill to any person, if you wanted to sell your business to any person, your business to any person, let us assume just in my balance sheet though, in my balance sheet, sir, I have taken the value of the assets, I have taken the total value of the assets is 1 crore rupees. Okay, so these are my total value of the assets. And sir, I am having some outside liabilities. I am having some outside liabilities. Sir, how much outside liabilities you are having, sir? Sir, I am having an outside liabilities of 20 lakh rupees. If someone asked me to calculate the net assets of the firm, if someone asked me to calculate the net assets of the firm, I have got the net assets of the firm as 80 lakh rupees. I have got the net assets of the firm. This is called as net assets of the assets of the firm is how much, sir? 80 lakh rupees. Now you have to understand, sir, but let us assume buyer is ready to pay, buyer is ready to pay a consideration of, buyer is ready to pay a consideration of 1 crore 20 lakh rupees. Try to understand the scenario. You will exactly understand the meaning of the goodwill. Okay, sir. Sir, first, if you observe the value of the net assets of the entity is how much, sir? The value of the net assets of entity is 80 lakh rupees, which means if as on the date, I have sold all my assets and if I have repaid all my liabilities, my net asset ka position is how much, sir? I am having a positive balance of 80 lakh rupees. So this 80 lakh is nothing but the value of the business. But I am ready to pay 1 crore 20 lakhs for this business. But I am ready to pay a premium. I am ready to pay a premium over the net assets. And you guys have to tell me, sir, why I am ready to pay extra 40 lakh rupees to this entity. Why I am ready to pay extra 40 lakhs to the entity? Because if I seriously observe the financial statements of the entity, I have identified, sir, the net assets of the entity is only 80 lakh rupees. But whoever the business owner is there, that owner is not ready to sell such business at 80 lakh rupees. He's insisting me to pay a premium of 40 lakh rupees extra, and that 40 lakh rupees extra he's paying, that is only because of the goodwill. Because while valuing any kind of a business, one factor which is there, and that factor is very crucial, and that is nothing but goodwill of the business, goodwill of the entity. It is very essential to do the valuation of the goodwill. Okay? Yes, sir. Another important thing, guys, if you observe any IndAS, for example, IndAS 2 or IndAS 36 or IndAS 16, they may say prescribed methods of valuation of the goodwill. Sorry, valuation of those respective items. But strictly speaking, to value this goodwill, see, here is yes, sir. This 40 lakh rupees is nothing but my goodwill cutting. Fine, sir. We have understood. Now, the next part, what I wanted to explain is fine. Let us quickly come to the soft copy, which I have shared with you. So now try to understand valuation of goodwill jo hai na. Valuation of goodwill is very essential for an entity for the purpose of share valuation. For the purpose of share valuation. Okay, this how it is essential and all. Let us understand a little bit later. But now in the name of the chapter is basically it comprises of two components. So first one is valuation of the goodwill, and the second one is valuation of the shares. These two methods are very important. We have divided the chapter into two parts. First one goodwill, second one shares. In order to get the valuation of the shares, we should definitely get the value of the goodwill. There is some sort of interlinking between this goodwill ka valuation and this shares ka valuation. Sir, what is the exact interlinking and all, we will slowly understand, guys. But our first objective, most of the times though, our institute loves asking the questions on this valuation of goodwill ka part. Sometimes they may ask this valuation of shares ka part as well. So whatever the question which they have asked, we should definitely get a 7 out of 7 marks. That is going to be our objective. Okay? Very easier chapter. Only some things we have to follow. Some things so blindly we have to follow. If you follow blindly those things, you will be aram se getting 7 out of 7 marks. In maximum cases, I will try to explain you the logic of the concepts, but some areas here and there, probably there are around 1% of areas, so there should not be any logic. You have to mug those things. Okay? Since this is an exam oriented match which is going on, it is not necessary or it is not possible for me to go into those areas which will take time consuming. Okay? So what I will be doing is I will be quickly ask you to mug little bit extent of those things. Okay? So if you want marks, you have to mug those little areas. As I am saying, very small areas those are. Okay? No need to worry about that. So with that introduction, let us quickly start the valuation of the goodwill. Okay? Yes, sir. Goodwill ka definition goodwill का definition they have defined as first one, ability of the firm to earn the future profits based on the capital employed. Guys, goodwill is nothing but the ability of the firm to generate the future economic benefits, or I can say like this, to generate the future profits based on the existing capital employed. Okay, this is nothing but goodwill, guys. So only two calculations we have to keep in your mind. Sir, first one though, how to calculate the future profits, and second one though, how to calculate the capital employed. Okay? Yes, sir. First one is what, sir? How to calculate the future profits. Second one, sir, how to calculate the capital employed. Okay, sir, we have exactly understood the points. So without making any further delay, let us first understand, sir, how to calculate this future profits. How to calculate this future profits. Guys, it is very common sense ka discussion which is going on. Sir, we have to estimate the future profits. Because based on these future profits only our goodwill is going to get calculated. Now, sir, what is the basis for the future profits? Guys, it is very simple. Based on the entity ka past performance, we will be making certain adjustments and we will estimate how much of that past profits are going to continue in the future. I repeat, based on the past performance of the entity, we will be estimating, sir, how much past profits are going to continue in the future, and based on the past profits which are going to continue in the future, we will be estimating our future profits. Okay? Yes, sir. That is the very basics of perspective. But remember one thing, future maintainable profits, always you have to calculate from whose perspective? You have to always calculate from equity shareholders point of view. This is the first point you have to fix in your mind. So this future maintainable profits, so always I have to calculate from the perspective of equity shareholders. Sir, why you are saying this should be calculated from the perspective of equity shareholders, that you will understand a little bit later. Okay? Yes, sir. Sir, 3 years ka profits they will be giving in the question. 3, sometimes they will give 5, or sometimes they will give 4. Maximum cases they may only give the 3 years only, because after all the question they will ask from only 7 marks. Okay? But sometimes they will give year 4 also and year 5 also. So just for practice purpose, just for the worst case scenario, we will be solving one question also which consists of 5 years. Okay? Yes, sir. Guys, we have to take profit before tax. Always remember this part. We have to start our discussion with which things are? We have to start our discussion with profit before tax. Sometimes the question may give profit after tax, but always remember, Baba, we will be starting our discussion. We will be starting our future maintainable profits with which things are? With profit before tax. I hope the first point is clear to you. Yes, sir. Guys, we will not be estimating, sir, whatever the PBT which is there now, that as it is, we can't take it for the future years. We have to obviously make few adjustments. Guys, try to understand the first adjustment which I am making. Okay, sir. Sir, what is the first adjustment which you are making is prior period errors. Sir, what is the first item, sir? First item, Baba, prior period errors. If there are any which they have given in the question, that you have to first eliminate the thing. Sir, what is the meaning of prior period errors? Guys, let us understand this with the help of an question ka example. Then slowly you will understand the concept and logic. Okay, sir. Second item, extraordinary items. So, for example, in any of the previous year, though you have sold one asset. If any of the previous year may you have sold one asset, and because of that you have got some loss. Guys, that loss you have got now, that is an extraordinary item. Sir, what is the meaning of extraordinary item? Extraordinary item means that asset ka sale you will never do in the future. Arey Baba, future maintainable profits, which means it should be coming in the future. It have to be maintained in the future. But in any of the previous years, though, if in any of the previous years, assume one extraordinary item is happened, which will not going to be continued in the future. What we'll be doing is, sir, we will be adjusting that profit. Okay. Yes, sir, we have understood this point also. Complete clarity you will get after solving the example only. So just hold a little bit. Okay, we will solve example so that you will be exactly understanding the things. Fine. So extraordinary items are also done. Non-operating items or non-trade investments. This you have to understand, guys. Sir, what is the meaning of non-trade investments is, let us try to understand this with the help of an example. Okay. Sir, I have one balance sheet. Sir, I have one balance sheet. Sir, in this balance sheet, may assume I will be taking a very simple figures. Sir, plant and machinery, 1 crore I have. Furniture, sir, furniture to I have 40 lakh rupees. Next, investments. Investments in Geo Limited. Sir, Geo Limited, may I have made an investment of how much you have made, sir? 10 lakh rupees investments I have made in Geo Limited. 10 lakh investments I have made in Geo Limited, sir. Here, though, I have debtors of 5 lakh rupees. Cash of 2 lakh rupees. Okay. Yes, sir. So here I have creditors 10 lakh. Bank loan I have. Bank loan of 20 lakh rupees. Guys, whatever the balancing figure which is there, that will be my capital. Balancing figure. Assume how much balancing figure is there. That is my capital. Okay. Yes, sir. Guys, the balance sheet of this entity is, it is doing stationery business. It is doing stationery business. Guys, now I will be asking only one question. You have to tell me, sir, I am doing stationery business. I am calculating the goodwill for the stationery business clearly. I am doing goodwill only for the purpose of the stationery business. Now you have to tell me, sir, it have made some investments in Geo Limited worth 10 lakh rupees. It have made some investment in Geo Limited worth how much, sir? 10 lakh rupees. Are Baba, now you have to use your brains and tell me, sir, whether this investments in Geo Limited ka value, is it going to affect my core business, which is stationery business? If my investments in Geo Limited ka value increases, can I say that my stationery business is also performing well? Or, sir, if this investments in Geo Limited ka value is declining, can I say that your stationery business is not performing well? Think and answer, guys. Based on the investments in Geo Limited, based on this investments in Geo Limited, is there any chance that my stationery business is going to be affected? I am only talking about pure stationery business, guys. Think and give me the response. Based on that only, our adjustment will be there. I am receiving response only from one student. Okay, another student also replied that no. Clear? So that is the reason. These investments are called as non-trade investments. These investments are called as non-trade investments. Are Baba, if you observe, sir, assume you have got 10% dividend. Assume you have got 10% dividend from these non-trade investments. Are Baba, which means that dividend jo hai na, that dividend is included in this year ka profit. Or here also it may be included, sorry, here. So now you are calculating the pure value of the business. Since you are calculating the pure value of the business, you have to even exclude that item also. Since you are calculating the pure value of the business, you have to exclude that item. We have questions, then you will slowly understand. No need to worry at all. Okay? Yes, sir. Last one, guys, non-recurring items. Last one is what, sir? Non-recurring items, sir. For example, one fire accident have happened, and in 1 year, though, completely it was destroyed. Guys, is it possible that for that fire accident, will it be continuing in the future years also? Answer is no. That is a non-recurring item cutting. Okay? Which means whatever the PBT which you have calculated, for that PBT we have to make only 4 adjustments. This you have to remember in your mind. Okay? Sir, just a minute. Sir, first I will be taking the PBT. For this PBT though, I will be only making 4 adjustments, sir. Sir, first adjustment though, prior period adjustments. Sir, what is the meaning of prior period adjustments? Just to hold a little bit, you will be doing one brilliant question. Okay? No need to worry at all. Prior period adjustments we will be making, sir. After completion of this prior period adjustments, so we will be making an adjustments for non-recurring items. Non-recurring items ka adjustments also we will be making. And second one, Baba, non-operating or non-trade investments. Say if you are getting any incomes, from non-trade investments, those should be adjusted. And last but not the least, we will be making an adjustments for extraordinary items. Okay, sir. Yes, sir. We have exactly understood what you are trying to say. Now come to this part. Sir, if I make these 4 adjustments, I will be getting average adjusted profit before tax. Sir, what I will be getting, sir? I will be getting adjusted profit before tax. Oh, now try to understand. These adjusted profit before tax, so I will be taking an average of adjusted profits. I will be taking an average of adjusted profits. Sir, here profit for the year 1, 2, and 3 we will be adding, and this should be divided by 3. Then you will get average of adjusted profit before tax. Average of adjusted profit before tax. So you will be getting, okay, sir, but here you have to catch 1 point. Guys, I want 100% attention. Here you have to catch 1 point. Sir, what we have to do? While calculating average adjusted profits, always remember one thing. If nothing is said in the question, sir, what we have to do, sir, we have to always follow simple average. If nothing is given in the question, what we will be doing, sir, we will be following simple average. Okay, sir. But sir, the question is specifically asking me to calculate the weighted average. Oh, if the question have specifically asked you to calculate the weighted average, then you have no option. You have to go ahead and follow the weighted average. Guys, apply this much your brain. If question says, please follow weighted average, it will say. If otherwise, you have to do simple average. But one question may institute have mistakenly taken the weighted average, even though the question have not asked it. But let us ignore that parts. We will be following the consistency in this chapter. There are some mistakes which the institute have keep on doing in this chapter. But if it is a conceptual mistake, though, we will not do anything, guys. If it is ambiguous, we may try to adopt it as ambiguity, and we will be remembering that part. But these kind of mistakes, though, suddenly, if we also start doing weighted average, then in the suggested answers, though, they will give simple average only. Okay, so in order to make the thing very much clear, only remember one thing. If nothing is said, please follow simple average. If they have asked you to specifically calculate, then we will be doing weighted average. Okay? Yes, sir. Yes, sir. Yes, sir. Yes, sir. Please confirm if you have understood what I'm trying to say. We have to take only average, simple average we have to take. But if the question specifically asks about weighted average, then we will be taking weighted average. Sir, what is this weighted average? Just to hold on, I will explain. Okay, fine. So now, whatever the average adjusted profit you have got, please take that figure, and for that, though, some adjustments you have to do. Sir, what are the adjustments which I have to do? The first adjustment, Baba. Future adjustments you have to do. First item is depreciation on revalued assets. What I have to do, sir? Depreciation on revalued assets you have to claim. Sir, why will be doing depreciation on revalued assets? You will slowly understand. Okay? See, while calculating this goodwill, we have to take capital employed. Just after explaining of this future maintainable profits, you will be understanding that capital employed. Sir, plant and machinery ka current value is how much, sir? 1 crore. Assume they have given fair value. Assume they have given fair value of the plant and machinery as 1 crore 20 lakh rupees. What is the increase in plant and machinery value? 2 lakh rupees. So on this 2 lakh rupees, so you have to even charge the revaluation also. On this 2 lakh rupees, you have to charge the depreciation. So depreciation on this increased amount, that will be adjusted here. Oh, 1 second, guys. Is it gone? Huh. So, sir, depreciation on revalued assets will also be decreased. then you will get some profit. From that, please deduct the taxes because here you have taken profit before tax ka value. Therefore, sir, here I am making the adjustment of taxes, sir. Taxes based on future rates I will be making. Then, Baba, I will be finally getting adjusted profit after tax. Then, sir, I will be finally getting adjusted profit after tax. Okay, sir? Yes, sir. From here, you have to deduct preference dividend. And finally, you will be getting future maintainable profits. Okay, guys, always remember that you have to deduct the preference dividend. Always remember you have to deduct the preference dividend here. Sir, why we have to deduct the preference dividend is, Are Baba, we are finding out future maintainable profits. Here only I have written from whose perspective, sir? From equity shareholders perspective. Since we are finding equity shareholders perspective, you have to always deduct the preference dividend because preference dividend is also an outsider for the equity shareholders. Finally, you will be getting future maintainable profits. And in the question, they will say this something which is called as number of years of purchase. Sir, for example, I have got the future maintainable profit as 1 lakh rupees. In the question, if they have given number of years of purchase is 3, then you have to simply multiply this 1 lakh into 3 and you will get 3 lakh rupees as the goodwill. Guys, very, very simple point. This number of years of purchase that they will be giving in the question, you just have to multiply this future maintainable profits into number of years of purchase, then you will get the goodwill ka value. Okay, sir, we have understood the concept, sir. Guys, just take 1 minute. Just take 1 minute of your time and please go through this entire format. Okay, PBT we have to start. Only 4 adjustments we have to do, sir. Then we will be getting adjusted PBT. For this adjusted PBT, just to do future adjustments, then you will be getting adjusted PAT. From this adjusted PAT, you have to deduct the preference dividend. Then finally, you will be getting future maintainable profits. And that if you have to multiply with the number of years of purchase, you will be getting future maintainable profits. Okay, you will be getting future maintainable profits, which will be continued in the which will be continued in the number of years. Okay, yes, sir. I hope you have understood the point. Fine. So please go to the format entirely. Then we will be starting with the next point of the discussion, which is capital employed. Most important. Goodwill ka calculation is dependent on future maintainable profits and the capital employed. Okay, so first point is completed. Now let us quickly move to the capital employed, second point ka discussion. Guys, I will be giving only 1 minute of time. Please go through the entire format and just give me a confirmation if yes, you have understood. Okay, just type yes in the chat box that if you have understood, then we will be moving to the further important discussion, which is capital employed. Okay, yes, sir. Waiting for your reply. So please confirm me quickly so that we will be starting fastly. Guys, I think 1 minute have completed. So please confirm if you have understood or not. Please type NS in the chat box so that we will proceed further. Okay. Okay. Yes, sir. Yes, 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 yes. Fine, guys. So now comes the Brilliant. I'm receiving responses from all of you. Now comes the capital employed. Always remember one thing, sir, this capital employed also should be always calculated from which perspective? Equity shareholders point of view. This is the first point you have to fix in your mind. Sir, future maintainable profits also I am calculating only from equity shareholders point of view, and this capital employed also I have to calculate from equity shareholders point of view. Okay, so guys, very simple. Just remember what I'm trying to say. First, take the fair values of all assets. Take the fair value of all assets. All assets means land and building, plant and machinery, furniture. Every asset ka plant and every asset ka fair value we have to take. Okay, sir. Every asset ka fair value we will take, sir. We have understood the point. Take the total, and you have to deduct the fair value of all the liabilities. Simple. Fair value of all assets minus fair value of all liabilities you have to take. All liabilities means, example, debentures if they have given in the question, please take. Creditors, outstanding expenses, dividend payable, and even if there is any contingent liability which is there. Guys, generally contingent liabilities, so we will not record in your books of accounts. Rather, it will be shown as a disclosure in notes to accounts. Further notes may it will be shown as a disclosure, but here what this is saying is, while calculating capital employed to, even if you have recorded any liability or not recorded any liability, always you have to take the fair value of the contingent liability also. Okay. Yes, sir. The super important point which you have to remember is, always this preference share capital will be deducted. Always this preference share capital will be deducted. This is the second point which you have to remember. Finally, you will be getting capital employed. Finally, you will be getting what, sir? Capital employed. Okay. Yes, sir. We have understood this point. Finally, I will get capital employed. Guys, quickly go through this. Sir, take the fair value of all assets minus fair value of all liabilities and deduct preference share capital also. Then you will be getting capital employed. Then you will be getting capital employed. Okay, sir? Yes, sir. We have understood the point. Now, while calculating capital employed, you have to remember only, what should I say? Only 4 key points we have to remember, guys. Here I have written some 6 points, but only 4 points are the key points. So please remember these 4 key points. First key point which you have to remember, guys, I want 100% attention. Goodwill, if it is given in the balance sheet of an entity. If any goodwill though, if they have given in the balance sheet, for example, sir, for example, here in the balance sheet though, sir, they have given goodwill ka value also as 5 lakh rupees, sir. Remember one thing, this goodwill, we will treat this goodwill as a self-generated goodwill, and we will be ignoring this for the purpose of calculation of capital employed. Very crucial part. Sir, if in the balance sheet itself they have given goodwill, we will be always excluding while calculating capital employed. The reason is we will assume it as a self-generated. But sir, in the question, in additional information, they will generally mention, sir, the goodwill is purchased goodwill. If it is purchased goodwill, then please mention in the capital employed calculation. If the goodwill is purchased goodwill, then I will be considering it in capital employed. Guys, remember the point as how I am saying. Sir, goodwill, if it is given in the balance sheet, we will ignore that goodwill. We will exclude that goodwill while calculating capital employed. But in the question, if they are specifically saying that, sir, this goodwill is a purchased goodwill, then we will take in capital employed. Have everyone understood the first point or not? Please give me a heads up. Because in most of the questions, though, this goodwill adjustment, they will definitely ask in the question. If they have given goodwill, we have to exclude that goodwill. But if the question is specifically saying that this goodwill is a purchased goodwill, then we have to add this. So please confirm the first point whether it is clear for you. Then we will immediately move with the second point. Guys, if you are quickly responding, I will be quickly completing the chapter. My focus is to, my agenda is to focus more on questions. So if you are responding quickly, I will be quickly completing the concept and will be immediately starting with the questions. More questions we will solve, more clarity you will get. Okay, fine. So second part, non-trade investments. Non-trade investments. Arre Baba, regarding this non-trade investments, we already have did one adjustment. While calculating profit before tax, though, if any incomes from these non-trade investments we are having, those should be deducted, those should be adjusted, because that investments in Jio Limited jo hai na, that have no relation with my stationery business. Correct or not? Yes, sir. But listen one thing. Come here. In the example, if you observe, sir, this investments in Jio Limited have no relation to my stationery business. Therefore, if these type of investments appear in my balance sheet, I will not be taking the fair value for those assets also. Are you understanding or not? If any non-trade investments are given in the question, those also will be excluded from capital employed. Oh, ठीक है sir, why we have to exclude? Simple reason, investments in Jio Limited have no relation with respect to how your stationery business is performing. I think this is making sense. But now comes the beautiful part. Sir, in the question though, if they have specifically given it as a non-trade investments, then we will exclude, but our institute they will only give the word investments. Oh, even if only investment ka word is given, we will assume it as a non-trade investment. Okay, sir, unless specifically given as trade investment. If they want, they will give as trade investment. Sir, they are not giving, then you have to assume it as a non-trade investment. What will be excluded? Only non-trade investments will be excluded. Please confirm if you have understood this second point or not. Non-trade investments also should be excluded. Sir, in the question, if they have given only the word investments, then we will assume it as a non-trade investments. Okay? Yes, sir. So waiting for your confirmation. Please confirm whether you have understood the part. Yes. Yes, sir. Yes, sir. Yes, sir. Sir, now comes the next part. Sir, deferred revenue expenses, fictitious assets, debit balance of the P&L account, preliminary expenses, expenses not written off. Are Baba, all these items, so they are not actual assets only. All these items, though they are not actually assets. So ignore these while calculating capital employed also. Oh, so we have to ignore these also while calculating capital employed. Okay, sir. Yes, sir. We have exactly understood what you are trying to say. Little bit careful. 3 assets we have to exclude. Sir, first one, if goodwill is given in the balance sheet, we will be excluding. Sir, why you are excluding? Because I am treating that goodwill as a self-generated goodwill. Non-trade investments. Sir, even if the word investments is given, I will exclude that. Fictitious assets also should be excluded. What are excluded, sir? Fictitious assets also should be excluded. Okay, sir. Yes, sir. We have understood. These are the main points you have to remember. This proposed dividend ka point, ignore. You can ignore also, still it is fine, because proposed dividend pay, we will be doing accounting in earlier days, but now you will not be doing any adjustment for proposed dividend in your books of accounts. It will be just disclosed as a note, but even if they have given anything, this proposed dividend should be excluded. Okay, this point though, even if you ignore, it is totally fine. Now comes the next part. Sir, book value of the assets are only given, fair values are not given. Then what we have to do, sir? We have to assume the book values are fair values. Sir, if they have specifically given, we will be taking the fair values from there. But not given, sir, then what we will be doing, sir? We will be doing nothing, Baba. This book values will be treated as fair values. Sir, we have understood totally. If you have understood till here, then we are having only one last point, guys. Then we are having only one last point. Average capital employed. Sir, what is the meaning of average capital employed? Opening capital employed plus closing capital employed divided by 2. Here we will calculate capital employed now. This we have to take average capital employed. Okay, generally they will give you single balance sheet, which means if you do this, you will getting closing capital employed. You will get closing capital employed. So here what I have to do is, this is the formula which you have to remember definitely. Closing capital employed minus half of the PAT for the current year you have to do. Sir, why it is not possible for me to explain the logic right now? You can mug this formula. I think this you can aram say understood. Opening capital employed plus closing capital employed divided by 2. Sir, this I will do if they have given the opening balance sheet also and if they have given the closing balance sheet also. Both ka averages I will be doing. Both I will calculate and I will do the average. But sir, they will give only one balance sheet. How I will get? Remember this formula. We have one question, we will do that. Closing capital employed minus half of the PAT. If you do, you will be getting average capital employed. Guys, please confirm, have you have understood all these 6 items or not? If you have understood, we will be immediately starting with the problems. Okay, yes sir. So please confirm. Please confirm if you have understood these 6 points or not. Just 1 minute time I will give. So please go through all the points, and if you have understood, we will be immediately starting with the things. This liabilities approach, please ignore. Liabilities approach pay will not be going. So we will just ignore this for the exam perspective. Okay? Yes sir. Understood. Understood. So I want a confirmation. Take 1 minute of time and please check if you have any doubts in this part. I am receiving confirmations, but let me just wait for 1 minute. So please go through all the points. I am receiving confirmations that yes, sir, we have understood. Closing capital employed minus half of current year profit. When we have to use is when we don't have any information for this opening capital employed. If you don't have any information for this opening capital employed, you have to do this formula. Okay, you will understand. While looking at the question, you have to understand, sir, which I have to use. Okay, don't worry guys, slowly you will understand. No need to worry. Okay, fine. So with this, our future maintainable profits ka calculation we have understood. Capital employed calculation also we have understood. So generally speaking, give the first preference to average capital employed only. Sir, but if the question asks you to do otherwise, just trust the question. If nothing is mentioned, please follow average capital employed, because that is the more correct method, I can say. Fine. Methods of valuation of goodwill. Guys, I have already explained these methods completely in the video. Okay, there we can solve. Then I think there I have explained also the problems also. But quickly, let me just explain the formulas. First formula, average profit method. Average profit method made the formula is goodwill equals to future maintainable profits into number of years of purchase. That's it. You will get goodwill. future maintainable profits into number of years of purchase. While doing average, please take simple average. If the question asks you to calculate weighted average, then instead of simple, take weighted average. Done, sir. Second, super profit. Goodwill equals to super profit into number of years of purchase. Sir, what is the meaning of super profit? Super profit is nothing but future maintainable profits minus normal profits. Important. This they will ask number of times in your examination, this super profit ka method. So remember this point. Super profit method money goodwill equals to super profit into number of years of purchase. Sir, how I will get the super profit? Super profit is nothing but average profit, that is future maintainable profits minus normal profit you have to do. Now comes the logic. Sir, how I will get this normal profit? This normal profit you will get while this because of this average capital employed. Most important. Here you want average capital employed. Sir, here how I will get average capital employed? Opening plus closing by 2 if they have given opening. If they have not given the opening, then we can solve like this. Half minus current year ka PAT. Half minus current year ka PAT. That is also totally fine. That should be multiplied with normal rate of return. Sir, this normal rate of return, though they will give in the question. Oh, this normal rate of return, though they will give in the question. Okay, sir. Then I will get normal profit. This normal profit will be deducted from future maintainable profits so that I will get super profits. This super profit, if you multiply with number of years of purchase, you will get super profit method ka goodwill. This is the most used method which they will give in the examination. Okay, yes sir. Guys, others just go through the formulas, this annuity method and capitalization method. Just go through the formula. I have already explained in the what should I say? I have already explained in the video also completely. So this is not important that much according to me. So what I will be doing is, but anyways, I have already explained. I'm not skipping, guys. I have already explained in another video. So I will definitely recommend you to watch that video. Okay, but for now, these two methods are very, very important. Average profit and super profit method. Okay, so currently my focus is only on these two methods. Sir, what about these two? These two, so please watch the video at least for once. Not that much important, but you should definitely know these two methods. So now I'm not touching these two. Okay, so please confirm if you have understood these two methods right now. Okay, how to calculate super profit method, how to calculate average profit method ka goodwill. Please confirm if you have understood till here. If yes, we will start with the next thing. Okay, very, very important, guys. I have receiving responses. Yes, sir. We have understood these two methods. Fine, guys. Next 10 minutes, we will solve one beautiful question. Okay. Only one student have responded. What about others? Two students, three students. Yes. Okay. Yes. So, guys, with this, we have completed goodwill calculation. With this, we have completed goodwill ka valuation. Guys, remember, if your luck is good, maximum 75%, 75 to 80%, they will ask this goodwill calculation only. So you have no choice, but you have to be completely comfortable while doing this goodwill ka calculation. I repeat, 75 to 80%, they will ask only goodwill. Sir, goodwill, to quickly summarize, we have to do future maintainable profits. Sir, how I will get future maintainable profits? Take the past year ka profits and just do 4 adjustments. Prior period items, non-recurring items, non-operating items, adjustments, extraordinary items. These 4 items you will be adjusting. You will get adjusted profit before tax. make future adjustments. Future tax also we have to adjust, then you will get future maintainable profit after tax. From that, you have to definitely deduct one thing, preference dividend. Then you will get future maintainable profits. Done. Capital employed. Take fair value of all assets, fair value of all liabilities. While taking fair value of all assets, ignore 3 assets. Goodwill, if they have given in the balance sheet, ignore. Non-trade investments, if they have given in the balance sheet, ignore. Fictitious assets, if they have given, ignore. Like this, you have to remember. Okay, that part is also done. Which part, sir? Capital employed ka point is also done. But we have to always give the preference to the average capital employed. Most important, guys. And while calculating capital employed also, if any preference share capital they have given, that also we have to deduct, guys. Because the logic I have explained, you have to always calculate that from the perspective of what, sir? From the perspective of equity shareholders. Okay. Yes, sir. So the first part is done. First part is done. Now let us quickly move to the valuation of equity shares. We will solve one question, but wait. Okay. Valuation of equity shares. Try to understand. Sir, we have totally 3 methods for the purpose of this valuation of equity shares. What 74, by the way? What is that 74, Akshay? I am not getting. Okay, we'll see this. Valuation of equity shares. Sir, method number 1 is intrinsic value of the share. Method number 1, sir, intrinsic value of the share. Now try to understand one thing, guys. Sir, intrinsic value of share. What is the meaning of intrinsic value of the share? Okay. Let me take the same balance sheet here. Let me take the same balance sheet here. Sir, what I will be doing in this intrinsic share ka valuation is very, very simple, guys. You will be taking the net assets of the company. You will be taking the net assets of the entity. From the net assets of the entity, you will be dividing by number of shares. You will be dividing the net assets of the entity divided by number of equity shares. Then you will get value per share. For example, sir, I have calculated the net assets available for equity shareholders. If I deduct this with number of equity shares, then I will get, sir, what you will get, sir, we will get intrinsic value per share. Guys, very, very simple. Just remember the format which I will be explaining. Net assets for equity shares divided by number of equity shares multiplied by, if you do, you will be getting intrinsic value per share. Now try to understand. Sir, while calculating net assets, now, you have to take the first item, closing capital employed, you have to take. What I have to take, sir? First item is you have to take the closing capital employed. Sir, how I will get this closing capital employed? Exactly same figure. How you get? Exactly same figure of what you get in goodwill calculation. Goodwill calculation mein, have you got that goodwill? Have you got the closing capital? Same closing capital ka figure we have to take. But remember one thing. Whatever the goodwill which you have calculated now, either super profits method or average profit method, whatever goodwill you have calculated, you have to add the goodwill here. You have to add the goodwill here, because guys, we are currently calculating the net assets as on the date of valuation of the share. Intrinsic value में, while taking net assets, what is the logic is you have to even add this goodwill ka value also to the closing capital employed, because this goodwill belongs to shareholders. Take the closing capital employed. For that, whatever the goodwill which we have calculated above based on super profits or average profits, please add the value of the goodwill. ठीक है, sir. Only another adjustment. Plus non-trade investments. This also we have to add. If you add this item also, finally you will be getting net assets. Guys, try to understand the reason, then you will understand why we are adding non-trade investments. Yes, sir. Try to understand the logic, sir. For closing capital employed, I will be adding goodwill also, and I will be adding non-trade investments also. Alright, guys, try to understand this time. Don't think from the business perspective. Think from the shareholder perspective. If you are a shareholder, you are, what should I say? You don't care whether you make investments in Geo Limited or whether you make any other investment. They are always worried about the share price of the future. They are always worried about their share price in the future. So even if you make investments in Geo Limited or even if you make investments in stationery business also, both are relevant because I am a shareholder now. If I am a shareholder, I want every single stake in every rupee wherever you are investing. But while calculating goodwill for stationery business, we will be taking only those items which are relevant for the stationery business. Therefore, we have ignored these investments in Geo Limited there while calculating capital employed. But now, since you are a shareholder, since you are thinking from the point of the shareholder, you have to add even these non-trade investments also, because you are worried about your investments. Even if it is 1 rupee which is invested somewhere, you are concerned about that value, because you as a shareholder always wants to claim your share in whatever the rupee, wherever it has invested, you want a share in that. Are you understanding or not? If you understood the logic, excellent. Otherwise, sir, what we have to do, sir? Please tell me from exam perspective. Take the closing capital employed. Take the closing capital employed, which is calculated above. Just add two items. You can mug up these two items. You can mug up these two items, sir. What is the first item, sir? Non-trade investments. Second, goodwill. That's it. Non-trade investments, goodwill. Then you will get net assets available for equity shareholders. Here you have to take closing capital employed, guys. A small change. Here you have to take closing capital employed. Then you will get net assets available for shareholders. So please give me a heads up if you have understood this format or not. Just by heart this format if you are unable to understand the logic. Intrinsic value में net assets for equity shareholders divided by number of equity shares we have to do. Non-trade investments plus goodwill, only these two we have to add, then you will get net assets available for equity shareholders. ठीक है guys, just take 2 minutes. Take 2 minutes and please confirm if you have understood this format or not. Very, very important. Then we will be immediately starting with one problem. Okay. Yes, sir. We will be immediately starting with one beautiful problem. But I want confirmations from you. Understood, understood, understood. What about others? Are you active or not? Guys, I'm keep on saying this repeatedly. If you are quickly responding, I will complete this chapter quickly. Within next 1.5 or 2 hours, we will be completing this valuation of shares and goodwill ka chapter. Okay. Yes, so. Yes. Fine. Alternative treatment, this please ignore. This alternate treatment to please ignore, guys. Okay. next points are there. Those next points, so what I will be doing is I will be directly starting with the help of a question, then I will make you understand the logic. Okay, guys, so quickly come to question number 3. Quickly come to question number 3, guys. Okay. Quickly come to question number 3. Guys, in this chapter though, there are some mistakes which our institute have already made. If those are conceptual mistakes, we will ignore those. Okay, we cannot do anything. But if it is little ambiguity, we can continue that, we can remember that ambiguity and probably we can solve that. But these mistakes, though, conceptual mistakes, if these are conceptual, we can't do anything. Okay, we will be writing whatever we have learned by writing a note so that we will secure a good amount of marks. Okay, yes, sir. So quickly come to this question number 3. Guys, I will be making you small changes. I will be making you guys to make few changes. Those changes though, please do. Okay, sir. Question number 3, please read the question. The following is a bridged balance sheet as on 31st March 2021 pertains to S Limited. Guys, strike off this S Limited. This is not S Limited. This is Glorious Limited. By the way, this question I have exactly copy pasted from the institute. Okay, institute ka question maybe this mistake is there. Fine, sir. Here the balance sheet is Glorious Limited. Change this S Limited as Glorious Limited. Okay, fine, sir. Quickly come to asset side, guys. Asset side. First, they have given goodwill. Sir, we have not seen anything down. Just we have seen this is a goodwill. Okay, sir. So one thing which have to come immediately in your mind, sir, we will be assuming this goodwill as self-generated goodwill and we will ignore this while calculating capital employed. This is the first point which you have to strike immediately, guys. I hope you guys are remembering that point. Yes, sir. Second, other fixed assets, they have given 11,166. Current assets, 2,910. Loans and advances, they have given 933. The total comes to 15,429. Quickly come to assets. First, 180 lakh equity shares of 10 each, fully paid up. 90 lakh equity shares of 10 each, 8 paid up. 150 lakh equity shares of 5 each, fully paid up. They have given some 3 different class of shareholders. First type of class of shareholders are 10 each, fully paid. Second class of shareholders are 10 each, but only 8 paid up. Third class of shares are 5 each, fully paid up. Okay? Yes, sir. Now understand, guys. Secured loans also they have given of 4,500. Secured loans after that, current liabilities also they have given of 1242. Provisions also they have given of 960. And even if you take the total here, I will be getting 15,429. Okay, guys, let us read the question. You are required to calculate for each one of the 3 categories. We are having 3 categories. So they are asking the value of equity share for all the 3 categories. First method, intrinsic value on the basis of book value of all assets and liabilities, including goodwill. Guys, let us follow whatever they have given in the question. First preference though, whatever they have asked you to do in the question, we will be doing that. Okay? Yes, sir. If question where nothing is mentioned, then we will apply whatever learning which we have made. In this question though, they are asking you to calculate intrinsic value on the basis of book values. They are asking you to calculate. But normally we will do fair values. In the question though, there are no fair values which they have mentioned. So first of all, that fair values doing is impossible. But another mistake or ambiguity, okay, we can forget the word ambiguity also here. They have specifically asked you to include the goodwill also. Have you understood or not? Since they have specifically asked you to calculate this goodwill, to include this goodwill, Sir, what we will be doing is we will be including this goodwill also. Sir, if they have not given this word, then this goodwill will never be included. Because it is, we will assume it as a self-generated goodwill. But since they have specifically given you to include goodwill, what we will be doing, sir? We will be including this goodwill. Guys, second point, third point, we will come later. Second point, third point, we will come later. But read this point also. For the year ended 31st March 2021, the company have earned 1371 lakh as profit after tax, and they have given which can be considered to be normal for the company. Average EPS for a fully paid share of 10 in the same industry is 2 rupees. Okay, they have given something. But guys, you have to tell me, sir, in the question though, have they have given anything related to goodwill ka calculation? Have they have given anything related to goodwill ka calculation? I mean, anything about future maintainable profits, anything about, what should I say? Anything about super profits, anything about future maintainable profits, anything about number of years of purchase. In the question, is there any information which you can use to calculate goodwill? Think and answer. Methods we know, average profit, super profits. I think no information is there in order to solve this question for the purpose of goodwill. Please check the question and confirm me, sir. Can we calculate goodwill based on super profits in this question, or can we calculate goodwill based on average profits in this question? The answer is there is no such information which is given in the question. Please check the entire question. You will come to understand that in this question, though, we cannot calculate the value of goodwill. In this question, though, we cannot calculate the value of the goodwill. So that is the reason why here they have asked you to include the goodwill. Okay? Here they have asked you to include in the goodwill. Please go through the question. In this question, we cannot calculate the goodwill. So that is the reason what the question is asking us to do, we will be doing that. Here they have asked you to specifically include the goodwill while calculating intrinsic value of the shares. Okay? I will solve the question. Just a minute. Guys, let us check the answer first of all. Solution I have given to you. In the soft copy though I have mentioned. Yes. Quickly come to this part, guys. Sir, let us calculate intrinsic value of the share. Let us calculate intrinsic value of the shares. Guys, normally speaking, while calculating intrinsic value of the shares, okay, in this question, so let us do normally, and I will explain the second question as to what is the information which is missing in the third question. That you will slowly understand. But first, let us try to solve the question. Sir, the question I have asked us to include the goodwill because I am taking. Otherwise, this goodwill I will not include. But they have not given any fair value, so I will be assuming all the book values as fair values. So, sir, goodwill I have taken, other fixed assets I have taken, current assets also I have taken, loans and advances. These are the assets, and minus provisions, current liabilities, secured loans. Okay. So goodwill, other fixed assets, current assets, loans and advances, secured loans, current liabilities, provisions. As we have discussed, we have to add all assets ka fair values and deduct all liabilities ka fair values. Guys, please confirm is the net assets which they have calculated, which is 8,727. Is it correct or not? Okay, here it is in lakhs. So above I will write rupees in lakhs. So please confirm, is the net asset ka value, is this 8,727 correct or not? ठीक है सर, दिस इज करेक्ट. Yes sir, this is correct. ठीक है सर. Now guys, now listen what I am trying to say. Check in the balance sheet. Check in the balance sheet whether there are any partly paid up shares are there. Just read this first line, second line and third line and you have to tell me, sir, are there any partly paid up shares or not? Please confirm while reading the question in the balance sheet. From the balance sheet, you have to tell me, sir, are there any partly paid up shares or there? The answer is, if you observe, 90 lakh equity shares of 10 each, 8 rupees paid up shares are there, which means these are partly paid up shares. These are partly paid up shares. Okay? Yes. Just remember this part. If in the question, if there are any partly paid up shares, if in the question, if there are any partly paid up shares, remember first part. For the net assets, we have to add the notional value of the call. We have to add the notional value of the call. Sir, what is the meaning of notional value? Notional value means just we have to make them fully paid up. If whatever the partly paid up shares are there, if you make them fully paid up, sir, how much amount they have to bring? Sir, currently they have 8 rupees paid up. So now they have to bring balance 2 rupees paid up also. 90 lakh equity shares are there. So 90 lakh into 2 rupees, if you ask them to bring now, their value will become 180. Guys, listen this part. I have already written a note also to understand this point, but now try to understand. Sir, take the notional value of the call and this will be added to the net assets ka value. Notional value of the call means whatever the partly paid up shares are there, na, let us ask them notionally, which means they will not bring, but let us just make them fully paid up. If they are fully paid up right now, which amount they have to bring, that amount we have to add. Why we are adding, slowly you will understand. Sir, if I add 180, what is my revised revised number of, revised amount of net assets, sir? It is 8,907. Guys, remember this point. If any partly paid up shares are there, first let us make them fully paid by asking them in notional call. Notional baba, they will not bring, but let us just for the example sake think that they have brought the entire 2 lakh, entire 2 rupees. Sir, how many shares? 90 lakh shares into 2, 180 lakh. Have you understood this or not? Your net assets will become 8,907. Guys, I have given a note point also to make you understood this point. Now, Baba, sir, this is my revised net assets ka value. Now you have to calculate number of equity shares because intrinsic value per share will be net assets divided by number of equity shares. Okay, sir? Yes, sir. So my net assets is 8,907. So now I have to calculate number of equity shares. Okay. Now I have to calculate number of equity shares. Now use your brains little bit. Sir, here 180 lakh equity shares of 10 each are there, plus 90 lakh equity shares of 10 each are there, sir. But what I have assumed is, these 8 rupee paid up are now extra 2 rupees also I have collected from them, which means now they are 10 rupees paid up. Now they are also 10 rupees paid up now. Guys, earlier they are 8 rupees paid up, but now I have asked them to bring the 2 rupees also now, which means now I have 90 lakh of 10 rupees each. Now I have 90 lakh shares of 10 rupees each. Guys, please confirm whether you are understanding or not. Very, very basic discussion going on. while calculating number of equity shares. So sir, in my balance sheet there are 180 lakh equity shares of 10 each and the 90 lakh equity shares of, sir, actually they are 8 paid up, but I have asked them to pay 2 rupees also paid up na, which means now in my balance sheet though I have 180 lakh equity shares of 10 each fully paid up, along with them 90 lakh equity shares of 10 each fully paid up wala shares are only I am having. Now comes the last part. Sir, 150 lakh equity shares of 5 each fully paid up. Are Baba, just try to understand. Sir, 180 lakh, 10 each. 90 lakh shares, 10 each. But here, sir, 150 lakh, only 5 is paid up. Guys, I cannot compare them. If I want to compare, either this should be 5 rupees or this should be 10 rupees. Are Baba, if everything is 10 rupee paid up, I can compare all of them. Which means, sir, here, but they are only 5 rupees paid up now. So now you have to make them equivalent number of shares. Sir, what I have to find out, sir? You have to find out equivalent number of shares. Sir, 150 lakh of equity shares of 5 each or 75 lakh of 10 each, both are same, Baba. Sir, I can write like this also. 150 lakh into 5 by 10 if you do, you will get equivalent number of shares. We will get equivalent number of shares. Guys, go through this concept once again. Sir, either I have 150 lakh shares of 5 each or 75 lakh of 10 each, both are same. Both are same. And here I have calculated number of equity shares. Sir, do I have to do like this only? Answer is yes. Because we have to divide the net assets by single number of equity shares. Sir, but everything is of different face values. Different, some is partly paid and some is fully paid. So what we have to do is you just have to follow what I have discussed here. If in the question though different face values are there, we have to do equivalent number of shares. For this also I have written one note. So after solving this question, I will explain that part also. No need to worry at all. Okay. Now 8,907 are the net assets. 345 lakh is the number of equity shares. So can you calculate and confirm and tell me, is the intrinsic value per share, is it 25.82 per share or not? Please confirm. 25.82 per share or not? Please confirm, guys. Guys, you will slowly understand this also. No need to worry at all. Okay, you will understand. Just be a little bit patient. 25.82 per share is the intrinsic value per share. Okay, sir, this is the intrinsic value per the share. Fine, sir. Now, sir, the question have asked you to calculate intrinsic value for each one of the 3 categories. They are asking you to calculate the intrinsic value for each one of the 3 categories. Oh, now try to understand what I am doing. Sir, we have 3 categories. First one, 180 lakh equity shares of 10 each fully paid. 90 lakh equity shares of 10 each, 8 rupees paid up. Second, 150 lakh equity shares of 5 rupees fully paid. Now try to understand. Sir, for fully paid equity shares, this will become my intrinsic value. But sir, 90 lakh equity shares of 10, 8 rupees paid up is there now, which means 2 rupees to unpaid. 2 rupees to unpaid now, guys. Again, I am saying this, so they will not bring you actual number of shares. They will not bring you this 90 lakh into 2 rupees. This is notional call. Since this is notional call, here from this intrinsic value, I will subtract the 2 rupees. So I will get 23.82 per share. I will get 23.82 per share And here, Baba, if you observe, sir, if my shares are 75 lakhs, which means 10 each, but now my shares are 150 lakh of each fully paid up, sir. But if you observe, sir, this 25.82 is the share value if my share is 10 rupee paid. But now, sir, my share is only 5 rupees paid up. Or I can say like this, sir, this 25.82 value is for 10 rupee paid up. But now my paid up is only 5 rupees, which means my intrinsic value is exactly 50%. So 25.82 into 5 by 10, if you do, you will be getting 12.9191 per share. 12.91 per share. ठीक है guys, 10 each fully paid up 25.82, 10 each 8 paid up 23.82, 5 each fully paid up 12.91. Just be little patient, just be little patient. Now come to the notes what we have written down. Come to the notes as to what we have written here above. After completion of this I have written. So quickly check this part. Most important, in case of partly paid up equity shares, notional call is added to make them fully paid up while calculating net assets available for equity shareholders. While calculating value of such partly paid, such call will be deducted. Sir, such call will be deducted even here. Okay, come to the solution what I have written. Sir, first, with net assets, I have added this notional value of the call. Next, sir, I have deducted from the intrinsic value per share का calculation में. ठीक है? Yes, so this is the exact point which I have written here. While calculating value of such partly paid up share, such call will be deducted. Such call will be deducted. So, ठीक है, sir. Now comes the third point, Baba. If different classes of shares, for example, multiple fair values are given, we have to calculate equivalent number of shares. We have to calculate equivalent number of shares. Equivalent number of shares means, I think we have already know this calculation of equivalent number in process costing in your CMA Inter. Equivalent number of finished goods we will be calculating. Okay, guys, I hope you guys have understood this part. So please check this. And confirm if you have understood this intrinsic value per share ka calculation or not. Guys, please go through this. You have to understand this. You have to understand the number of equity shares ka part, and then you will understand this thing. Okay, take 1 minute of time and go through this because this is very, very important. I am expecting this type of question will be coming in your examination. Sir, since in the question partly paid up shares are there, I have added the notional value of the call. Okay, guys, just to go through the question, you will exactly understood. Guys, please go through the question for 1 minute, then I will explain the next part. Question, any partly paid up shares are there, we have to add the notional value to the net assets. And if in the question multiple face values are there, we have to add, we have to, what should I say, we have to calculate equivalent number of shares. So please confirm with that. Okay. So with this, we have completed first approach in the question. Guys, forget about the answer. The answer they have given wrong. So I'm not checking that. Okay. In this chapter, though, please check whatever the notes which I have shared. That is only the most important part. So this is how you got the intrinsic value. Again, I am repeating. In case of partly paid up shares, please add the notional value of the call to make them fully paid up. Okay. Now, if multiple face values are there, please add this equivalent number of shares also. We have to add this equivalent number of shares also. Okay. Yes. Now comes the second part. Okay. So check this part, guys. Here in the first question, though, they are asking you to calculate intrinsic value of the share. But sir, second question may they are asking you to calculate value per share on the basis of dividend yield. On the basis of dividend yield. This, if you want to understand, let us go back to the notes where we have written. Okay, so quickly come to the second part. Sir, first type of valuation is intrinsic value valuation. Okay, we have understood it should be calculated by net assets of equity shares divided by number of equity shares. Yes, sir, we have understood. Now you have to observe second method, which is called as yield basis valuation. Sir, what is the meaning of yield basis valuation? Yield basis means we have two methods. Sir, first dividend yield method, second earnings yield method. Dividend yield method, earnings yield method. Simple. First, Baba, if you observe the dividend yield, sir, what is the formula? Sir, value per share equals to dividend per share divided by normal rate of return into 100. Guys, by heart this formula. You just have to calculate the dividend per share and you have to divide this dividend per share divided by normal rate of return into 100. Okay? Yes. Dividend per share divided by normal rate of return into 100, then you will get the value of the share. If you want to check here, normal rate of the dividend, they are saying it is 15%. Whereas Glorious Limited have been paying 20% dividend for the last 4 years and it is expected to maintain in the future years. They have given the dividend rate, sir. Sir, how much is dividend rate? 20% is the dividend rate. Always remember, Baba, this dividend ka rate jo hai na, you have to always apply this dividend ka rate on paid up value. On what value, sir? paid up value you have to apply this dividend ka rate. At this point you have already known in your SFM. Sir, this dividend ka value to I will be always applying in paid up value. So now come to the solution. Here, dividend yield. Dividend per share means, sir, if it is equity share of 10 rupees each fully paid up, 10 into 20% will become a dividend. 10 each, 8 paid, 8 into 20%, which means 1.6 per share. Guys, I am calculating dividend per share. Since there are three categories of shares which are there, I have to calculate a dividend per share based on all the three. Third one, sir, 5 each fully paid up, sir. Here I will be getting 1 rupee per share. Arey Baba, formula is what? Dividend per share divided by normal rate of return. I am calculating dividend per share here. Sir, how you will get? Just multiply the paid up value into dividend rate which they have given in the question. And here I have calculated the value of the share. Normal rate they have given this. So sir, first type of equity shares, so dividend per share is 2 rupees. So if I divide this 2 by 15%, then I will get 13.33 per share. Similarly, 1.6 upon 15%, I will get 10.67 per share. And last May, 1 by 15%, I will get 6.67 per share. Please take a 1 minute and try to understand whether you have understood this dividend yield ka valuation or not. Formula, guys, completely formula based. The formula is dividend per share divided by normal rate of return. Okay? In order to calculate the dividend per share, they have given in the question that 20% dividend is the payout. So this payout I will be applying on the paid up value. So which I have got dividend per share as this. So please check and confirm whether you have understood this dividend yield ka valuation or not. So are you understanding or not, guys? Please check me. Please confirm if you have understood this dividend based valuation or not. If yes, let us move to the next part. Excellent, Bharat. Very good, Rubel. Brilliant. Now, guys, sir, we have unfortunately one more approach also, which is pending. And sir, that approach is That approach is earnings based approach. So this also we have written theory first. So let us quickly complete the theory and then we'll come to the question. So sir, here Baba. Sir, earnings yield में the formula will be EPS divided by normal rate of return into 100. अरे बाबा, dividend per share में sir the formula is dividend per share divided by normal rate of return. But earnings yield में the formula sir EPS upon normal rate of return into 100. Arey Baba, this formula EPS, you guys have number of times you have solved it now in your SFM. EPS, how I will get, sir? Sir, profit available to equity shareholders divided by number of equity shares. If you do, you will be getting earning per share. You will be getting earning per share. Are you understanding or not? Yes, sir, we are understanding this part. Arey Baba, earning per share divided by normal rate of return into 100. Fine, sir. Here, if you observe, sir, check this part. If multiple face values are different paid up values are given in the question. If there are multiple face values or different paid up values which are given in the question, you have to calculate the dividend per share or earning per share based on rupee per rupee of capital. Okay, let us understand with the help of an example. Then you will exactly understood what I have written there. Observe this. So in the question though, they have given total earnings are 1371 lakh. How much, sir? 1371 lakh is the total profit. But sir, I have to divide this by number of shares. Arey Baba, but if you observe, each of the shares are not having same paid up value. Since these are different paid up value, I cannot divide this with 180 plus 90 plus 150. I cannot divide by that value. Okay, so we have to calculate something called as, see, this 1371 lakh is the total profit. Let us just calculate what is my total share capital. Sir, my total share capital is 1800 plus 720 plus 750. If I add all these three items, and if I divide that by 1371 lakh, I will be getting 0.419 per 1 rupee of capital. Sir, if I paid 1 rupee, how much is my earning, sir? Your earning is 0.419. Try to understand why this calculation I have did. Sir, all the shares are not what should I say? Not equally paid up. They are of different paid up values. So that is the reason why we have to calculate. Sir, if I paid 1 rupee capital, my earning would be 0.419. Now try to understand. Sir, question me 10 rupees each fully paid up shares are also there, which means my earnings will be 10 into 0.419. My EPS would be 4.19 per share. Second category, sir, if I paid only 8 rupees, my earning would have been 3.352 per share. Sir, third category, though, if you paid 5 rupees only, your earning per share should be 2.095. Your share would be 2.095. Okay, sir, we have understood this part. First, I have calculated, sir, if I have contributed only 1 rupee, how much capital, how much earning would I have get, that I have calculated. 10 each fully paid, this will be my EPS. 10 each 8 rupee paid, this will be my EPS. And 5 each fully paid, so this will be my EPS. Okay, sir, we have understood the part. Now, sir, here they have given average EPS for a 10 rupee fully paid share is 2 rupees. Sir, this is nothing but EPS ka ratio they have given. Sir, how much is this EPS ka ratio? This EPS ka ratio is 20%, Baba. If the share is 10 rupees, they are saying 2 rupee will be the industry ka value, which means this is my normal ratio, sir. So, sir, 2 by 10, if I do, I will be getting 20%. 2 by 10 if you do, I will be getting 20%. So simple formula, babas, or whatever. There we have used the formula dividend per share divided by normal rate of return. So here I have to do earning per share divided by normal rate of return. Earning per share I have calculated above divided by normal rate of return. If I do, I will be getting the formula like this. Okay. So this is my value of share based on intrinsic value. Okay. So please go through this EPS ka valuation, and I think this part is also nicely understood to you. So please confirm, take 2 minutes of time and go through this, and please confirm if it is understood or not. Guys, are you understanding this format or not? This question though very important. That's why I'm going a little bit slowly. And even this is the first question. So that is the reason I'm going too much slowly. Okay. You guys have to understood the complete question, because in this question though, if you observe, multiple adjustments they have asked. Sir, multiple adjustments as in, sir, here they have asked about dividend yield also. Here they have asked about earnings yield also. And sir, multiple face values are also there, 10 each, 5 each. And partly paid up shares are also there. So this makes the question super important. I am saying this question will come in your examination. Okay. So what I wanted to do is, I want to stop the today's session right now. Okay, so now I want to stop. You have to completely watch the video once again. Otherwise, you will not understand. Okay, otherwise, you will never understand. I can continue discussing other questions also, but the thing is, if I do, it will become a lot of heavier in your mind. So first, I want to stop the video till here. Okay, I wanted to stop the video till here. You have to definitely watch the video once again and check this question once again. Okay, most of the adjustments are there in this question. Okay. So that's it for today, guys. I will let you know the timing of next class in the WhatsApp group, but you have to definitely watch this. If you still don't watch the video which I have uploaded in YouTube regarding the valuation of goodwill and all, okay, how to calculate super profit goodwill, how to calculate average profit goodwill and all, I have solved it separately. Okay, you can check that part. But this is very important discussion. Sir, what to do if partly paid up shares are there? What to do if multiple face values are given and all? Complete package ka question this is. So most important. Okay, so please watch this definitely. Only after watching this you will be understanding the next class ka questions. Next class may I think we have further what should I say, 2 hours ka discussion. Sir, what you are going to solve, super important. This question number 4 also I will be solving, and question number 4 also I will be solving, and probably this question number 5 I will solve, guys. 5 also I will solve. Okay, 5, 6 I will solve. Okay, yes sir, 4, 5 and 6 I will explain, guys, because these 3 questions are super important. Okay, so I want to stop today's session till here. So please watch this definitely, and then we will meet in the next class. Update regarding the timing of the next class I will be sharing in the WhatsApp group. Okay, that's it, guys. Thank you so much for today's class. So I just wanted to stop. So, hi guys, can you please confirm is the audio and video clear? Good morning, Renika. Please confirm if it is fine. Let's get quickly started. Let's just wait for one more minute so that other students also will join, and then we'll be immediately starting with the things. Our objective is to complete this Goodwill ka chapter within next maximum 2 hours. Within next 2 hours, we are going to complete this. Okay, fine. Very good, Banu. Good morning. Just wait for 30 seconds and then we'll get started. Okay. So, yes, sir, we'll be immediately getting started. Within just the 2 minutes, let us quickly revise what we have discussed in the last class, and we will complete with balance problems. So quickly check this, guys. First of all, we have understood for the purpose of valuation of goodwill, we have to calculate two things basically. The first thing being future profits, second thing being capital employed. Okay? Yes, sir. First is how to calculate this future maintainable profits. Always we have understood that we have to calculate from equity shareholders point of view. That is the first point which we have to follow. Second thing is, sir, we will always start with profit before tax only. Even if the question have given profit after tax, we will still start with profit before tax only. Okay? Yes, sir. Plus or minus, we have to make 4 adjustments, sir. Sir, what are the 4 adjustments? First one, prior period ka errors, if there are any. Extraordinary items, non-trade investments related incomes, if they are included in your P&L account, we have to eliminate these points also. And last May, if any non-recurring items are there, we will be going ahead and eliminating these items as well. So after doing the adjustments for all these 4 items, we will be getting something which is called as adjusted PBT of the past year's cut data. Then we will be taking adjusted profits before tax ka average we will be taking. Sir, what average we have to take if nothing is given in the question? If nothing is given in the question, we will be going ahead and doing simple average, but we will be doing weighted average specifically only when there is asked in the question. If the question have not mentioned, we will be aram se following weighted average ka thing. Okay? Yes, sir. This average adjusted profit Kobe, we will be making few adjustments. Sir, what are the adjustments? First one, money depreciation on revalued assets, if there are any, we will be making adjustment for that. Minus taxes based on future rates also. Future tax rate, if they have given specifically in the question, we will be adjusting the future tax rate as well. Then we will be getting adjusted PAT. Then we will be getting adjusted PAT. From this adjusted PAT also, we will be deducting preference dividend always, guys. This you have to remember, because preference shareholders are also considered as outsiders for the perspective of equity shareholders. Therefore, even if any preference dividend which is there in the question, we will be always deducting that preference dividend. Okay? Yes, sir. Then we will be getting future maintainable profits. Next, we also understood how to calculate the capital employed as well. Sir, capital employed also always we have to find out from equity shareholders point of view. But while doing capital employed calculation, please be mindful of the 4 assets kind of a thing. Sir, first, sir, we will be doing fair value of all assets. All assets we will be taking. From that, we will be deducting fair value of all the liabilities, whether the same are recorded or not recorded. Okay? Yes, sir. Then we will be getting some value. Now from that value, always deduct this preference share capital also to get the capital employed. Okay? Yes, sir. But listen, if they have given goodwill in the balance sheet, it will be excluded always. We will be assuming it as a self-generated goodwill. But if they specifically mention to include the goodwill, then we will do that. If they specifically mention that the goodwill is purchased goodwill, then also we will take in capital employed. Next part, sir, non-trade investments also will be excluded from the capital employed. Sir, in the question they have only given the word investments. Then we will be assuming that those investments are non-trade investments only. Next is, sir, any fictitious assets, if they have given in the question, those fictitious assets should be ignored. Okay? Yes, sir. Then book values, if nothing they have given, if no fair values they have given, then what we will be doing is we will be assuming the book values as fair values only. Always we will be giving importance to something which is called as average capital employed rather than closing capital employed. Sir, how we will be getting average capital employed ka total, sir? Opening capital employed plus closing capital employed divided by 2. Sir, opening capital, if they have given, we will use. Otherwise, what we have to do, if opening capital is not given, sir, then we have to take the closing capital employed minus half of the part we have to do, then we will be getting average capital employed. Okay, sir? Yes, sir. This other method, please ignore, guys. No need to look into that. Methods of valuation of the goodwill. I think we have known about this average profit, super profit, most important, this annuity method, capitalization method also. Please refer to the video which I have already shared in the WhatsApp group. Okay? Yes, so then comes valuation of equity shares. First method, super important method, and it is also known as intrinsic value of the shares. Sir, how I will be getting the intrinsic value of the shares? This intrinsic value of the share is also called as asset backing approach. Intrinsic value of the share is also called as what, sir? Asset backing approach. So even in the question, if they have asked you to calculate intrinsic value using asset backing approach, still we have to follow intrinsic value only. Sir, what is the formula? We have to just calculate the net assets for the equity shareholders. Net assets for the equity shareholders, and that should be divided by number of equity shares. So do we have to calculate the net assets from the starting itself? Answer is no. We have already calculated the capital employed closing value. Please take that value, because in closing capital employed also we will be taking fair value of all assets, and we will be doing fair value of all liabilities. The same applies for this net assets also, but two adjustments we have to do additionally. First one, sir, goodwill. Whatever the goodwill which we have calculated above, that goodwill, either it can be of goodwill using super profits, or it can be of goodwill using, what should I say, normal profits, anything, Baba. That value you have to take, that should be added. And another thing is non-trade investments also should be added, because specifically we have excluded these non-trade investments while calculating capital employed. But for net assets calculation, you have to add this item also. Simply speaking, remember these two adjustments that will be added to the closing capital employed. Then we will get net assets available for equity shareholders. Okay, sir? Yes, sir. Alternative part, ignore, guys. No need to at all. First note, we have already understood. Preference share capital will always be excluded while calculating capital employed, because it will be calculated from equity shareholders point of view. This I have already explained number of times. However, it is a financial liability as per IndAS 109. This also we have understood. Okay? Yes, sir. Then comes second point, Baba. Sir, super important. In case of partly paid up shares, in case of partly paid equity shares, what they are asking you to do is, sir, whatever the notional value which is there, that notional value will be added to make them fully paid while calculating net assets. Important. Then while calculating intrinsic value of such share, such unpaid part will be deducted. If you do not understanding, please by heart this part, because partly paid up shares, so there are high chances that they are going to give in the examination. I have explained the logic. Yesterday we have solved a beautiful problem also, so that the things will be clarified. Okay, sir? Yes, sir. Next. Third point. Sir, if different classes of shares, which means with multiple face values, if they are given, then we will be calculating equivalent number of shares, and then we will be doing the valuation proportionately. I think this also we have understood. Okay, yes, sir. Sir, assume 10 rupees shares are also there, 5 rupees shares are also there. Then we have to calculate equivalent number of shares. This also we have understood. And later that intrinsic value also will be calculated proportionately. Okay, yes, sir. We have understood the concept. Next, sir, yield basis valuation. What is the next one, sir? Yield basis valuation. We have two methods of yield basis. First one is dividend yield. Second one is earnings yield approach. Simple formulas, guys. Dividend yield means, sir, dividend yield means value per share equals to DPS, that is dividend per share divided by normal rate of return into 100. Formula we have to by heart. In SFM we already have learned the logic for this. What is the formula for dividend yield, sir? Dividend per share divided by normal rate of return into 100. Okay, so sir, what is earnings yield ka formula? Earnings yield is very simple. EPS divided by normal rate of return into 100. EPS divided by normal rate of return into 100. Okay, yes sir. So that's it guys. I think we have already revised it nicely. So now what we'll be doing is quickly come to question number 5 guys. Take your calculators in hand, because this question is going to be a little bit interesting. So let us solve this question as quickly as possible. Okay, little bit interesting. Question number 5. The solution I have already provided in the running notes. So let me just open quickly the fifth solution. Okay, guys, as I have said, institute have made some mistakes in this chapter. Okay, so what we'll be doing is, those are conceptual mistakes, those are not ambiguous. So we cannot commit those conceptual mistakes in your examination. So what we'll be doing is, we will be correcting institute come mistakes, okay, by writing a note. Okay, so whatever we have discussed in the class, the same you are going to copy in the examination. Okay, sir? Yes. Quickly read this question number 5. Guys, be very careful. The moment I ask the question, you have to tell me, sir, what should be the treatment? Because all the items so you already have known. This is also, once again, I am saying, complete study material ka question. So I have exactly copy pasted as it is to let you understand what exactly is the question is. Okay? Yes, sir. So quickly check the question, guys. Sir, first one, so they have given 1 lakh equity shares of 10 each. Next, sir, they have given 10,000 into 12% preference shares of 100 each. So the capital is how much, sir? 10 lakh is the capital. 10,000 shares into 100 each. Okay, so guys, here if you observe, we already know that, sir, while calculating capital employed, so we will be definitely deducting this preference share capital. And while calculating future maintainable profits also, we have to exclude this preference dividend. While reading this, you have to understand this point, because while calculating future maintainable profits also, we have to calculate from equity shareholders point of view. And even capital employed also should be calculated from equity shareholders point of view. So while doing FMP also, it should be deducted, preference dividend wala point. And while calculating capital employed also, preference share capital have to be deducted. I hope this point is clear to you. Yes, sir. Next one, guys, 15% debentures. Guys, this 15% debentures is an outside liability ka part. Okay, sir. Creditors also they have given. Come to asset side, guys. They have given preliminary expenses. Quickly, I am expecting an answer, sir, whether we will include these preliminary expenses in the capital employed or not. Just 5 to 10 seconds, may I want answer whether this preliminary expenses be included in calculation of capital assets, or do we have to ignore? Please tell me fast. Preliminary expenses, what we have to do? Waiting for your answers. Ignore. Brilliant. That's correct. That is how your understanding have to be. Very good, Manohar. Very good, Pratiksha. Super, Suchitra. Super. Brilliant. Very good, Bharat. That's correct. So next. The goodwill they have given. And they have given 15 lakh rupees. Sir, I have already said that whatever the goodwill which they have given in the balance sheet, we will be treating that goodwill as self-generated goodwill, and the treatment is, we have to ignore this goodwill. Are you striking this mind? I mean, matlab, is this point striking in your mind or not? This goodwill also, sir, we have to ignore, because it is a self-generated point. Okay? I hope you guys are recollecting this point. Then Baba. See, a small mistake in the question. This mistake is there even in the study material also. Sir, what is the mistake, sir? Understand. They have given buildings, plant. Investment in 10% stock. Okay? Next, they have given stock in trade, debtors, cash. Like this they have given, but you have to understand, sir, this buildings and plant both are not one item. You can write the right side of the question, sir, this 10 lakh is only building. This 10 lakh is only building, and this plant have to be coming here actually, which means the plant will be 4,80,000. I have written like this. Okay. Yes, sir. Sir, next they have given, sir, some investment in 10% stock. It is 6 lakh rupees. Normal stock in trade is 4 lakh. Debtors are 2 lakh. Cash is 1 lakh. Debtors is 2,20,000 and cash is 1 lakh. Simple, just to change the figures. Building ka figure is 10 lakh. Plant ka figure is 4,80,000 and the stock investment in 10% ka stock. See, they have given like this. Investment in 10% stock they have given. Another day, again they have given one stock. Okay, so please correct. Investment in 10% stock is 6 lakh. Plant 480, buildings 10 lakh. Okay, please correct this. We'll be giving just 30 seconds. So please correct, then we can get started with the balance part. Okay, yes sir, I hope you have corrected. Now come to the part. Sir, they have given nominal value of the investment is how much, sir? 5 lakh rupees, and its market value is 5,20,000 rupees. Sir, they have given nominal value of the investments. Sir, they have given the word only investments. Now you guys will tell me, sir, what we have to do this investments? Sir, do we have to assume these investments as non-trade investments, or do we have to assume these investments as trade investments? 10 seconds, guys. You have to tell me whether it is non-trade investments, NTI, or trade investments. They have just used the word no investment only. They have used it. So quickly tell me within 5 seconds whether it is non-trade investments or trade investments. If you have identified whether this is non-trade or trade, our answer is going to be very easier. Okay? Yes, sir. We have understood. Waiting for your answer. Brilliant. It is going to be a non-trade investments. Sir, we have already know that if there is any non-trade investment which is given in the question, we will be excluding this non-trade investments while calculating capital employed. Sir, also, if there is any income from such non-trade investments which is included in your PL account, even that income also should be deducted. Okay, that is the point which I have been repeating from number of times. So let us keep the point in the mind. Okay, yes sir, we have understood. And they have given following assets are revalued. Building ka revalued amount they have given, sir. Plant ka revalued amount also they have given. Stock in trade ka revalued also they have given, and debtors ka revalued also revalued amount also they have given. Okay, yes sir, we have understood the point. Now comes the next part, guys. Average profit before tax of the company is 12 lakh rupees. Sir, this is what, sir, average PBT they have already given, guys. Sir, what is the meaning of average PBT? Average PBT means the past year's ka average. Generally, we have to take by making some adjustments to the past year ka profits. But in the question, though, they have already given the average profit before the tax, sir. How much it is? 12 lakh rupees. Okay, yes, sir. And 12.5% of the profit is transferred to general reserve. Oh, sir. 12.5% of the profit is transferred to general reserve, and they are also saying, sir, rate of taxation being 50%. Sir, what is the rate of taxation? Rate of taxation being 50%. Okay, sir. Second point, Baba. Normal dividend expected on equity shares is 8%. Normal dividend expected on equity shares is 8%. Sir, they have given dividend ka normal rate. They have given what, sir? They have given dividend ka normal rate. Guys, by reading the question till here, since they have given the normal dividend on equity shares, I am getting a feeling that I have to do the valuation. I have to do the yield basis ka valuation, which is dividend valuation, which is dividend yield ka valuation I have to do in this case, is the feeling which I am getting because they have given the normal dividend ka rate. Okay, sir, we have understood the point. Next, going further, while fair return on closing capital employed is 10%. Oh, they have given fair return on closing capital employed is 10%. Guys, you have to understand the thing. Sir, super profit का formula is what, sir? Super profit का formula is average profit minus नॉर्मल प्रॉफिट. सुपर प्रॉफिट का फॉर्मूला is average profit minus normal profit. So this average profit though is nothing but future maintainable profit. Sir, this normal profit though how we will get, sir? This normal profit though we will get like this, guys. Normal rate of return into what I have said is average capital employed you have to take. Correct, guys? Generally, we have to take average capital employed. Sir, but in the question they have given fair return on closing capital employed is 10%. Guys, always give the first importance to the question. If this word they have not given, then we have to take average capital employed. I have already said that always we have to give the preference to average capital employed only. But if the question itself is specifically ask you to do fair return on closing capital employed, then what we will be doing, Baba? We will be aram se taking the closing capital employed. Guys, are you understanding the question or not? Sir, in this question, I have to do the valuation as per intrinsic value also, because the question have given data as per intrinsic value approach, and also they have given on the basis of dividend yield also. Sir, one point I have to take care, sir. You should not calculate average capital employed. You have to only calculate closing capital employed. Arey Baba, are you getting the point or not? Please understand. Please give me a confirmation. Okay, here one thing. Goodwill may be valued at 3 years ka purchase of super profits. Oh, they have given goodwill may be valued at 3 years purchase of super profits. Guys, here in this question, so you have to also calculate the goodwill. I think you are understanding. In this question, though, sir, we have to also calculate the goodwill. Please give me a confirmation if you have got the basic understanding of the question. Complete understanding you will get once we solve the question, but at least basics are understanding. I hope you guys have got. Sir, in this question, though, ultimately you have to calculate the value of the equity share. Okay, sir. Guys, let us prepare some rough sort of working. Try to understand what I'm doing. Okay? Yes, sir. Sir, first one, though. In this question, they are asking you to find out the value per equity share. Sir, how we will get this value per share? Sir, value per share, so you will get like this. So first we have to calculate net assets available for equity shareholders. And that should be divided by number of equity shares. Guys, you have to get this approach in your mind. Okay? Yes, sir. Sir, how I have to get this net assets for equity shareholders? Arey Baba, this net assets, so first of all, you have to calculate the capital employed. For this capital employed, you have to add goodwill. Oh, for this goodwill, I have to even add non-trade investments. If I add these three items, then I will get the net assets for equity shareholders. Okay, sir. Sir, this capital employed, though, I know that while calculating goodwill, I will anyways find out the capital employed. Okay, sir. Sir, this goodwill jo hai na, this goodwill, though, I have to value using super profits method. Sir, how I get this goodwill? Arey Baba, very simple. Sir, goodwill you will get. So first of all, you have to calculate the future maintainable profits and you have to calculate capital employed. Sir, this capital employed and this capital employed both are going to be same, Baba. Which means you have to clear your mind. Sir, in this question, though, I will be finding out the first working note. Future maintainable profits I have to find. Second working note, capital employed also I have to find. Third working note, net assets available for equity shareholders also I have to find. Okay, I think you guys have got a basic idea of how we are going to approach this kind of a question. So quickly check this part. Come to the solution, guys. Come to the solution. Question number 5. Okay, so we already know that calculation of future maintainable profits and profit available to equity shareholders. Okay, yes, sir. Sir, first we have to start our calculation with profit before tax. I have already said that point. Okay, sir. Profit before tax is how much, sir? 12 lakh rupees, sir. That they have given directly in the question. Profit before tax, 12 lakh rupees. ठीक है सर, प्रॉफिट बिफोर टैक्स is 12 lakh rupees sir. Fine baba. Guys, in this question though, we have to make only one adjustment, because if you read the entire question, there is no prior period errors. There are no extraordinary items. There are no non-recurring items also. Sir, but one item is there, sir. What is that item, sir? Non-trade investment is there. Oh, non-trade investment of how much, sir? 6 lakh is there. Are Baba, but I think you already have know this point from your SFM ka knowledge. Sir, interest income or dividend income will always be applied on face value. That is nominal value. Sir, only on nominal value, I will be getting the interest ka portion. Sir, 5 lakh is the nominal value of the investment, and in the question though they have given 10% ka stock. Oh, so the stock is 10%, nominal value is 5 lakh rupees. So if you calculate income from non-trade investments, you will get this 50,000 rupees. 5 lakh into 10%. I hope you have understood this point. Then I will get adjusted average profit before tax. If you deduct this, then you will get 11 lakh 50,000. Then you will get 11 lakh 50,000. Sir, minus tax at 50% is how much, sir? 5 lakh 75,000 is the 50% tax. So, sir, I will be getting 5 lakh 75,000. This is my profit after tax. This is my profit after tax. But I have been always saying this number of times while calculating future maintainable profits. So, preference dividend should be always deducted. So 10 lakh into 20%, sorry, 12% in the question they have given. The 12% is the preference dividend and 10,000 shares. So 10 lakh into 12% if you do, you will be getting 1 lakh 20,000. Then I got future maintainable profit as 4 lakh 55,000. 4 lakh 55,000 is my future maintainable profit, sir. Okay, sir. Sir, but in the question they have also given that, sir, 12.5% of the profit is transferred to general reserves. Okay, sir. Sir, this amount is not completely available for equity shareholders. So, see, normally in all the questions, our solution ends still here. But here we have to do one more adjustment also. The reason you will understand shortly. Okay, just be a little bit patient, you will understand the meaning. Amount to transfer to general reserve is how much, sir? So 455,000 into 12.5%. That is 56,875. So now I got profit available to equity shareholders. That is 3,98,125. Take 1 minute of time and go through this calculation and just give me a confirmation if you have understood the entire calculation. Just a moment. Please check the entire calculation and give me a confirmation if you have understood the point. Okay, basics are calculation. This is just like a basic income statement thing. So our profit available to equity shareholders is this much, 398,125. Take 1 minute and please give me a confirmation if you guys have understood. Quickly, I want confirmation. Okay. Yes, sir. Sir, I hope you guys have confirmed. So now what we'll be doing is, sir, now let us calculate the capital employed quickly. So capital employed quickly. Sir, how we have to calculate the capital employed? Aram se remember the point. fair value of all assets we have to take. From that fair value, we have to deduct the fair value of all the liabilities. But while taking fair value of assets, please be careful of three assets. First, goodwill, 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 goodwill. We will be assuming this goodwill as a self-generated goodwill. Ignore. Second, preliminary expenses, fictitious assets also ignore. Third, non-trade investments also should be ignored. So quickly check the balance sheet. And sir, they have given the fair value of few items. Buildings we will take 32 lakh. Plant also we will take 18 lakh. Stock in trade also we will take 450. Debtors also we will take 3,60,000. Okay, sir? Yes, sir. Sir, will be taking this investment? Answer is no, Baba, no, because this is a non-trade investment. So we will be ignoring this. Sir, this preliminary expenses also ignore. Goodwill also ignore, guys. But sir, cash also we have to take. Cash also we have to take. Okay? Yes, sir. So I have taken building का value, plant का value, stock का value, debtors, cash. Minus fair value of all liabilities you have to take. ठीक है sir? If I take fair value of all the liabilities, माने 15% का debentures is there, creditors is also there, so 10 lakh and 8 lakh you will take. And one more important thing, Baba, preference shares capital also should be definitely taken. Please don't forget this part. Which means this 10 lakh rupees also should be deducted while calculating the capital employed. So preference share capital also, if I deducted, then my closing capital employed is 31 lakh. My closing capital employed is how much, sir? 31 lakh, Baba. Sir, next what we have to calculate, sir? Next you have to calculate the goodwill using super profit method. Sir, how I will get the super profit method ka goodwill, sir? Very simple. Future maintainable profits minus normal profit. Sir, my future maintainable profit to 4,55,000. Sir, have you got that? 4,55,000 to future maintainable profits. Sir, minus normal profit to how I will get, sir? Arey Baba, here comes the logic. Normally, we will be taking closing capital employed into normal rate of return. Okay, sir. But in the question, though, they have specifically asked you to take closing capital employed cut return they have given as 10%. So don't use your brains. Since the question have given you to take specifically the closing capital employed. Okay, sir. Our job is very much simple. Closing capital employed cut 10% only I will be taking. My normal profit to 3,11,000 hai. So then my super profit, if I deduct this figure, I will get 144,000 into number of years of purchase, also given in the question. 3 years purchase. Number of years of purchase to 3, so my goodwill will be 432,000. 432,000. Guys, again speaking, just 1 minute, please go through the entire closing capital ka employed ka calculation and this goodwill ka calculation also, and please give me a confirmation if you have understood. Okay, 1 minute of time, please go through this entire calculation. I want confirmations. Please, please, please be faster. If you are faster, let us complete this chapter faster. Clear. Clear. Very good, Manohar. What about others? Others. Last 10 seconds. Please give me confirmation. Clear. Clear. Thank you so much. Now, sir, let us do intrinsic value per share ka calculation. Very good, Bharat. Very good, Pratiksha. Very good, Akshaya. Now let us do intrinsic value per share ka calculation. Sir, intrinsic value per share to how I will get? Are baba, net assets you have to take divided by number of equity shares you have to do. Then you will be aram se getting intrinsic value per share. Sir, but how I will get net assets? Are baba, just take the closing capital employed. Sir, what is this closing capital employed? The closing capital employed which you have already calculated. Okay, sir, 31 lakh 10,000 I will do. Sir, but this too you have to add only two items. Goodwill you will add, non-trade investments you will be adding. Sir, goodwill ka value to 432,000 already there. Oh, non-trade investments, check the question and take the fair value. Check the question and take the market value or fair value, both are same. Market value of how much, sir? 520,000 we will be taking. So my net assets will be 40,62,000. ठीक है sir. Divided by number of equity shares, so 1 lakh ही है. Therefore, my intrinsic value per share 40.62. Quickly confirm whether this calculation is fine for you. Quickly confirm, guys. I hope these calculations are fine. Nothing conceptual. Basics are point. I just added net assets to closing cap employed. I have take plus two items I have added. Then I got the net assets divided by number of equity shares. Then I got the intrinsic value per share. Guys, in this question though, there are no partly paid up shares. There are no equivalent number of shares. Therefore, I have directly taken the number of equity shares. I hope this point is clear. I am getting confirmations. Sir, yes, we have understood. Okay, Baba. Sir, our answer is maximum completed. Because if you check, they are asking you to calculate the value of each equity share under fair value method. Sir, what is this fair value method? Are Baba, this fair value method is not a new thing. Sir, what is this fair value method? Just wait, guys. Okay. If you check the notes ka point, sir, fair value of equity shares is very simple, sir. Please calculate intrinsic value and again calculate yield value. Just take the average. Sir, intrinsic value plus yield value ka 2 if I do, I will get a fair value approach. That's it, guys. It is not a new thing. Just do intrinsic value and calculate yield value and dono ka average will give you the fair value. Fair value equals to intrinsic value plus yield value divided by 2. Okay, sir. Come to the question. Where is this question number 5? Okay, sir, this we have completed now. Now I have to calculate dividend yield. Oh, what happened? Now I have to calculate dividend yield based share price. Oh, sir, dividend yield based share price. So how we have to calculate, sir? Are Baba, simple. Dividend per share divided by normal rate of dividend. Dividend per share equals to dividend per share divided by normal rate of dividend. Na. Sir, this DPS, how I will get, sir? This DPS, so you will get by using this formula. Sir, profit available to equity shareholders divided by number of equity shares. Profit available to equity shareholders divided by number of equity shares. Sir, this profit available to equity shareholders, so it is nothing but 3,98,125. Guys, in this question, though, I have specifically calculated this amount because I want to calculate dividend yield valuation. Sir, normally speaking, this profit should be completely given to equity shareholders. But the question is specifically saying some portion will be transferred to general reserve. Okay, so transfer that portion and balance part jo hai na, balance part is only available for dividend distribution. So I have to calculate how much amount is available for dividend. So that is the reason why I have calculated this step specifically in this question. Normally our answer will end till future maintainable profits. But in the question though, since we have to do dividend based valuation, I want to know how much amount is available for dividend. The question may they are specifically saying this amount is transferred to general reserve. So the balance amount is there na 398,125. Thus that is the total amount available to equity shareholders. I hope you are understanding the point. Okay, sir, we are understanding the point. Now check the thing, guys. This 3.98125 per share is nothing but this 3.98125 per share is nothing but dividend per share. Sir, now the formula is dividend per share divided by normal rate of dividend, which is going to get 49.77 approximately. Sir, last May they are asking you to calculate the fair value per share. Sir, this is nothing but intrinsic value plus yield value divided by 2 you have to do. Sir, intrinsic value to 1 second. Intrinsic value to 40.62 I have got earlier plus dividend 49.77 divided by 2. If I do, I will be getting 45.195 approximately. 45.195 approximately is my fair value per share, guys. 45.195 is approximately my fair value per share. Guys, please go through last final minute and take a 1 minute of time and please confirm whether this valuation ka part is clear or not. Okay, we have completed the question already. Just go through 1 minute and give me a confirmation. So for shareholders capital employed, we are adding back non-trade investment. Shouldn't we add interest on non-trade investment for profit available to shareholders? No, Baba. No, just to try to understand the logic. Sir, why we have deducted interest on non-trade investments for the purpose of goodwill calculation? Guys, our answer is completed. Okay. So one student have asked me the question. So let me just explain. Let me just give her the clarity. Try to understand. Sir, for the purpose of calculating goodwill now, we have to only calculate the pure business related assets valuation. Okay? So in those assets, while calculating future maintainable profits or even while calculating capital employed also for that matter, we will be only concerned about those assets or those incomes which are directly related to our business. That is the reason we have excluded non-trade investments and we have also excluded income from non-trade investments also. But while calculating intrinsic value of the share, we are more concerned about equity shareholder perspective. Since we are more concerned about equity shareholders perspective, we will be calculating the net assets of equity shareholders. While calculating net assets, we will be taking non-trade investments also. Okay, but such income from non-trade investments, again, we are not considered anywhere. If you observe, we have only considered those investments while calculating net assets. But incomes, again, we have not considered, because those incomes we have used it only for the purpose of valuation of goodwill only. And for the purpose of valuation of goodwill, we will only give primary importance. We will give primary importance only to what items are only to that those assets which are completely related to the business only. That is the reason those profits also, sorry, those incomes also excluded, those investments also excluded. I hope you have understood the point. If you still have any doubt, feel free to text, feel free to drop a WhatsApp, drop a text in WhatsApp, okay, so that I will be explaining you. Guys, read this point. You have to compulsorily write this note in order to get full out of out marks, because our institute is not following a consistent approach. In some questions, they are deducting preference share capital, and in another questions, they are not deducting. So we will follow uniform approach. Whatever question they have given, if they have given preference share capital, we will deduct that. Preference dividend also, we have to compulsorily deduct that. Okay, so this is the point we have to note. Preference dividend will be calculated, will be deducted while calculating future maintainable profits, and preference share capital will be deducted while calculating capital employed. This point you have to keep in your mind, and you have to compulsorily write a note point. Okay, fine, sir. So guys, our fifth question got completed. Our fifth question got completed. So now let us move to next question, guys. Okay. So guys, let us check the next question, which is question number 7. Question number 7, little bit important, little bit trickier also. So I want 100% attention from you. So please be a little quick with your calculations. Okay. We are going to complete this question also very quickly, because this is a little bit bigger question, but no problem. We will solve this question quickly, and we will understand this question also. Don't worry at all. So, okay, sir. So to check this. Quickly read question number 7. The balance sheet of K Limited they have given on 31st March 2021. So they have given only one class of equity shares which are fully paid up. Okay. Fully paid 12.5% redeemable preference shares of 100 each, fully paid. Whatever it is, if it is a preference share capital, we have to deduct while calculating capital employed. And this preference dividend will be deducted while calculating future maintainable profits also. General reserve, P&L account, secured loan, creditors. Fine, sir. Check. Just a moment. Check asset side, guys. Goodwill they have given. Building they have given 20 lakh. Plant and machinery 22 lakh. Furniture they have given 10 lakh rupees. Investments 16. Stock 12. Debtors 20. Bank balance 4 lakh. So total, if you take, they have given 1 crore 7 lakh. One thing you have already know, that goodwill will be ignored. Goodwill will be ignored. Okay, sir. Now comes the next part, guys. Read each point very carefully. We will be understanding by reading the point itself. 100% attention I want. Check the first point. They are saying, sir, fixed assets are worth 20% more than the book value. Sir, they are saying fixed assets are worth 20% more than book value, which means revalued amounts are how much, sir? For example, if you take building value is 20 lakh into 120%. They are indirectly saying it is 20% revalued upwards. Okay, sir. Next part. Stock is overvalued by 1 lakh rupee. Oh, they are saying, sir, stock का balance जो है ना, closing stock का balance, it is overvalued by 1 lakh rupees. Debtors are to be reduced by 40,000 rupees. Debtors are to be reduced by 40,000. And last point, guys, trade investments which constitute 10% of the total investments are to be valued at a 10% below the cost. Trade investments are how much, sir? Trade investments which constitute 10% of the total investments are to be valued at a 10% below the cost. Sir, we are more concerned about non-trade investments. Trade investments, so we will not make any adjustment, but non-trade investments, so we have to consider. Okay? Let me write the breakup of the trade investments. Okay? Sir, total investments to 16 lakh. Out of these total investments, they are saying 10% investments are trade investments and balance 90% investments are non-trade investments. We have to eliminate these non-trade investments, not these trade investments. Okay? I hope you have clarity in your mind. Fine. Now, read the next point. Trade investments were purchased on 1st April 2020. Okay, but still, again, I'm saying trade investments are not at all relevant, but let me write the dates here. 1st April 2020. Sir, first let me write the breakup ka value. So 16 lakh into 90% is how much, sir? 14 lakh 40,000 is the value. Yes, sir. Next, sir. 50% of the non-trade investments were purchased on 1st April 2019. Guys, please change this to 1st April 2019. Again, this is a study material ka question. The mistake is there in the study material also. Okay. Non-trade investments का 50% or purchased on 1st April 2019. Try to understand. Which means, sir, out of this 14 lakh 40,000, 1st April 2019, I have purchased 7 lakh 20,000. Just do 50%, you will get this amount. So 14 lakh 40,000 into 50% if you do, you have purchased 7 lakh 20,000 on 1st April 2019. Fine. And the rest on 1st April 2020. Okay, sir. So which means next 1st April 2020 में sir, already I have opening balance of 7 lakh 20,000 plus I have purchased additional 7 lakh 20,000, which means my balance of investments as on this date is how much, sir? 14 lakh 40,000. So to summarize once again, your non-trade investments are 90% of your total investments. But sir, out of this 14 lakh 40,000 also, 50% of the investments are purchased on 1st April 2019 and balance 50%, that is this 7 lakh 20 are purchased on this date. But as on this date, my total value of investments are 14 lakh 40,000. ठीक है सर, ठीक है सर, ठीक है सर, ठीक है सर. Non-trade investments yielded 15% return on cost. Sir, income from these non-trade investments are how much, sir? 15%. Sir, I know that income from non-trade investments should be eliminated. Income from non-trade investments should be eliminated while calculating future maintainable profits. Okay, sir? Yes, sir. I have understood the point. Fine. Now read the question. In 2019-20, they are saying Furniture with a book value of 1 lakh was sold for 50,000. This loss should be treated as a non-recurring item for the purpose of calculating adjusted average profit. Sir, 1 lakh is the value of the asset and 50,000 is the sale value, which means I got a loss of 50,000. They are saying 1920 ka value mein, 1920 ka year ka profits mein, this loss has already adjusted. But this is a non-recurring item which should not be repeated in the future. So we have to give the effect of this non-recurring item. We have to eliminate this item. Okay, so next part to understand. In 2018-19, they are saying a new machinery costing 2 lakh rupees was purchased. Machinery was purchased but wrongly charged to revenue. Guys, machinery should be a capital item now. But they have charged this machinery to which, sir? P&L account when they have charged. Oh. This amount should be adjusted taking depreciation at 10%. Arey baba, this is a prior period ka error if you observe. Sir, normally PPE should be capitalized. Machinery should be shown as an asset. But they are saying, sir, it is wrongly charged to PL account. Oh. Therefore, it should not be. It is a prior period item, baba. It should be a prior period error, sir. How we have to do the adjustment? Just wait, you will understand. Okay, sir. Now, return on capital employed, they are saying 20%, which means I am getting a feeling that in this question, I have to calculate the goodwill based on super profits, which is confirmed in the next sentence. Because only while calculating super profits, we need this return on capital employed, which is 20%. Simple average profits also they have given in the question. So they have given last 4 years ka profit. And they also give, it is assumed that the preference dividend has been paid till the date. Okay, sir. This point I will come a little bit later. Last May, what they are asking, sir, they are asking you to find the intrinsic value of the equity share. We have to ignore the income tax and we have to ignore the dividend tax. Okay, fine, sir. By reading the first question, I will repeat few points. You have to confirm whether you have understood these few points or not. Sir, first May, if you observe, in this question, we have to calculate intrinsic value of the share. That is the first point. Second point, we have to calculate goodwill based on the super profits. Third point, in this question, there are adjustments related to past year ka profits also. Along with that, there are some prior period item is also there. Prior period error is also there. Extraordinary item is also there. Non-trade investments are also there. So please give me a confirmation if you have identified briefly as to what are the points which I have explained just now. Prior period item, extraordinary item, income from non-trade investments, goodwill ka calculation based on super profits, and last point, baba, last point is intrinsic value of the equity share. If you have understood these points briefly, we can aram se proceed with the solution of the question. Okay? Yes, sir. So what we'll be doing is, let us quickly start with the question, guys. Guys, quickly, I want responses from your side. Sir, the understanding would be same, sir. Understanding would be same because first, sir, let me calculate future maintainable profits. If I calculate future maintainable profits and the capital employed, then I will get my goodwill. If you get goodwill, you will immediately get net assets. If you get net assets, you will get intrinsic value per share also. Okay, this is the approach which we have to calculate. Okay, sir. So quickly solve the question, guys. Very good, Bharat. Thanks for the confirmation. Now let us check. Sir, first let us calculate future maintainable profits. First, let us calculate future maintainable profits. Sir, how we will get the future maintainable profits? Okay, last year ka profits, please take. Last year ka profits, so we have to take, guys, quickly. Okay, yes, sir. last year ka profits I have taken. Quickly read the question and tell me, sir. 17, 18, 13 lakh, 14 lakh, 16 lakh, 18 lakh. Okay, sir. 13, 14, 16, 18. Just I have written the years. Guys, we have to take profit before tax. Check the question. Sir, nothing they have given about the tax, and also last May they have given ignore the income tax also. Okay, so since tax is not there, profit before tax and profit after tax both are same. Both are same. I hope you are understanding the things, guys. Okay, sir. Now try to understand, guys. First one. Sir, read this first point. Sir, they are saying stock is overvalued by 1 lakh rupees. Sir, they are saying stock is overvalued by how much, sir? 1 lakh rupees. Now try to understand, Baba. Sir, quickly tell me, if your stock is overvalued, if your closing stock is overvalued, what happens to your profit? If your closing stock is overvalued, quickly tell me what happens to your profit. Obviously, your profit have to be increased. Your profit will be increased. Very good. Sir, now we have to reverse the effect. So our profit is going to get decreased. Our profit is going to get decreased. Since it is an overvaluation, we have to correct our profit. Okay? So this 1 lakh should be deducted. I hope this point is clear. I hope this point is clear. Yes, sir, we have understood this point. Second, again read the question. First point, they are saying, sir, debtors are to be reduced by 40,000. Debtors ka value should be reduced by 40,000. If you observe the wordings here, they are trying to say to be reduced, which means you have to make the adjustment right now. Sir, how much? 40,000. So simply I will deduct this 40,000. Bad debts, or I can say that it has a provision for bad debts also. Anything 40,000 should be adjusted. Okay, sir. Okay, fine. Now, sir, remember the adjustments which we have to do. Sir, first adjustment what I have to do is any income from non-trade investments should be eliminated. Okay, sir. Any incomes from non-trade investments should be eliminated. Fine, sir. So first one, Baba, quickly check this non-trade investments ka data I have written already. Sir, total investments ka value is 16 lakh into 90% is the non-trade investments. Out of these non-trade investments, so I have purchased 7,20,000 investments ka value as on 1st April 19, which means if you observe income from 1920, if you calculate, you will get 7,20,000 into 15%. Okay, my answer will be 1,08,000. Sir, if I calculate here income for 2021, my value of the investments will be 14,40,000. And on this 14,40,000, I have to calculate 15%. If I do, I will get 2,16,000. The same calculation I have did here. 16 lakh is the total value of investments, out of which 90% are non-trade investments. Sir, even this 90% also, only 50% are acquired in 1920. Income is 15%. Guys, same calculation I have did nicely here only. Sir, this is there in which year? This I have purchased only in 1920. So if you calculate in 1718, there are no investments, so there is no non-trade investment. 1819 also there is no investment, so there is no non-trade investment. But 1920 you have purchased non-trade investments. Sir, for 1920 the income is 1,08,000. For 2021 the income is 2,16,000. Guys, are you understanding this point or not? Okay, you just have to find out this income from non-trade investments. If you got the idea, our answer is going to be very, very simpler. Okay, I will give time to make you understand. Okay, let me complete till preference dividend, future maintainable profits, then I will give time to revise. Then I will give time to check the point. Sir, ठीक है sir. First one, sir, income from non-trade investments का point is already adjusted. Second point, extraordinary items or non-recurring items, if they have given in the question, that also should be adjusted. So which means we have already completed this point, investments ka point. Okay, this first point also we have completed. Quickly come to third point, Baba. Sir, furniture with a book value of 1 lakh was sold for 50,000. Sir, which year, sir? 1920 profits, if you have observed. In my profits, so there is already loss of 50,000. Because of that loss, my profit is reduced. Now I have to remove that item, sir. So what we have to do, you have to add back. You have to add back. So that is the exact thing what I have did. Loss on sale of machinery will be added back because it is a non-recurring item. Because it is a non-recurring item. So please confirm. I think you have understood this loss on sale of machinery ka point also. Okay, sir. Now, next point. Sir, any prior period ka adjustment. So this point is also done. Third point. Now, Baba, fourth point. Sir, what is this fourth point? Try to understand. Sir, a new machinery costing 2 lakh was purchased. See, 1819 mein this transaction has happened. Sir, if you take 1819 ka value, 1819 mein my profit is already reduced by 2 lakh rupees. Correct or not? Because I have debited this plant and machinery to P&L account. So my profit is reduced by 2 lakh rupees. So now, first of all, I will increase my profit because that is a mistake. So I will rectify the mistake now. So first I will add 2 lakh rupees. But try to understand, sir, if this 2 lakh rupees, is treated as an asset, you will get depreciation. You will get depreciation. Okay, sir, I will get depreciation. So how much depreciation you will get, sir? Read the question. I have said 10% on reducing value method, which means WDV method you have to follow. 10% depreciation on what method, sir? WDV method you have to follow. Okay, sir. So try this, guys. So this 2 lakh is the total cost. So first I have added this part minus depreciation I have to charge. 20,000 is the depreciation for the first year. Sir, second year may how much depreciation I will get, sir? Try to understand. Sir, 2 lakh is the first year ka value minus 20,000 if I do. My written down value will be 1,80,000 into 10% will be my value of depreciation. This is for second year. Sir, third year may see 1,80,000 will be the second year ka value minus 18,000 if you do, you will get 1,62,000 into 10% if you do, you will get third year ka depreciation. So all the adjustments are completed. Now I have added adjusted profits ka value. Adjusted profits. Sir, first year may 13 lakh, there are no adjustments. So this will be 13 lakh straight away. Second year may some adjustments are there, sir. 14 lakh plus 2 lakh minus 2 lakh. So 1580 is the second year ka profit adjusted. Third year maybe some adjustments are said there. So adjusted profit will be 1524,000. And last year, if you observe, there also we have some adjustments. Sir, how much, sir? 1427,800. And then I have to take the average adjusted profits. Then I have to take what, sir? Average adjusted profits. Okay, sir. So take 1 minute and go through here. And please confirm if you have understood, because this is going to be little bit bigger question. So I want you guys to go through till here and please give me a confirmation if you have understood till here. Okay. First, I think this is a very normal adjustment, closing stock. I think you guys have understood. This also you have understood. This you have to be a little bit careful. Completely I have given here. This also is very basic side adjustment. I think this also is very basic. Okay, nothing conceptual. So take 1 minute of time and go through all the adjustments, and if it is fine, let's move further. So come on, guys. I hope you have understood till here. Average adjusted profit is 14,57,950. Okay, just a moment. My charging is over. Okay. Yes, guys. Try to understand one point. Sir, my future may maintainable profit is how much, sir? 14,57,000. Sorry, 14,57,950. But again, sir, suddenly one more adjustment have come here. Sir, what is that one more adjustment? Try to understand. See, depreciation due to revaluation of plant and machinery. I have left this point correct. Last point though. So now let us quickly check this part. Depreciation on overall increased value of assets need not to be considered. They are clearly saying depreciation on the overall increased value of the asset. See, every asset is increased more than 20,000, which means building is also increased by 20%, plant and machinery is also increased by 20%, furniture is also increased by 20%. Which means if you observe, sir, now from next year onwards, I have to charge that extra 20% value paid depreciation I have to charge. So for this, what they are trying to say is all those assets need not be considered. Depreciation only on the additional value of the plant and the machinery only to be considered while calculating average adjusted profit. Just to follow what they have given in the question. They are saying, sir, depreciation on the additional value of only plant and machinery should be considered taking depreciation while calculating average adjusted profit. Okay, so what I will be doing is I will be calculating only that profit which is related to the plant and the machinery from the future. Sir, how you will get the calculation is try to understand. Sir, my current plant and machinery ka value is how much, sir? 22 lakh is my current value. Okay, let me write existing value to 22 lakh. But if you observe, sir, some machinery is there na 2018-19 may I have purchased, which I have already debited to P&L account, which means this item is not there here. That is the adjustment which I have made just right now na. So I have to add back the carrying amount as on 31st March 2021. Sir, what is the carrying amount? Try to understand, guys. Sir, the asset ka value is 2 lakh rupees, but already I have charged 20,000 ka depreciation in the first year. Second year pe I have charged 18,000. Third year pe I have charged 16,200. Sir, can you tell me what is the carrying value after deducting all these depreciations? Then you will understand. 20,000 plus 18,000 plus 16,200 minus 2 lakh. If I do, sir, I got 1,45,800. 22 lakh plus 1,45,800. Sir, what is the value of this? 23,45,800. This is going to be my carrying amount, revised carrying amount of the plant and machinery. So out of this, 20% is the revalued value. So additionally, I have to provide this 20% value per depreciation. Again, 10% will be the depreciation ka value. Sir, this 20% jo hai na, this is increased amount. On this increased amount, what is the rate of depreciation which you are charging? Only I have to give the effect of that item only. Where is it? So the same calculation I have written down here. So just calculate and tell me what is the amount, guys. 23,45,800 into 20% into 10%. Quickly calculate and tell me what is the value. I'm waiting for your answers. I think the answer is 46,916. Okay. So please confirm whether this answer is correct or not. The answer is 46,916. Very good, Bharat. Very good, Banu. Very good, Akshaya. It is fine. So this will be my depreciation, which I will be adjusting in future years. Some students may get a question, sir, why you have considered only increased value ka depreciation? Are Baba, see, normal depreciation has already debited while calculating this profit. So normal depreciation, you no need to worry. From next year onwards, what is the incremental depreciation which I am getting only because of this revaluation? Only that we will consider here. So okay, is it fine now? Is it audible now? I think the mic charging has completed, so I think it is fine now. Please confirm. Thanks for the confirmation, Prasad, Surya, everyone. Please confirm right now. Is the audio clear? Fine. Yeah. What I'm trying is this additional value of depreciation only we have to calculate. Sir, why you have taken only this additional value? The reason is in these assets, so already depreciation on current value of plant and machinery has already charged while calculating this profit. But now we will be only concerned about extra depreciation due to revaluation. And that is the reason why I have taken only the extra depreciation ka point here. Okay. Yes, sir. We have understood. So 14,11,033. So this 237,500 will be my preference dividend, and I will be getting future maintainable profit as 11,73,533. That's it, sir. Now quickly calculate the closing capital employed. Sir, once again, capital employed, Baba. Fair value of all assets we have to take minus fair value of all liabilities you have to take. Just take the fair value of all assets. Sir, 20 lakh into 120%. Plant and machinery will come later. Furniture also 10 lakh into 20%. Are Baba, now comes the important point. Sir, investments. What is the total value of investment, sir? 16 lakh is the total value of investment, sir, but only 10% or the 10% are the trade investments. We will only consider trade investments. We will not consider non-trade investments now, which means we will take only trade investments. Sir, 16 lakh into 10% is normally my trade investments ka value. which means it should be 1,60,000. But here they have said trade investments are to be valued at a 10% below the cost. So 160,900 into 90% if you do, you will get 1,44,000. I hope you have understood this point. Trade investments ka value. Only we have to take trade investments. That's it. Non-trade investments should be excluded. Fine. Stock, if you observe, sir, 12 lakh is the stock which is there in the balance sheet. But sir, 1 lakh is overvalued na. So I have reduced the stock ka value. Debtors also 20 lakh they are saying, but they are saying, sir, 40,000 to be reduced. So I have reduced it 40,000 also, and 19,60,000 will be my balance. Bank balance I have to add, so 4 lakh. And plant and machinery is also very simple, guys. I think I have already calculated here only. So 22 lakh is the value, plus 145,800 will be added into 120%. Into what, sir? 120% will be the new value of the plant and machinery. So if you calculate, you will get 28,14,960. Sir, minus fair value of all liabilities you take, sir, please. Secured loan is there, creditors are there, most important, preference share capital is also there. So 19,10,000 also you have to take. Okay. Yes, sir, we have understood. So, sir, if I do, I will get my closing capital employed as 41,18,960. Sir, but we have to take average capital employed now. Yes, guys, always we have to take average capital employed only. But in last question, they have asked you to take closing capital employed, correct? So that is the reason I have taken their closing capital employed. But otherwise, I will take average capital employed only. Sir, how you will get closing capital employed minus half of PAT of the current year. Minus half of the PAT of the current year, correct or not? Yes, sir. Sir, current year ka profit is how much, sir? This is the current year ka profit. 14,27,800 is the current year ka profit, and this pay I will take only half. So I will get 730,900. So please check this part, guys. Capital employed ka calculation, if it is completed, goodwill cut answer is done. Okay. Intrinsic value is also completed. So quickly check the question and confirm whether capital employed is clear for you or not. This is the little bit understanding you have to get. Half of average profit for the current year we have to take. Half of PAT of the current year we have to take. Okay, so please check this. Let's take last 1 minute and confirm whether it is fine. ठीक है guys, please confirm if you have understood this average capital employed. Then this goodwill का part is very simple guys. Very good Manohar, clear. Sir, then goodwill तो it is आराम से calculation of goodwill sir, super profit equals to future maintainable profits minus normal profit. Sir, future maintainable profits so is 1173,533 which we have already calculated earlier. Normal profit to average capital employed into normal rate of return. Sir, if I do 34,050,60 which I have got just here into 20%, if I do, I will get this 681,012. So my super profit will be 492,521. Question may they have given 2 years of purchase you have to do. So 492,521 if into 2 if I do, I will get this 985,042. Very good Bharat. Thanks confirmation. Thanks for the confirmation. So this will be my goodwill. This will be my goodwill. Sir, in the question they have asked you to specifically find out intrinsic value of the share. What they have asked, sir? They have asked to find out intrinsic value of the share. So simple, sir. You have to calculate the net assets. Sir, how, sir? Closing capital employed. Arey Baba, while calculating net assets, take the closing only, not the average. Average we have to do only for the calculation of goodwill. For the calculation of net assets, we have to take the closing capital employed plus goodwill we have to add plus non-trade investments also we have to add here. Oh, so 16 lakh into 90% if I do, I will be getting 14,40,000. So sir, my net assets will be 65,44,002. Equity shares so 3 lakh. So intrinsic value will be 21.81 per share. So please go through this and confirm if it is clear. Okay, we have completed another important question. So question number 7 also we have done. So please check this part and let me know this working note 4. Guys, you have to definitely practice these questions. Otherwise, you will not understand what I am trying to say. Okay, so quickly go through this part. Guys, I hope you have understood the part. So one more question, let us solve here only. Guys, the reason why I am solving these many number of questions is, see, if you observe, sir, what are the questions which we have covered in this chapter? So see, 8, 9, 10, 11, 12, all we have covered, guys. 8, 9, 10, 11, 12, and 13 also we will cover right now. So 8 to 13, all the questions we have covered. This 7th question also we have covered. Okay. So 6th one we will cover in next class. Okay. 5th, I think fifth also we have covered. So only question we have left is, I think, this fourth question. But still, almost all the adjustments are old adjustments only. And I think third also we have covered. Second question also I will explain in next class. Okay, so two questions I will explain in next class. But other than these two, all the questions I have covered. The reason is, if this chapter may whatever question they have asked in exam, you should be able to do that. Okay, this question may, what I wanted to say is, a little bit inconsistency is being observed by the institute, but rather, as I have said, that first type of inconsistency is in some questions though they will not deduct preference dividend while calculating future maintainable profits, but in other questions suddenly they do. So that's what I'm saying. We will deduct the preference dividend always and the preference share capital also always. This you have to keep in your mind. So one more short question is there, but little bit typical sa question. Okay, if you forget this type of a question, if you don't do these type of question, suddenly if this type of question comes, you will be shocked. See, if you check, this question is chotu sa question. If you have basic SFM knowledge, you can aram attempt this type of question. But the thing is, if you don't see this question in your CFR, suddenly after entering the exam hall, if you see this kind of a question, you will feel terrified. First of all, your mind will stop working only. You will not see the entire question. Immediately, you will think one thing, okay, this is SFM, but our exam is CFR. So some out of syllabus is came. Institute will have to award me grace marks. That is not the thing. Just read the question. You will aram se understand. Okay. So check, sir. So they are saying X Limited has EPS of 12 rupees and number of shares are 1000 rupees. EPS of 12, number of shares are 1000. So can you calculate and tell me what is the profit after tax? See, EPS hub you will get, sir. EPS I will get by PAT divided by number of shares. Sir, can you tell me what is the PAT in the question? They have given EPS of 15 and number of shares to 1000. Quickly tell me what is the PAT in this question, guys. Reverse working you have to do and tell me what is the PAT. EPS is 12, shares are 1000. So my PAT is going to be 12,000. I hope you have understood this. You just have to do 12 into 1000. You will get this PAT, which is 12,000. Please confirm whether you have understood this part or not. Very good, Bharat. That's correct. 12,000. So I think 1 second. Is there any internet issue from my side? I'm receiving late messages from you. So I think you guys are correctly answering fastly only, but I don't think why I'm getting a late replies. Okay. So guys, they are asking you to find the value per share based on data of similar other companies. So this kind of finding out the share price of our company based on other companies is called as comparable companies evaluation model. Which means that based on other companies' ka share price, our share price will be determined. Arey Baba, check this. Sir, they have given sales ka see, cash flows after tax, they have given 15,000 and sales, so they have given 80,000. Okay, sir. For other companies A, B, C, D also they have given PAT, cash flows, sales, market capitalization. This MC is nothing but market capitalization. Okay, yes. Guys, what we have to do, just to do what I'm saying. Okay, sir, here we are having three data. So first what I will be finding is, I will finding out this market capitalization divided by PAT for all the companies. Market capitalization divided by PAT I will do for all the companies and I will calculate one value. Similarly, market capitalization divided by cash flows also I will be doing for all the companies. Market capitalization divided by cash flows also I will be doing for all the companies. And third also, market capitalization divided by sales also I will be doing for all the companies. Just to do what I'm saying. Just to do what I'm saying. So directly come to the answer. Sir, market capitalization is this thing. Just do market capitalization by PAT for all the four companies and confirm whether this is correct or not. Similarly, market capitalization divided by cash flow for first company, I think this is the answer. For second company, this is the answer. For third company, this is the answer. For fourth company, this is the answer. So please confirm. In the third company pay, market capitalization divided by sales we have to do, which means 150 by 120, 175 by 145, 2 lakh by 160, and 192 by 144. So please confirm those things. Okay, just divide this market capitalization with all the amounts which they have given for all the companies. Check this. I think it is correct. So 150 by PAT, 175 by 16, you will get these values. So similarly, 150 by 25, 175 by 20, you will get these values. Similarly, this. So please take 1 minute to confirm whether all the values still here are correct or not. Still here. Okay, take 1 minute of time and tell me. Guys, very basic sa question as I have been saying number of times. Very छोटू सा question, very basic सा question. Here I have written what to do. Market capitalization by PAT, market capitalization by cash flows, and third one to market capitalization by sales. ठीक है? Values are correct? Yes. Now do what I am trying to say. Sir, here we have get 4 values, correct? Here also we have got 4 values, and here also we have got 4 values. Just to take the average in this column. Just to take the average in this column. Okay? Just quickly take the average. Average of 1, 2, 3, 4, it will be this. Average of 1, 2, 3, 4, it will be this. And average of 1, 2, 3, 4, it will be this. So please check and confirm whether this averages are also correct or not. This comparator ka value. Only average of the above 4 items you have to take for all the 3. So it's very basic question, guys. Complete mechanical kind of a question this is. No need of applying concepts. Guys, here it is just nothing but an average of these items. 1, 2, 3, 4. You will get 9.276042. Just if I do 7.5 plus 10.9375 plus 8 plus 9.276042, then 6 plus 8.75 plus 6.25 plus 8 divided by 4, if I do, I got 7.25. And last year ka value, sir, 1.25 plus 1.25 plus 1.25 plus 1.3333 divided by 4, if I do, I got 1.27083 ka value. Sir, this value is PAT, this value is cash flow, this value is sales, correct? So I have written PAT, cash flow, sales ka amount for our company. Sir, our company means our company ka value they have given here, Baba. Sir, PAT to 12,000 you have already calculated, and cash flow to 15,000 they have given, and sales value to 80,000. So I have written these amounts. Okay, guys, just multiply these amounts with this. Just multiply these amounts with this. Why you will multiply, I will explain later, but just try to follow the mechanism of the question. Okay, very mechanical question, no need to apply your brains also. Arams I will get the answer. So if you ask me, so 12,000 into 9.276042, if you do, you will get 111,312. Okay, sir. Second ka value, ye wala value, if you observe, sir, 15,000 into 7.25. If you do, you will get 1,08,750. Okay, sir. Last value, 80,000 into 1.270833. If you do, you will get 101,666.7. Sir, number of equity shares to 1,000. Okay, sir. Just take the value per share based on base value, which means this divided by this, this divided by this, this divided by this. If you do, you will get these values, and you have to get only one value. So I will take average of all the three items. I will take average of all the three items. Try to get the feeling of, sir, what these questions are all about. Just remember one thing, sir, here they have given, see, you have to find the market value per share. Okay, and they have given this market value for other companies based on sales, cash flows, and PAT also. Sir, here in this step, what I have calculated is my PAT is how many times of my market capitalization. My PAT is 7 times of my market capitalization. Sorry, my market capitalization is how many times of my PAT you have calculated. Sir, if you observe this, what is this 7.5? My market capitalization is 7.5 times of my PAT. Similarly, my market capitalization is 6 times my cash flows. My market capitalization is 1.25 times my sales. Like this, they have given for all the companies. So what I have found out is I have found out one multiplier for all the companies. And last May, I have taken the average and I have found out, sir, average if you take 9.276042 times of your PAT will become your market capitalization. In the same manner, 7.25 times of your cash flow will become your market capitalization. 1.27083 times of your sales will also become your market capitalization. Okay, sir. So now these are the average values. So just apply our company ka figures. Just apply our company ka figures to find out our valuation. Sir, this is the industry average. My company ka profit is 12,000. So my share ka value have to be 111,312. My industry ka average is 7.25, but my company ka base value cash flow is 15,000. So my company value according to this have to be 1,08,750. Okay, sir. Sales ka value also, if you observe, 80,000. 80,000 will be the base value and 1.270833 will be the multiplier ka amount. So this 1,01,667 has to be the value. Sir, again, number of equity shares I have 1,000 in all the cases. So this will be my average. This will be my value per share in all the cases. Since you have three values, take the average of all the three items, then you will be getting average value per share of X. Okay, a very basic question, guys, it is. So I will be discussing only 2 questions from this chapter in the next class. I can discuss those questions also right now, but it will become too much hectic for you. So I have discussed enough questions from this valuation of shares and goodwill ka chapter. So what you have to do is you have to definitely practice after the class whatever questions I have discussed. If you don't practice, how much hard work we have kept, that will be completely wasted, guys. So my sincere advice is to whatever the questions which I have discussed, you have to definitely practice those questions. You have to definitely practice those questions. If you don't, your efforts are going to get wasted. Okay, some two questions are there, other kind of a questions. Okay, so whatever the questions which we have done till now, all the study material ka relevant questions are completed. Okay, and two typical questions are there. If those two typical questions, so if they want to ask repeated kind of a question, institute can directly ask them copy paste. But sometimes they will give new questions. Sometimes they will give little new questions. So if any new question comes, conceptually we can solve. But if those kind of a repeated question comes, if you don't see those questions, it is not possible for us to attempt those kind of a questions. Okay, so next class only two questions we will complete, and after that we will be immediately starting with NBFC ka chapter. We will be immediately starting with NBFC ka chapter, and our evening class itself we will start another super chapter, super important chapter, which is business combinations. Guys, if you observe the index ka chapter, if you observe index, guys, try to understand, sir, what is the coverage which we have got after completion of the chapter still here. Try to understand, sir, this IndAS 16 and 36 and 38, two questions are definitely being asked. Two questions are definitely being asked. So if you observe the recent pattern which the institute is following, definitely, sir, 14 mark questions. So from these standards only I have to get. Other than this, if you observe, Baba, sir, valuation of shares, one compulsory question we will get. Accounting of financial instruments or NBFC, from these two also another compulsory question should have to get. Which means till the next class gets completed, we will be having another 14 marks in our pocket, which means out of 70, I am talking, guys, only descriptive part. So 28 out of 70 we have in our pocket. Once this business combination is done, another 18 marks will be there. And once this CFS is done, another 16 marks also will be there in our pocket. I hope you are understanding what I am trying to say. And once that business combination and CFS got completed, next we will have recent developments, 14 marker, government accounting, 10 marks. Only descriptive I am talking about. Okay, so here also we can write 14 only for consolidation also. Okay, will you be extending the class after tomorrow? What after tomorrow? I didn't get you. Guys, what I am planning is extra, we want 25 hours. Okay, I have just calculated the number of hours which we have completed, and it is coming something around to 15 plus hours. So 40 hours is the target which we have to complete. Okay, and another 7 mark question also we will be discussing, which is internal reconstruction, a complete 7 mark, compulsory 7 mark question. That also we are going to cover. So no need to worry at all. We will be aram se covering. Okay, with the coverage, you can, how much tougher the exam is, including the choice. If you calculate the descriptive part, it will come to 98, correct? So from this 98 to how much tougher the question is, 70 marks to, you are damn sure. That is our target. You have to score 60 out of this 70 for sure, guys. With the level of understanding and the concepts which we are doing, 70 plus, 60 plus from the descriptive part itself, you have to get. Okay. Yes, sir. So show the same interest for the next chapters also, which are business combination. And then I will try to start with internal reconstruction also. Because business combination and CFS, if I start together, you may feel it difficult. So what I will be doing is, after this business combination get completed, I will move to consolidated financial state. I mean, internal reconstruction or government accounting. We'll do some theory topics and then we'll move to the consolidation. Beyond the 14th. I think yes, but daily I will be taking only 3 to 4 hours. See, even if you observe till now also, because of the TT classes got extended, I may not be able to take, I am not able to take entire 6 to 7 hours at a stretch. Correct? So that is the reason we are only taking some 4 hours, some 4 hours or 3.5 to 4 hours only we are taking daily. So that is the reason till now we have completed 15 plus of hours and balance 25 hours will be there. At my suggestion to you basically is do not worry about the time. Just place complete percent confidence and just do all the efforts, just give all your efforts. This is the last attempt which you are giving. Okay, just think like this is the last attempt. Okay, don't worry about the time. I have completely understand your situation, but the thing is we have to go in depth. Okay, so that is the reason I cannot skip the classes. Okay, if I want, I can just read all the questions. I can just revise all the questions just by reading this, but this is not my intention. I want you guys to completely understand the concept. Then only you can able to solve the questions. Okay. So MCQs, I will definitely release a video in the YouTube. So you no need to worry anything about that, Surya. So don't worry. I will be uploading MCQs ke liye separate video. If for example, even the CO batch have completed, and since if any of the standard which I feel is very, very important from exam perspective, I will be doing a separate video and I will be releasing in the YouTube. So you don't need to worry at all. Okay, fine, sir. So please solve whatever the questions we have completed. Only 2 questions are left from this chapter that will be solved in the next class. Along with that, I will be solving NBFC ka chapter also I will be completing, and then we'll be starting with business combination at today's evening ka class. Okay, fine, sir. So I will be uploading the timings of the next class in the WhatsApp group. Probably we will have our class at 6:30 to 7 p.m. Okay, guys, because I'm having some other classes, I may not be able to, I cannot continuously take the classes right now. So because of which our classes will be, next class will be from 6:30 to 7 p.m. In the middle of this, I'm going to start, which will be going to continue for the next 3 hours. Okay. So that's it, guys. That's it for today. Thank you so much. We'll meet in the next class. Okay, so hi guys, can you please confirm whether the audio and video is fine? If yes, we can immediately get started. Okay, fine. Thanks for confirming. So let's get immediately started. We'll quickly take 2 minutes to revise the main stuff and then we'll get started immediately with the balance part. So first one, we have understood how to calculate the future maintainable profits. It is very, very simple. So we have to take the PBT for the past years, plus we have to make only 4 kind of adjustments. So the 4 kind of adjustments, first we have to take any prior period errors if they are, we will be adjusting that. Second, if there are any extraordinary items, we have to make an adjustment for that extraordinary items as well. And third is if there are any non-operating items or incomes from non-trade investments, if there are, we will be adjusting that also. And last May, if any non-recurring items are there, we will be adjusting that also. Finally, you will get adjusted PBT. We have to take the average of adjusted PBT. If nothing is given, we will take weighted average. Sorry, we will take simple average. Weighted average will be taken only if it is required by the question. Okay, sir. Then average adjusted profit before tax we will get, plus or minus future adjustments we have to do. Here depreciation on revalued assets we have to take. See, in the morning question, I think we have solved the depreciation on revalued assets. Basically, this is depreciation on revalued assets. Here I can say excess depreciation on revalued assets due to the revaluation. Only how much depreciation is charged because of the revaluation, that will be deducted. And if any taxes they have given, that also we will deduct. And finally, you will get adjusted PAT. From this adjusted PAT, we have to deduct one more item, which is called as preference dividend. And as I have been saying always, please don't forget to deduct this preference dividend while calculating future maintainable profits. Okay. Capital employed, take fair value of all assets. From that, fair value of all liabilities will be deducted. And the first part is we have to deduct this preference share capital also, which is the most important point, which a student should never miss. So this preference share capital also always we have to deduct, and we will write a note also. Fine. First point, but three assets will be excluded. First asset, goodwill will be excluded. We will assume the goodwill as a self-generated goodwill, and we will be excluding while calculating capital employed. But if the question specifically asks you to include the goodwill, please go ahead. If the question mentions that it is a purchased goodwill, then also we have to include that part. Okay. Non-trade investments, if there are, we have to exclude that from capital employed. Non-trade investments will be excluded from capital employed. If nothing is given in the question, we will assume the investments as non-trade only. Even the word investments only have given, then also we will be assuming them as a non-trade investments. Okay. If they have given any fictitious kind of an assets, those will be ignored while calculating capital employed. Always we will give preference to average capital employed, but in the question, if they specifically ask you to use only closing capital employed, we will do that. One question may they have asked this closing capital employed. I think we have already solved that based on that closing capital employed only. Two formulas you have to remember. This formula you can aram say you can remember, but this is the thing you have to remember. When opening capital employed is not there, we have to take closing capital employed minus half of the PAT. This is the formula which you have to remember. Okay. Then methods we have done. So intrinsic value method. What is the first method? Intrinsic value of the shares. This is also called as asset backing approach. The formula, net assets for the equity shareholders divided by number of equity shares. Net assets, how I will get? Simply we have to take the closing capital employed. For that, we have to add only two items. First one, non-trade investment. Second one, goodwill. If you add these two items, you will finally get net assets available for equity shareholders. Okay, so then this is the super important point which we have to remember. Very, 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 very important. In case if any partly paid up shares are there, we have to always make them fully paid up by adding the notional value of the call to the net assets. Very, 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 very important. So you definitely go through this point. We have already solved one example, and here also I have given a beautiful example. You will aram se understood the part. Okay. But while calculating the intrinsic value per share of such partly paid up, then you have to deduct that call ka value. Okay. Yes, sir. If there are any multiple fair values which they are given in the question, you have to always calculate equivalent number of shares, and then we have to do the proportionate valuation. Okay, sir. This is also fine. Method 2, we have yield basis valuation. First basis to dividend yield and second basis to earnings yield approach. Sir, what is the formula for dividend yield? Very simple. DPS by normal rate of return. DPS means dividend per share divided by normal rate of return into 100. Second question, if you observe earnings yield. Sir, what is the meaning of earnings yield? Earnings yield means EPS divided by normal rate of return into 100. Okay, fine. So, and another method is also there, which is fair value of the equity shares. What is the meaning of fair value of equity shares? Take the average of intrinsic value and yield value divided by 2. You have to find intrinsic plus yield divided by 2. You have to do. Okay. Yes, sir. Then, as I have said, that two questions are there. Those are little bit tricky questions. So let us quickly solve those tricky questions. Okay. And once that is done, let us move to the next part. Okay. Yes, sir. So quickly check this part. Question number 6. Open your calculators because this is very, very important question. So I just want 100% focus from all of you. Okay. I think most of the students have already come. So fine. Quickly let us solve this question. Little bit important. This is an exam question, by the way. Okay. This is an exam question which is asked. So you have to be very, very careful. Check the balance sheet part. 31st December 2021. Fine. 1 lakh equity shares of 10 each fully paid up they have given. Second also 1 lakh equity shares of 6 each fully paid up. 1 second. 1 lakh equity shares of 6 each fully paid up. Here also try to understand. These are multiple face values. One though face values of 10 each which are fully paid they have given, and second though they have given 1 lakh equity shares of 6 each fully paid up. They are also fully paid up only. Okay, two categories of face values of shares are there. One are 10 each, second one is 6 each. These are not partly paid up. Its face value itself is 6 rupees and 6 rupees is completely paid. Sir, how you are saying? If you check the capital, then you will understand. 1 lakh into 6, if I do, I will get the 6 lakh rupees as fully paid up capital. Above, if you do 1 lakh into 10, you will get 10 lakh as the share capital for first class of equity, and the second class of equity, though, you will get 6 lakh rupees as the share capital. Okay, normal sa point. Reserves and surplus they have given. Liabilities ka portion also they have given. How much? 10. So total, if you take 28 lakhs, you will get. Come to asset side, they have already given goodwill. What is that? They have already given goodwill. So normally, as per our information, this goodwill, though, generally we will assume this as a self-generated goodwill if nothing is given in the question. And they have given fixed assets ka value. Other tangible assets ka value they have given 5. Intangible assets they have given the market value. Intangible assets ka market value they have given how much it is? They have given 3 lakh. Simple point. Intangible assets ka market value they have given 3 lakh rupees. And in the exam also they have given this word which is miscellaneous expenditure to the extent, but nothing they have given. Sir, what if they have given some amount here, for example 5 lakh? What if they have given? Still we already know that this miscellaneous expenditures and all will not be included while calculating capital employed, but they have given, unfortunately, so it's totally fine. There is no amount, so even if there is amount also, what we will be doing is we will be ignoring that amount. Okay, so this is not at all a relevant point, so we can ignore this part. Coming next, this is the important point. Fixed assets are worth 24 lakh. They are saying, sir, whatever the existing value in the books of accounts is only 15, but they are trying to say that this is a revalued figure which is of 24 lakh. Okay. Other tangible assets are also valued at 3 lakh. Okay. The company is expected to settle the disputed bonus claim of 1 lakh not provided for in the accounts. This is a little new point which we have never heard about this point. Sir, what we have to do, let us slowly understand. The company is expected to settle the disputed bonus claim of 1 lakh rupees which is not provided for in the accounts. Okay. Another second important point you have to focus is, here they are saying goodwill appearing in the balance sheet is purchased goodwill. Oh, goodwill appearing in the balance sheet is purchased goodwill, which means generally what we will do, we will include this goodwill while calculating capital employed. Okay, since they have specifically said this goodwill as a purchased goodwill, we will include this goodwill while calculating capital employed. But there is a little twist in the question. Try to understand the next wording. It is considered reasonable to increase the value of the goodwill. I think this is your study material question, by the way, not exam. This is study material ka question. Okay. Yes, sir. It is considered reasonable to increase the value of the goodwill by an amount equal to the average of the book value and valuation made at 3 years purchase of average super profit for the last 4 years. If you read one time, you will understand nothing. Okay, so read for second time, then you will understand something. Let us try. It is considered reasonable to increase the value of the goodwill, which means whatever the value of the goodwill, take that goodwill and add some amount. Sir, what is the amount which I have to add? They are saying to increase the value of the goodwill by an amount equal to the average of the book value. Average of two items you have to take. First one, they are saying book value ka average. Along with that, you have to take the valuation made at 3 years purchase of average super profit for the last 4 years. I think by reading the second time, you have got something with some idea to you have came. Some idea to it should strike while reading second time. Sir, we have not striken at the second time also. Then read for one more time, then you will understand. Okay? Again, one more time, let us read. It is considered reasonable to increase the value of the goodwill. Sir, currently, what is the value of the goodwill, which is there? 5 lakh is the value of the goodwill. So this 5 lakh should be increased by some amount. This 5 lakh rupees should be increased by some amount. Sir, what is that some amount they are saying? Take the average of book value, which means this 5 lakh you have to take, plus along with this 5 lakh you have to take the valuation which is made at 3 years purchase of average super profit for the 4 years. Oh, which means the question is asking you to calculate the goodwill based on super profits for the 3 years purchase. Then you have to take that figure ka value and this book value ka average, and you have to add that to the current book value of the goodwill. Average you have to take and you have to add to the existing goodwill which is there. Okay, sir. If you got enough comfort, excellent. Otherwise, while solving, you will get the comfort. Okay. So they have given the details of the profit. Just to change these figures because they have given mistakenly 2018, 2019, 2020, 2020, 2021 have to be the figures which should be there here. Because the simple here they are saying 31st December 2021. So last 4 years means this should be the last 4 years. 18, 19, 20, 21. Okay. Yes, sir. Understood. PAT they have given. So 3 lakh, 3.5 lakh, 4 lakh, 4.1 lakh is the thing. PAT ka value also they have given. And immediately, if you observe, they have given dividend percent. They have also given dividend percent. I have not read the question completely, but I'm getting a feeling that we have to do dividend based valuation in this question. I didn't read the question, but still, because of the dividend percent which they have been given in the question, I am getting a feeling that we have to do dividend based valuation in the question. Okay? Yes, sir. Next, if you read further, Kamlesh is a shareholder who is holding 20,000 equity shares of 10 each and 10,000 equity shares of 6 each fully paid up. Oh. Suddenly they have brought one shareholder who is Kamlesh, who is holding 20,000 equity shares of 10 each fully paid up and 10,000 equity shares of 6 each fully paid up. Okay, sir. Now, can you calculate and tell me percentage holding? Can you calculate and tell me percentage holding of Mr. Kamlesh in these 10 each fully paid up shares? And you have to tell me what is the percentage holding of the equity shares of 6 each fully paid up. Okay, he is having 20,000 equity shares of 10 each and 10,000 equity shares of 6 each fully paid up. Just 20 seconds. I want the percentage holding with respect to each of the paid up values, because here if you observe 1 lakh equity shares, here 1 lakh equity shares. Can you tell me percentage holding? 30 seconds. I want the answer. 30 seconds is very, very more. I think you can calculate less than 30 seconds only. But let us wait. Percentage holding of the investment I want. Okay. Very good. Very good. Guys, here you have to observe one thing. 2 shares are there. Na? So out of this 1 lakh, Mr. Kamalesh is having 20,000 equity shares. Sir, but out of these 1 lakh though, he is having 10,000 equity shares. Which means 20% from this and 10% from this. If you observe, this person is just holding an investment. He is not having control over this Q Limited. Sir, what is the meaning of control? Let us understand in business combination. Control means you should have at least a holding of 51% or more. But here he is only holding 20% shares here, 10% shares here, which means you have to understand, sir, this person is not having any control in the entity. Okay? Yes, sir. So first one, determine the breakup value and market value of both the kinds of the shares. Oh, they are saying, they are asking us to determine the first one, breakup value and market value of both the kinds of shares. The student who have heard this term breakup value for the first time, they will leave this question and they will say that the question is out of syllabus. Okay, this only will happen. The moment they see this breakup value, they will leave the question. But assume this breakup value have not given and this market value also have not given in the question. Assume. Whoever student with the basic common sense will understand that the question have asked you to do the valuation of goodwill. And they have also given some details with respect to profit after tax and all for the previous years, which means definitely we have to use intrinsic valuation. Sir, the question may they have used some different words, but still average student, basic student have to understand that in the question you have to definitely choose the intrinsic valuation. And the second part, Baba, sir, they have given dividend percentage also, na, which means you also have to do dividend based valuation also. Sir, but question may suddenly they are using some different wordings. But fine. Now try to understand, sir, this breakup value is nothing but intrinsic value. And this market value is nothing but dividend yield. It is not out of syllabus, just a name change. Market value is called as dividend yield and breakup value is called as intrinsic value. This is the first point you have to understand. Second point, sir, what should be the fair value of the share if controlling interest is being sold? This is the second point which let us discuss later. Okay, but first point may what they are asking you to do, sir. Determine the breakup value and market value of both kinds of shares. Sir, how you are saying this market value is nothing but dividend yield? Let us try to understand. Sir, here we have calculated the percentage holding of Mr. Kamalesh and we have understood this person is holding 20% of investment in this 10 each fully paid up and only 10% investment in this 6 each fully paid up shares. If you apply your common sense, this person is not at all having any control. If this person is not having any control, he is always interested in how much the dividend is paying. How much the company is paying me as a dividend. This person, the complete interest is only towards the dividend. That is the reason if you observe the word market value, this person is always focused on market value in terms of dividend only. Since they are asked you to sell away his holdings, this person is more interested to calculate the market value based on the dividend. So indirectly, the question is asking me to calculate this market value based on dividend yield. Based on dividend yield. Okay, sir, we have understood the part. First part, though, we have understood. Second part, we will solve the question later. Okay, fine. First question may be, if you observe, if you read the entire question, just read the question and tell me what is the tax rate which they have given in the question. Okay, quickly take 30 seconds and tell me what is the tax rate which they have given in the question. Quick 30 seconds, you have to tell me. Okay, so don't check that much. They have not given any tax rate in the question. Okay, which means profit after tax and profit before tax both are same. Okay, don't check that much. They have not given any tax rate in the question. But profit after tax and profit before tax, since there is no tax rate in the question, both will be treated as equal. This is the first catch. Second catch, sir, they have given something which is this stupid item. The company is expected to settle the disputed bonus claim of 1 lakh rupees not provided for in the accounts. Oh, this 1 lakh item they have not recorded in your books only. Sir, so what we have to do, you have to record that item right now. Please record the item right now. Sir, what is the entry which I will be passing? The company is expected to settle the disputed bonus claim of 1 lakh. The entry which you will be passing is very, very simple. You will write this entry which is bonus account debtor to bonus payable, or you can write to provision for bonus. Okay, anything you can write. Bonus account debtor to provision for bonus. Sir, what is the amount, sir? Amount is basically 1 lakh rupees. So this 1 lakh I will write. This 1 lakh ka entry though I have to pass right now. This is the only adjustment which you have to focus. Sir, they are clearly saying this bonus though have not provided in the account. So provide now. So what is the entry? Bonus account data to provision for bonus account. Remember one thing. While calculating future maintainable profits, this will be expense. This is an expense which should be adjusted because this bonus will be transferred to P&L account. Okay, so this is the first adjustment which you have to make. Second adjustment, sir, while calculating capital employed, this provision for bonus also will be treated as a liability and that also should be adjusted. Okay, let us do the question, then you will understand what I am trying to say. Okay, yes, sir. So quickly check the question ka solution. I think I have already given it. Take this. Sir, first let us calculate future maintainable profits. Sir, normally we have to start with PBT. But in the question though, they have not given any data with respect to tax. So I just have written the word profit here. Sir, 18, 19, 20, 21. Just I have copy pasted the figures. 18, 19, 20, 21. Copy pasted. So 3, 3.5, 4, 4.1. 3, 3.5, 4, 4.1. Okay, sir. Last year may only provide this bonus. Because the entry which I will be passing is bonus account data to bonus payable. Okay, sir. Sir, how much is the amount, sir? 1 is the amount. 1 lakh. Okay, here you have to write rupees in lakhs. Just to check the adjusted profit. Adjusted profit to 3, 3.54, 3.1. Sir, if you read the question, nothing they have given. No prior period adjustment. No non-operating adjustment. Check the question. They have not given anything about investments. No non-recurring items. Nothing they have given. So only one adjustment. Only one adjustment that we have already made, and this will be our adjusted profit. This will be our adjusted profit, and please calculate and tell me whether this average adjusted profit is correct or not. Okay, quickly confirm whether this average adjusted profit is correct or not. Only 5 seconds ka time. Quickly confirm and tell me. Okay. Yes, sir. It is 3.4. Fine. So our first calculation is done for this future maintainable profit, which is 3.4. Okay, sir. Second May, what we will be calculating, sir, we have to calculate average capital employed. Sir, this average capital employed, very simple. Take the fair value of all assets, take the fair value of all liabilities. You exclude 3 assets. First one, goodwill. Second one, fictitious assets. Third one, non-trade investments. That's it you have to remember. Okay, sir. Quickly come to the question. Sir, goodwill they have given, 5 lakh they have given. Normally, we will exclude this goodwill, assuming this as a self-generated goodwill. Yes, sir. But if you read what they have given, they are clearly saying goodwill appearing in the balance sheet is purchased goodwill. Oh. If it is a purchased goodwill, normally I have to include this while calculating capital employed. Arey Baba, if it is a purchased goodwill, normally I have to include this in the calculation of capital employed, na? Yes, sir. Normally we have to add that only, but suddenly they have given something. It is considered reasonable to increase the value of the goodwill by an amount equal to average, something they have said. Sir, what they are trying to say is, sir, whatever the goodwill which they have given in the books now, that is wrong. Oh, because they are saying, please increase the value of the goodwill by something. Sir, what is that something? I don't know right now. If the goodwill is purchased goodwill, normally we have to take this. Sir, but the question itself is saying the goodwill is wrong. Oh, since the question itself is saying the goodwill is wrong, we will ignore this goodwill and we will calculate the fresh goodwill. Try to get the feeling of the question. Sir, the question itself is saying the goodwill is wrong. So why will take the goodwill and again do the goodwill calculation? No, just ignore the goodwill and calculate the fresh goodwill right now. This is the second catch which a student have to do. Oh, goodwill, they are only saying it is wrong. So let us ignore the goodwill, whatever they have given in the question, and let us calculate the goodwill afresh. Okay, sir. We understood the point. So now, other than goodwill, what are the assets which are there? Fixed assets are there, but what is the fair value? 24 lakh. Other intangibles, the market value itself they have given 3 lakh. Sir, other tangible assets ka value also they have given 3 lakh rupees. Very, very simple. Fixed assets 24, other assets 3, intangibles 3. Okay, sir. Sir, come to liabilities quickly. Normal liabilities to 10 they are. But one thing we have to do, provision for disputed bonus. Sir, how much? 1 I have to write. So quickly check this total. Is it the closing capital employed or not? This is also rupees in lakhs. So take 1 minute and quickly compute these amounts, and half of profit also we have to do. Sir, how I got this profit? Simple. Quickly check the last year ka profit. This is current year ka profit, and just take the 50%. Sorry, just take the half. Correct. So 3 by 1, 3.1 into 50%. If you do, you have to get this 1.55. Then your average capital employed should be 17.45. So please confirm this calculation. 17.45. Okay. Average capital employed का calculation is how much, sir? Sir, that is 17.45. So the answer is completing only this goodwill. We have to exclude. That is the first point we have to focus. Average capital employed is how much, sir? 17.45. Yes, I am getting confirmations. It is correct. Oh. Now comes the next part. We have to calculate the goodwill. From now, the answer is very, very simple. Sir, goodwill, sir, super profit into number of years of purchase. Sir, what is the super profit, sir? FMP minus normal profit. Sir, what is my FMP? 3.4. Minus, sir, what is my normal profit? Normal profit money, your average capital employed, that should be multiplied by normal rate of return, which they have given in the question, 10%. Okay, sir. So quickly check this normal rate of return, which is 10%. So my goodwill have to be 4.965 lakh. So quickly check this part, 4.965 lakh. Okay, sir. Sir, but already in my books though, goodwill is there. Sir, how much it is? It is 5 lakh rupees. Already my goodwill may, already my books may, some goodwill is there, and that goodwill is 5 lakh rupees. Oh, now again read this question. Again read this point. Sir, it is considered reasonable to increase the value of the goodwill. Sir, whatever the goodwill is there, let me take the value which is 5 lakh rupees. For this 5 lakh, I will be adding something. Sir, what you will be adding? Sir, I will be adding an amount equal to the average of the book value and valuation made at 3 years purchase of super profit. Sir, 3 years purchase of super profit ka value is 4.965 and my book value is 5. So I have to take the average and this average value will be added. Oh, and this average value will be added, and now my revised goodwill ka value is 9.9825 lakh. 9.9825 lakh will be my revised goodwill. Please confirm, have you understood this part or not? If you do not understood, please read the question once again so that this point will be definitely understood. Guys, this is a tricky question. If this question comes in your exam, you will definitely leave. Trust me. But you guys, those who have practiced this, you will easily get 7 marks because no adjustments are there in the question. Okay, only this goodwill ka point, if you remember, 7 out of 7 will be there in your pocket. Okay, so just check whether this revised goodwill ka point, is it clear or not? If yes, let us move forward. Check the question once again and just get a comfort over this point. If yes, let us move further.
Buying the amount is there, right? They took buy and they put 2 now. You have to.
If it is 2, then you have to take only 4.96.
Like that, they will ask.
That much tricky they don't ask.
I just got confused.
Understood.
Why they added and then I read that.
Since they have given buy only, that also we have to take care, correct? Okay. Yes, sir. I hope this point is clear. Now, sir, I have got the revised goodwill also. Clear. Super. Sir, I have got the revised goodwill also. What is the next step? Next step. So please calculate net assets. Sir, but how I will get net assets? Take the closing capital employed. Plus you have to add goodwill. Sir, goodwill to add this revised goodwill. Oh, that is the reason you have calculated the fresh goodwill. The reason you have calculated this fresh goodwill is only to add here. Okay, sir, I have understood the point. Sir, what capital employed do we have to take here? Closing only you have to take. Don't take the average. Okay, in exam rush, don't take the average capital employed here. You always have to take the closing capital employed only. Sir, if any non-trade investments is there, I will be adding that also. But check the question, there is no non-trade investment only. Okay, sir, this 28.9825 is my net assets ka value. Fine, sir. First part, calculate the breakup value. Sir, what is the meaning of breakup value? It is nothing but intrinsic value per share. Sir, my net assets are 28.9825 lakh. Entire thing is amount in lakhs only. Okay. Sir, number of equity shares are how much? This is again you have to apply the logic. Sir, 1 lakh shares of 10 each and 1 lakh shares of 6 each. Here they are no partly paid up, but multiple face values are there. Oh. If multiple face values are there, we have to just take the equivalent number of shares. Okay, sir. My equivalent number of shares are 1.6 lakh. Sir, how I have to do that? Very, very simple. 1 lakh into 6 by 2, if 6 by 10, if you do, you will be getting number of equivalent shares. This is not at all the new point I have been saying from the first onwards. Okay, sir. So totally 1,60,000 shares are there. 1,60,000 shares are there. Now, if you calculate the breakup value per the share, you will get 18.11 approximately. It is fine. So now the shares are for 10 rupees fully paid, the value is 18.11. Sir, but this 6 rupees fully paid to hai na. So here the value will be 18.11 into 6 divided by 10. Oh. The value comes to 10.87. Basic math. Okay, sir. We have completed the value of intrinsic value per each share. Intrinsic value per each share is completed. You have to take here also, this is amount in lakh. And here 1.6 lakh, 1.6 lakh is the number of equity equivalent number of shares we have to take. And then you have to take the intrinsic value per share. Breakup value 18.11. This to 10.87 will be the equivalent value. Okay. Yes, sir. We have understood the point. We have understood the point. Okay, sir. We have understood. Next. Sir, the question have also asked, where is it? Asked you to calculate the market value of the share. Oh, just now I have explained the logic. Sir, market value means we have to calculate from shareholders' point of view who doesn't have control, because we already have calculated the control. Oh, now the person is interested in dividend and market value will be calculated as per dividend yield approach. The market value will be calculated as per which approach? As per dividend yield approach. Sir, but what is the normal rate of dividend which they have to give? They have not given. Okay, so for that only they have given the data. Sir, but they have given 4 years. Take the average. Simple. So the average comes to 12.5%. 12.5% will be the average. And now, 1 second, guys. Okay. Huh. Sir, we have to calculate dividend per share now. This rate of return, this rate of dividend, please multiply with the paid up value. That's it. 10 into 12.5 will become 1.25 and 6 into 12.5% will become 0.75. Okay, sir. Sir, we just have to calculate the market value of the share. Okay, this one. Market price based on dividend yield. So, sir, 1 point dividend per share divided by normal rate of return. Sir, where you got this 10%? Check the question. Where is it? 10%. Simple. So 1.25 divided by 10% if you do, you will get 12.5, and 0.75 by 10% if you do, you will get 7.5. Guys, please go through the question and check whether you have understood this dividend yield valuation or not. Very simple. Please check the dividend yield valuation and confirm whether you have understood the point or not. Take just 1 minute of time and confirm me. Go with the calculations. So I hope you guys have understood this dividend yield valuation. I got a confirmation. So now let us move quickly to the next part, guys. Okay, so guys, now check the third part. Important. Sir, what should be the fair value of the shares if controlling interest is being sold? Oh, Now they are asking about controlling interest. Sir, what if the controlling interest is being sold? Are Baba, just remember, if you are having a controlling interest, assume you are having more than 50%, then you are not only concerned about dividend. You are not at all concerned about dividend, sir. Then what I am concerned about? You are concerned about earnings capacity of the entity. If you are having a controlling stake, then you are not concerned about dividend, but you are more concerned about earnings capacity of the entity. Oh, sir, earnings means at this time take the future maintainable profits as the base. In case of controlling interest rather than dividend, investor should be interested in FMP. So yield value, now you have to calculate based on earnings. Sir, what is my yield value? Are Baba, your yield value may future maintainable profit is 3.4. This 3.4 will be my average adjusted profit, and now I have to calculate per 1 rupee of capital. Sir, if I have 1 rupee of capital, I should get 0.2125 rupee. Sir, have you got this 16? This time ka calculation already we have did earlier. We have to calculate earning per 1 rupee of share capital, and you have to multiply that value into paid up value per share. Okay, sir. So this will give me 0.2125 per 1 rupee of capital. Sir, if I have contributed 10 each fully paid, I will get 2.125 per share. We'll go outside or what? One second. So I want to give the lock. This side door is there that you can open. Please. Other door is there now. You can open that. Okay, so 10 each fully paid up, then the value will be 2.125 per share. Okay, sir. Sir, if it is 6 each fully paid, then the value will be 1.275 per share. Okay. Yes, sir. We have understood the point. Now, sir, market price based on earnings yield. So EPS divided by normal rate of return. Same here with EPS divided by normal rate of return, and this will be earnings yield based market valuation. Very, very basic math going on. Okay. I think this point is also pretty clear. Sir, now the last point they have asked you to calculate the fair value, I think. Okay, they have asked the fair value if controlling interest is being sold. Sir, fair value is nothing but, if you remember, intrinsic value plus yield basis divided by 2. Intrinsic value plus yield based value divided by 2 you have to do. Sir, yield based value can be anything. It can be either earnings based valuation or it can be either dividend based valuation. Sir, intrinsic value of share though, I think we have already calculated. It is, where is it? 18.11. 6 each fully paid to 10.87. But sir, if you check yield value, now you have to focus on EPS. So 18.11 plus 21.25 plus 10.87 plus 12.75 by 2. If you do, you will get this value. Okay, guys, the answer is complete. The answer is complete. Please practice this after the end of the session. Okay, please practice the sum after the end of the class. Okay. Yes, sir. Yes, sir. We have understood the question. With this, we have completed another typical question. But one basic question which is there, that even though if you don't have, even though if you don't solve this question in CFR, you can still able to do that if you know basic SFM ka formulas. One second, let me cover that point also here only. So where is the problem? Okay, check this thing. Sir, check these formulas. Guys, I think these are the basic formulas which we have already know in your SFM. Sir, What is the SFM? If you check discounted cash flow valuation, very simple. You already know in SFM, you already have good command over this. So value of the firm is you can calculate the future cash flows of the entity, and those future cash flows of the entity ka present value, if you take, that is nothing but your value of the firm. Okay, sir. Sir, but value of equity means value of the firm minus value of outside liabilities. Guys, ultimately we are calculating value per share. Value per share means, sir, I will get value of equity divided by number of equity shares. Sir, but the value of equity, how you will get? I will take value of firm minus value of outside liabilities. I think these are the basic formulas in your business valuation chapter also. I guess if I am not wrong, in this business valuation also, this kind of formulas are there. Okay, business valuation also, these kind of formulas are definitely there in your SFM. Next, sir, cash flows may, if you remember the word which is CFAT, cash flows after tax. Sir, how I will get this figure? You have to calculate. No PAT you have to take. Only pure cash flows after tax you have to take, guys. No PAT means net operating profit after tax. Plus you have to add all the non-cash items. Non-cash items mean depreciation, amortization, sir, any non-cash expense, plus or minus adjustments in working capital. If you remember cash flow statement, cash flow statements may we will be doing some sort of adjustments in working capital. Guys, I am damn sure that you know this formula in your SFM. Sir, how to calculate this no PAT? No PAT, very simple. Earnings before interest and tax into 1 minus tax. Or you can remember this, you can remember like this, sir. No PAT is nothing but after tax EBIT. Earnings before interest and tax ka after tax value, if you do, you will get the value. Or you can do this formula also, PAT plus interest, which is net of tax. Another formula. You can remember this. This is totally fine. EBIT into 1 minus tax. Okay, fine. So the next point, free cash flows for the firm, free cash flows for the equity. I hope you have already know about these formulas also in your SFM or SPM. SPM. Achha, in business valuation, I think you have these formulas also. Sir, CFAT minus capital expenses, CFAT minus interest after tax, plus if any debt is issued, that you have to add. Net debt, I think you can write like that. Okay, fine, sir. And terminal value, this you have already know, I guess. When cash flows are at perpetuity, we will find out the terminal value at such point. Sir, perpetuity, how you will find out, sir? Take the cash flow divided by K naught you have to do. K naught or weighted average cost of capital, both are same. But remember one thing, if you are calculating the value at the end of year 8, you have to always take the cash flow for the year 9. While calculating value at the end of year 8, you have to take the cash flow for the year 9 and divided by K naught or WACC we have to take. Sir, but if any growth rate is there, please deduct the growth rate from the K naught. I hope every formula you know about in your SFM. So I am not touching these points here. Okay, I am sure that you know these formulas also. Even these formulas also, and even these terminal value ka formulas also. I am damn sure that you have know these values. Okay. So please confirm whether you know these formulas or not. If you confirm, after completion of this class, you have to watch, you have to solve one question, one interesting question, which is this question number 12 you have to do. Nothing I have to explain. If you know those formulas, you can aram se substitute the value. Very basic sa question. Okay? Very basic sa question. But you need those formulas. I am not at all explaining this question now because it will unnecessarily take my time. The moment you will practice the business valuation and SFM, you will aram se know this formula. So again, time waste. So, okay. So you can leverage that benefits. Even if you don't know, just by heart these formulas. Just 4 or 5 formulas are there. If you by heart these formulas, more than sufficient for us. Okay. Yes, sir. So with this, we have completed the very crucial chapter, which is equity shares and valuation of shares and goodwill part. Very important chapter. So definite question which I'm expecting, it will come, no doubt about it. 100% it will come. If a question do not come, you can call me and ask me, sir, why it did not come. That much confidently I can say that compulsory question you will get from this valuation of shares and goodwill. Compulsory 7-mark question you will get. Okay. Yes, sir. Now, so the next chapter which I will be starting is, see, it is, one second. So we will immediately start with NBFCs. NBFCs. Okay. Yes, sir. The next chapter which will be immediately starting is NBFC. Just a moment, guys. I will start. Okay. So, okay, sir. Let us understand this concept of NBFCs. Guys, if you check your study material, they have given lots and lots of details from this chapter, NBFC. But trust me, that much is not at all relevant for our examination. So straight away, only those points which are required for our examination, I will be focusing on those points. It will just take some 20 to 25 minutes. That's it, not more than that. Sir, I am listening NBFC for the very first time, but still more than sufficient if you spend quality 20 to 25 minutes. Okay? Yes, sir. Sir, first of all, what is this NBFC? I think you guys have known about this word, which is called as non-banking finance corporations. Okay? The thing is, sir, they will do work of a normal bank only, but still they will not be classified as a bank. Oh. These NBFCs also will do similar kind of a work as normal banking companies do. But the thing is, they will not be given a banking company ka license to them. Okay, sir. They will not be given banking company ka license. Sir, why they have not given banking company ka license? Guys, try to understand. RBI is very stringent. If you want the license of a bank, you have to start with a huge capital. Many liquidity ratios have to be maintained by you. Asset liability norms, too much compliance requirements are there for you. So normal entities though, they cannot afford to get registered as a bank. Or even if they get the license of the bank also, after that they have to do number of compliances. RBI will not leave them. So what will happen is that there are few entities wherein they get the permission to do similar kind of an activities which a banking company can do, but they are not registered as a banker. Those type of companies will be called as NBFC. Simply speaking, this is the basic of NBFC which you have to understand. That's it. Sir, what is the job of general banks? Simple. What the banks will do generally, it will accept the deposits and it will give the advances. That is the normal working of a banker. But if you observe this NBFCs, its main objective is to give advances. But it cannot accept deposits. All NBFCs cannot accept deposits. Oh. Because if it accepts deposits also, moreover, it is just like a working of a bank. So many NBFCs will take this kind of an advantage. So all NBFCs cannot accept deposits. Oh, okay, sir. But all NBFCs will definitely give advances. If you went, for example, if you want to purchase any bike or car on EMI, Sir, who will provide those EMI facilities? If you observe those Cholamandalam Finance and all, those are nothing but NBFCs only. Okay, their main objective is to give advances, but all NBFCs cannot accept deposits. Some companies may accept, some NBFCs may accept. Sir, who will accept? It will have a very high criteria. And if you are an NBFC deposit accepting company, again RBI will place more regulations onto you. Simple. Your operations are more likely of a banker. So RBI will be very stringent upon you. Okay, sir. So that basic is very much, very much sufficient for you to understand the working of this NBFC. So first remember what are the few points, main points which are required from the exam perspective. Okay, sir. First important points, sir, NBFC must have a minimum net owned fund of 200 lakh. Minimum net owned fund of how much it should be there, sir? 200 lakh it have to be there. Sir, how to calculate this net owned fund? Very simple. Please take the share capital. Okay, sir. Take the reserves and surplus. Take all the reserves excluding revaluation reserve. Minus deferred revenue expenses and fictitious assets if there are any. Please exclude those items, and finally you will be getting owned fund. That's it, guys. Sir, owned fund, net owned fund, how much it should be there, sir? It should be minimum 200 lakhs. Sir, I am having 500 lakh net owned fund. Is it enough? Answer is yes. Sir, I am having 300 lakh net owned fund. Is it fine? The answer is yes. Sir, but I am having only 100 lakh net owned fund. It is not okay. You have a compulsory minimum net owned fund of 200 lakh. Sir, first of all, my owned fund is how much, sir? This much will be your owned fund. Okay, sir. Sir, but how you will get this net owned fund? Try to understand. If you have made any investments or advances in group companies, if you made any investments or advances in group companies, and if those investments are greater than 10% of owned fund, up to 10%, no need to deduct anything. But if there are more than 10%, sir, for example, I have made 15% of my owned funds as an investment in group companies, then you have to deduct that 5% ka value. Guys, this also they will not ask in your exam, but only for theoretical part. Sir, if investments or advances in group companies are there, if it is made in excess of 10%, such excess will be deducted from the owned fund. Sir, then what you are saying, the net owned fund ka value will be owned fund minus investments in excess of 10% of owned fund. Sir, I have made 15%, then 5% you have to deduct from this owned fund. And the value which you will be getting is net owned fund. The thing is, it should be minimum 200 lakh. Okay, sir, the first point is clear. Fine. Now, sir, 3 types of NBFCs are there. Yes, sir, 3 types of NBFCs are there. Just now I have explained, sir, all NBFCs are not eligible to accept the deposits. Okay, sir. So the first kind of NBFCs are, sir, NBFC deposit taking. You can denote them as NBFC D. Second type of NBFCs are, sir, NBFC non-deposit taking. Sir, but even though they are non-deposit taking, they are highly important. Second type of classification is, sir, NBFC non-deposit taking, but they are significantly important. Sir, how you are saying that they are significantly important? With the help of the asset size they are having. Sir, what are their assets usually? Arey Baba, advances will be their assets usually. Advances given will become their assets now. So if that assets, if it is more than or equal to 500 crores, then you are a systematically important NBFC. Sir, what is the meaning of non-systematically important? It is nothing but if your asset size is less than 500 CR, then you will be treated as NBFC non-deposit taking, non-systematically important. This will be denoted as NDNSI, Non-deposit taking, non-systematically important. Sir, this sir, NDSI, non-deposit taking, systematically important. Sir, and what is this NBFCD? Deposit taking. Sir, this is nothing but classification of types of NBFCs. Sir, if your asset size is more than or equal to 500 CR, you are big NBFC, but not deposit taking. So NBFC, NDSI. Sir, my asset size is less than 500 CR. Oh, you are a non-deposit taking only, but non-systematically important. Okay, so this is very, very important. So please go through this item. Just make it as a habit of these definitions. So while doing questions, you will aram se understood what I am trying to say. Okay, NBFC, very, very easy chapter from exam perspective. But if you look at your study material, aram se they have dumped too much content. Okay, that much is not at all relevant for you. So quickly check this point and just make these items as a habit. NBFC deposit taking, NBFC non-deposit taking systematically important, and NBFC non-deposit taking non-systematically important. Just to go through these words for 1 minute, and then we'll be doing the classification of the advances by NBFC. Okay, yes, so now sir, we have understood the type of NBFCs also. Now comes the super important from your examination perspective. So I want complete focus. This is the area which our institute will ask 90%. They will ask questions from this area only. Sir, what is it? It is nothing but classification of advances. Guys, try to understand. Sir, RBI is there. RBI will be placing more stringent rules on these two items. If it is deposit taking, anyways, it is a big NBFC only. If it is a non-deposit taking, but if it is still systematically important, then this is also a big NBFC. Okay, sir. This is also a big NBFC, but this though they may not place that much stringent rules. Sir, there is obviously a difference between these two items also. But that is not at all important from our exam perspective. Legally speaking, there are definitely huge differences between those two items. Stringent norms are there. Okay, but the thing is that is not relevant for us. Sir, what is relevant for us? In our exam, they will only ask about classification of advances pay. Simply speaking, they will only ask these provisioning requirements. I think you guys have already know this provisioning requirements in your banking companies. I think in your CMA Inter it is there, correct? Yes. In your CMA Interpay, provisioning requirements for banks, you have already know that. Similarly, there are few requirements. There are few requirements for NBFCs. Oh, Are Baba, listen. These items na for the provisioning requirements, these both are same. Sir, even if you are a NBFC deposit taking or even if you are a NBFC non-deposit taking, systematically important for both provisioning requirements, both will be treated as one and the same. Sir, both will be treated as one and the same. 1 second. Okay, sir. Both will be treated as one and the same. Understood, sir. Now comes the thing. Sir, you have to classify your advances. Sir, what is the meaning of classification of advances? Let us slowly understand with the help of an example. Okay. Huh. Sir, tell me what is the example which you wanted to say. Sir, assume there is one advance. Assume there is one advance which is due on this date, which is 31st March 2025. Sir, this is the date the payment is due. Try to understand. Sir, on what basis you will classify the advances? Very, very simple. Sir, based on overdue. Based on the number of days it is overdue, we will be classifying the advances as standard or substandard or doubtful or lost assets. Sir, what exactly you are trying to say? Let us understand. Sir, assume I have given an advance. I am an NBFC. Sir, I have given an advance of which the EMI, principal ka component also and interest ka component also. Sir, assume both are due on this date, which is 31st March 2025. It should be paid on this date, but unfortunately, sir, assume the payment have made on time. Sir, what is the status of this advance? The status of this advance is it is a performing asset. It is a performing asset. Sir, what is the meaning of performing asset? Performing asset means there are no overdues. There are no overdues, sir, or even if there is any overdue, okay, let us assume one thing, sir, the payment have to be made here. But sir, what have happened is the payment have made after 20 days, which means on 20th April 2025, the payment have been made. Sir, can you consider these 20th April 2025, whatever the advance which is there, sir, can we consider this advance as an NPA? Answer is no. Sir, then when we have to consider that advance as an NPA, let us try to understand. Sir, first of all, we have to wait till 3 months. Till 3 months, the asset will become standard asset or performing asset. Oh, for the 3 months, the asset will be what, sir? The asset will be treated as a performing asset or a standard asset, which means, sir, I have to wait till, you have to wait till 30th June 2025. Sir, my payment have received in between this, then it is a performing asset. But sir, it will become NPA. It will become NPA only after the expiry of 3 months. Oh, sir, from this date, it will be NPA. From this date, okay, till here, the asset is called as standard asset. Sir, the moment those 3 months have completed, from now onwards, the asset will be treated as non-performing asset. Oh, sir, ठीक है sir, non-performing asset तो fine. Next, for the next 1 year, sir, which is till 30th June 2025 tak. Sorry, 2026 tak. This asset will be treated as substandard asset. Sir, first of all, I have to wait for 3 months. After 3 months, the day after the next 3 months, it will be treated as a substandard asset. Sir, the asset is still overdue. Still, I'm not getting the payment. Wait for 1 year. Till this entire 1 year got elapsed, that advance will be treated as substandard only. Oh, sir, this 1 year got completed. This 1 year got completed, and sir, from 1st July 2026 till 30th June 2027, for the next 1 year, it will be treated as doubtful asset 0 to 1. Doubtful asset 0 to 1, which means, sir, you have to wait for 3 months. Once these 3 months are completed, wait for next 12 months. For next 12 months, your asset will be substandard. Sir, 12 months are completed. Now your asset will be doubtful 0 to 1. Sir, another 1 year also completed. Another 1 year means from 1st July 2027 till 30th June 2029. Sir, 1 year is completed now. So 1, 2, 3, Baba. 1, 2, 3. So next year also and another year also, this will be treated as doubtful for the next 2 years. Sir, what if it is more than 3? Then also, Baba, it will be in doubtful more than 3 years. Sir, what about loss assets? Loss assets money, those are completely treated as bad debts. Sir, who will identify the asset as a loss asset? Arre Baba, sometimes the auditor will identify, or sometimes the bank will, sometimes the RBI will say. Sir, sometimes auditor will say, it's okay, your asset is a bad debt, so you have to completely charge provision. Sir, but some assets, though, RBI itself will give you certain guidance. You have to follow that guidance and you have to recognize the loss asset ka provision. You have to recognize the loss asset ka provision. Okay, sir, I have understood the point. Very, very simple. Quickly, if you want to repeat me, sir, I have to check overdue. If it is overdue for less than 3 months, if it is overdue for less than 3 months, it will be treated as a performing asset or a standard asset only, which means it is not a substandard item. It is normally performing nicely only. But once 3 months are completed, but still if you have not received the payment, from now onwards, it will be treated as a substandard asset. Sir, till how many months it will be remaining in substandard asset category? For the next 12 months. Sir, once 12 months are also completed, it will be there in doubtful asset category. Sir, 0 to 1 year, it will remain doubtful. Sir, 1 year is completed. Next, for the next 2 years, it will still remain in doubtful 1 to 3 category. Sir, what if more than 3 also? Then it will be remained in doubtful 3. Sir, what about loss assets, bad debts? Sir, but okay, you are saying that for NBFCs, big NBFCs, deposit taking and non-deposit taking also big, systematically important. The same kind of classification will continue. Sir, what about NBFC, ND, NSI, small wala? So instead of 3 months, take 6 months. Instead of 3 months, take 6 months. And here, instead of 12 months, take 18 months. Balance everything is same to same. Balance everything is same to same. Sir, here, instead of 3, take 6. Instead of 12, take 18. Rest of the things though exactly same. Rest of the things though exactly same. So, okay, sir, we have understood the points. Now, examination के लिए important points you have to by heart. You have to by heart this. Sir, first one. NBFC deposit taking and NBFC non-deposit taking systematically important. Just by heart the provisioning rates 0.4%, 10%, 20%, 30%, 50%. If those are loss assets or unsecured assets, 100% will be the provision. Sir, what about small NBFCs? Instead of 0.4, take 0.25. Rest of the percentages are same to same. So 0.25, 10, 20, 40, 50. Sorry, 0.5, 10, 20, 30, 50, 100. Here 0.4, 10, 20, 30, 50, 100. Guys, just remember these provisioning norms. High chances that in exam they will ask only this. Sir, if nothing is given in the question, whether it is an NBFC, non-deposit, non-systematically important or non-deposit systematically important, we will assume this only. We will assume this only and we will apply these rates. Important. Sir, exam when nothing is given, then please apply these rates and write a note. Apply these and write a note. Very simple. 0.4, 10, 20, 30, 50, 100. That's it, guys. So please remember these provisions and let us solve one question quickly. Okay, so if you want, you can copy these rates also. So take 1 minute of time to remember these, and then we will be aram se copying the things. Another student. Okay. Yes, sir. Sir, 90% of the cases they will ask only this. We will solve few questions also. But sir, what in balance, sorry, 99.99% they will ask similar question. Sir, but what if our luck is bad? If your luck is bad, they will ask this question, Baba. Sir, if an NBFC gives an advance to finance hire purchase asset or leasing equipment, this is a total different question. Okay, you have to definitely solve this question the day before exam. This is a last day revision question. If your luck is good, if they have asked this, definite 7 marks, no chance of deduction. Okay, so that much easy it is. So what exactly it is? Simple. If you are an NBFC, in the question they will give you hint. If you are giving any advance to finance the hire purchase asset or leasing equipment, then they will ask you to calculate the provision. Sir, how I will calculate the provision? Very important. Two types of provisions you have to find out. Sir, what is the first one? General provision. Second one, to additional provision. Sir, what is the general provision? Please tell me fast. General provision money, just calculate the loan outstanding amount. Sir, just calculate the loan outstanding amount. From that, you have to calculate net book value of the asset. Sir, from the loan outstanding, I have to calculate the book value of the asset after calculating 20% depreciation on straight line method. Sir, on 20% depreciation straight line method where you have to reduce the depreciation and balance value will be your net book value of the asset. And the balance book value will be the net book value of the asset. Okay, sir, we have understood the point. General provision you have to find out, and second part may additional provision also you have to find out. Sir, what is the general provision? Just by heart this. Okay, just by heart this. There is definitely logic also. Sir, what is the thing? See, whatever the loan outstanding which is there now, assume you are not able to repay the loan only. Sir, then what we have to do? You have to sell the equipment. Then you have to sell the equipment, and basically you have to realize, sir, assume if I have sold the asset ka value, and see, assume the loan ka outstanding amount is 10 lakh rupees. Sir, I have calculated the net book value of the asset and I have got only 8 lakh rupees, which means 2 lakh rupees. So you cannot realize. Therefore, the 2 lakh should be the general provision which should be recorded in your books of accounts. Sir, why you are reducing 20% SLM? Are Baba, if years are completed, I cannot realize the full value of the asset na. Sir, assume I have purchased one car and that car ka value is 10 lakh rupees. Sir, after completion of 1 year, will I still get 10 lakh rupees if I sell the car? Answer is no. So they have asked you to reduce the depreciation at 20% straight line method. Okay? Yes, sir. So that is the reason why you have to reduce the book value of the loan. Sorry, book value of the asset for which you have taken the lease. After calculating depreciation at 20% SLM, and the balance will be the general amount of provision. Okay, sir. Sir, additional provision also you have to make. Sir, when I will make this additional provision, you have to check depending upon the overdue ka period. Sir, if the overdue ka period is only up to 12 months, no need of additional provision. Sir, more than 12 up to 24, 10%. Nil, 10, 40, 70, 100. This you have to buy heart. Sir, more than 24 up to 36, 40%, more than 36 up to 48, 70%, and more than 48 to 100%. Sir, this you have to remember, because this pay there is one question in a study material. So I'm expecting this question will come. So what is the general provision, sir? Take the loan outstanding minus net book value of the asset after calculating the depreciation at 20% SLM. You will be getting net book value of the asset value. That is my general provision which should be recorded in the books. Sir, an additional provision also should be created based upon the overdue period. Sir, if the overdue is up to 12 months, no need of any book value, no need of any additional provision. Sir, more than 12 up to 24, 10%, more than 24 up to 36, 40%, 70%, and 100% will be the additional provision ka value which you have to create. Okay, sir, we have understood the concept. Now, quickly let us come to problems and we will solve. Quickly let us come to the problems and we will solve. 159. Guys, quickly check this question. Here, nothing you have to do. See, standard assets they have given, substandard assets they have given, secured up to 1 year, 1 year to 3 years, more than 3 years. Unsecured portion may, however it is, you have to apply 100%. Loss assets also 100% always. Guys, nothing you have to do. Just apply the provisioning norms and just do the calculation, and please confirm whether the answer is correct or not. Okay, percentage to be 0.4, 10, 20, 30, 50, 100. Sir, what I have said, if nothing is mentioned about NBFC, whether it is big NBFC or not, we will assume it as an NBFC deposit taking or assume it as an NBFC non-deposit taking, systematically important. So this is the provision ka ratio. So please confirm and tell me whether this calculation is correct or not. 95% exam they will ask this kind of a question only. 95%. So quickly go through the question. Okay. Quickly go through the question for 1 minute and confirm. Okay, so this is correct thing. So that's it. Another similar question is there. Please do it as a homework. Nothing you have to do, nothing I have to explain. Aram, so you just have to explain the provisioning norms. That's it. Percentages only we have to calculate. Okay. Yes, sir. Completed. Everyone is giving me the correct answer. So now check this little bit interesting question. Question number 3. If this question comes in your exam, trust me, most of the students are prepared for this type of question only in the exam. If this question comes, 95% of the students will leave this question. Definitely. I am saying they don't know that this question is there in our syllabus. 95% will definitely quit this question. They will not attempt this. But you guys should not do this. Very, very basic question. So let us try to understand this question. Very simple question. The length of the question is little bit more. Length of the question is little bit more. So please check the question. Let us just highlight only the important portions of the question. Sir, they are saying Samavedan Limited is a non-banking finance company. It accepts the public deposits, big company. Public deposit money, big NBFC, and deals in the hire purchase business. Oh, which means this thing. Hire purchase asset. If an NBFC gives an advance to finance hire purchase asset, you have to calculate the general provision like this. Okay, sir. So quickly check the part. So it provides you with the following information regarding the major hire purchase deals on 31st March 19. The machines are sold on hire purchase basis. The hire purchase price was 100 lakh as against the cash price of 80 lakh. Sir, what they are saying, we are for us, what is relevant is cash price is only relevant for us. Sir, cash price is 80 lakh rupees and higher purchase price is 100 lakh rupees. They have just given to confuse this higher purchase price. Are Baba, what will be doing? We will be taking loan from the NBFC to purchase the asset at a cash price. So will you take 100 lakh loan? Answer is no. You will take only 80 lakh loan and you will purchase the asset on spot. Okay. Yes, sir. The amount was payable as a 20 lakh down payment and balance in 5 equal installments. Sir, out of this 80 lakh though, 20 lakh though I will pay currently and balance amount jo hai na 60 lakh, that is my loan. Balance amount 60 lakh will be my loan. Okay. Yes, sir. The amount was payable as 20 lakh down payment and balance in 5 equal installments. Okay, sir. Sir, they are saying the hire vendor collected first installment as on 31st March 2020. He have collected first installment on which date? 31st March 2020, but could not collect the second installment which was due on 31st March 2021. Sir, first installment though he have collected nicely, but second installment though he have not collected only. Oh, the second installment was not collected. Here they have given some date. The company was finalizing accounting for the accounts. This is not relevant, guys. You have to check as on the date you are preparing the financial statements. Okay, sir, what is the date as we are preparing the financial statements? It is 31st March 2021. So this is the date you have to check. Sir, for which period my asset is overdue, and all those things they will be checking from the date on which you are preparing the financial statements. Okay, sir. Sir, they have given the IRR also 10.42%. Super. If they have did not given this IRR, we have to calculate. But our institute is so kind that they have given this IRR also as 10.42%. Okay, sir. First one they are asking, sir, what will be my principal outstanding as on 1st April 2020? Should the company recognize the finance charge for the year 2021 as income? Sir, the question has asked you to calculate principal outstanding on 1st April 2020. Sir, how I will get this income? Are Baba, just to calculate the amortization schedule, you will exactly understood what I am trying to say. Sir, please calculate the amortization schedule, then you will be exactly understanding what I am trying to say. Okay, sir, 80 lakh is the loan ka amount, but 20 lakh to I have already paid as a down payment now. Sir, see, 20 lakh to one payment and balance will be paid in 5 equal installments, which means I am paying net 100 lakh out of my pocket. 20 lakh to currently and 16 into 5, 80 for the next 5 years. 1, 2, 3, 4, 5. Okay, sir. Sir, what the question is asking you to calculate? The question is asking me to calculate the principal value as on 1/4/2020, which means I have to calculate the value as on 31st March 2020. This will become the opening balance. Okay, sir. Sir, what is the date of the loan? 31st March 19 and 31st March 20. So if you observe, see IRR at 10.42%, if you have to calculate, sir, closing balance for the year 1 will be 60. Because 80 though you have taken, but 20 though you have paid on the opening day only now. Because this is a down payment. So your closing balance will be 60 only. And this 60 will become my opening balance at the end of the year 1. Sir, on this though, 16 will be paid at the end of the year 1. Sir, what will be the finance interest which you have to charge? 60 into 10.42%. If I calculate, I will get 6.25. Sir, 16 is the total installment, out of which 6.25 is the interest. Then 9.75 will be the 9.75 will be the principal amount ka value. Okay, sir. So this amount is 50.25 will be the outstanding amount as on 31st March 2020, and this amount will be exactly same as on 1st April 2020. 31st March 2020 का closing balance will become 1st April 2020 का opening balance. Simply speaking, please prepare the amortization schedule, then you will be exactly getting the first item. Now another question, guys, always remember, sir, if any asset is classified as an NPA, you have to recognize the income only on cash basis and not accrual basis. Basic point we have already covered in your CMA intern. Sir, normally if it is a performing asset, we will be recognizing the income as on accrual basis. But if it is a non-performing asset, you have to recognize the asset ka revenue as on cash basis only. Sir, but try to observe here, sir, what should I say? The due itself is on 31st March. Okay, second installment is itself is due on 31st March 2021. Sir, on the date itself, will my advance become NPA? Answer is no. You have to wait 3 months. So till 3 months, that asset will be in performing stage only now. And even in performing stage also, it should be there for 12 months. Then only it will be called as, sorry, till for the next 12 months, it will be treated as substandard and all. That classification will continue. But here, sir, they are asking as on 1/4/2020, the asset is still a performing asset only. If it is still a performing asset, you have to recognize the revenue as on accrual basis only. That's what they have given in the question. That is the thing which they have given in the first point. You can read this point. Okay, sir. Second point, sir, they are saying what should be the net book value of the asset as on 31st March 2021 so far as Samavedan Limited is concerned as per NBFC prudential norm requirement. Sir, what they are trying to say? Are Baba, simply they are asking you to calculate the net book value of the asset as on 31st March 2021. Sir, what is this net book value of the asset? Are Baba, you have already calculated na. Net book value money after calculating depreciation at 20% SLM. Sir, can you tell me what is the cost of the asset? Sir, cost of the asset is 80 lakh rupees. Sir, how many years are completed? 2 years are completed. Because you have purchased the asset on 31st March 19 and now you are standing on 31st March 2021. 2 years are completed. Sir, but what is the value of the asset? Sir, value of the asset is 80 lakh rupees minus depreciation at the rate 20% for 2 years. If you do, just calculate and tell me 80 lakh into 20% into 2. If you do, 32 lakh will be the depreciation ka value. Sir, my net book value will be 48 lakh. Guys, if you check the answer, they have did some different manner, but totally it is okay. Finally, you have to get the 48 lakh value. You can do like this also or like this also. Like this, I have written net book value of the asset will be after calculating depreciation at the rate 20% SLM. Both are same. Both are same. Okay, sir, we have understood the point. Second point is also completed. Now, 3rd May, they are asking me to calculate the amount of provision. Sir, in this case, we have to calculate 2 provisions. First one, general provision. Second one, specific provision. In this case, though, specific provision itself is not applicable because overdue have not been for more than 12 months. Oh, sir, if the overdue is more than 12 months, then only 10% of provision will be applied now. Since it is overdue, not more than 12 months, we will be calculating only general provision. Sir, but what is the general provision? Let us try to understand. Sir, 31st March 2021 May, if you observe. See, sir, 31st March 2021 May, sir, the balance is 50.25. Sir, the balance is how much, sir? 50.25 is the balance. And sir, 31st March 2021 ka closing amount, if I calculate on this, definitely 10.42% will be accrued. Sir, but I have not repaid this installment now. I have repaid this first installment, but I have not repaid this second installment. Sir, so can you please tell me what is my closing balance? Arey Baba, your closing balance will be 50.25 plus 5.24. Sir, why I should not subtract this 16? The reason is it is not repaid now. Sir, what is the total outstanding amount of my loan? 50.25 plus 5.24 will become your outstanding amount of the loan. Sir, here if you ask me to calculate the amount of provision, sir, here I will write loan outstanding. Sir, how much it is? 50.25 plus 5.24 if you do, you will get 55.49. Sir, from this value, I will be calculating net book value of asset. Sir, what is my net book value of asset? We have already calculated. Here it is 48. Sir, 55.49 minus 48. If I do, I will be getting 7.49. 7.49 as my NBFC ka value, sir. Provision ka value. 7.49 will become my NBFC ka provisioning ka value, sir. That's it, sir. Our chapter NBFCs is completed. So this is the one question which I will definitely ask you to recommend. Please check this question for sure. Damn sure you have to practice this question and mark this question as a last day revision ka question also. Okay? Yes, sir. Very, 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 very important. After that, I have given some basics of points, chotus of points. If any asset becomes NBA, income shall be recognized on cash basis, not on accrual basis. Dividend income will be recognized when it is declared, that is when right to receive is established. Guys, all these points already we have known. This is a little bit new point, so kindly remember this part. Investment in NBFC will be classified in two. If it is long term, valued at cost. If it is short term, you have to check, sir, whether it is quoted investments value at cost or market price, whichever is lower. And you have to do category wise ka calculation, not individual security wise. All these are basic points. Just check 2 times, you will aram se remember. Sir, but what if the quote, what if the investments are unquoted investments? If those are current, please value at cost or breakup value, whichever is lower. Sir, what is this breakup value? Just now we have understood. This breakup value is nothing but intrinsic value of the share. Oh, sir, this breakup value is nothing but intrinsic value of the share na. And this unquoted investment in preference shares, cost or face value, whichever is lower. Guys, nothing I have to explain, just to go through these points. Even if they ask in MCQs also, aram se, you, with your brain also, you can aram se attempt this kind of a questions. Okay? So that's it, guys. We have completed another section of important things, which are NBFCs and valuation of shares. So strictly speaking, 28 marks are there in our pocket. 28 marks are there in our pocket from 70 marks. So next, our next agenda will be to start super important chapter, which is business combination, Okay? Yes, sir. So I want to stop today's class till here. And I will let you know, probably we can start at 9 o'clock. Okay, 9 to 9:15, let us start the next session. So till then, that's it, guys. We have completed NBFC also. So please revise what we have discussed. Again, I am saying this NBFC though is little bit ignored chapter, as most of the students will definitely ignore this. As a student, me also, while studying CA Inter, I have ignored this NBFC chapter. But trust me, one question have come in the exam which I have no idea about. Okay, I lost 5 marks. So, but you should not lose. You should definitely get 7 out of 7 marks. Okay, so that's it, guys. I just want to stop today's discussion till here. Next, we will start with business combinations. Okay, yes, sir. If you have any doubts, please let me know. I'll stay for another 2 minutes. If you have any doubts, you can stay. Otherwise, you can go.
Light influence. Or light on.
Night only. I'll let you know.
Oh.
I'll ping in the group. So, hi guys. So we have already completed internal reconstruction in the last classes. So now let us move to another comprehensive, very important standard from the examination perspective, which is IndAS 116. 116 is also very comprehensive standard from examination perspective. Either one question from IndAS 115 will be asked in the examination, or another question from IndAS 116, or there is a possibility that sometimes if the institute wants, they may ask one question related to IndAS 102 as well. If you remember, I have categorized this leases and IndAS 102 as B category chapters. The thing why I have categorized those B category chapters is you need to place little bit of efforts to understand these concepts, because it is not that much simpler. But again, I am saying this is not that much difficult also. Conceptually speaking, very easier standard this leases. Okay, so around say let us discuss from the very basics itself and let us understand the things. Okay, fine. So first of all, what we'll be doing is, let me just open the running notes. Okay. This one. So yes, let us try to understand things, guys. So first of all, if you remember this IndAS 116 though, in your CMA Inter days, if you remember, you guys have to understood, sir, that we have already know something about AS 19, which is also an accounting standard which will prescribes the accounting treatment for the leases, which we have already heard in intermediate level. But the thing is, I am assuming you guys have not remembered anything from this AS 19. Even if you remembered, it is fine. Okay. If you don't remember anything, then this IndAS 116 is very easier for you. If you have some, what should I say, if you remember some parts from the standard, then try to understand the difference between this AS 19 and IndAS 116. Okay, fine, sir. The first point a student have to observe is, from the viewpoint of lessee, lessee and lessor, we will discuss those two terms. Okay, I think you guys have already know this. There are two terms, lessee and lessor. Okay, the person who gives the asset on lease is called as lessor, and the person to whom the asset is given as a lease is called as lessee. If you remember, sir, we have totally two types of leases that we have remembered from our intermediate days. One is operating lease, another one is financial lease. If you remember, Sir, operating lease or financial lease you have to classify. You means lessee or lessor both have to classify one type of lease as whether it is an operating lease or a financial lease, and they have to proceed with the accounting accordingly. But the thing is, the good point in this IndAS 116 is we don't have to do separate accounting treatment in the books of lessee whether it is an operating lease or whether it is a financial lease. Which means, sir, the standard is having only one standard accounting treatment for the lessee books, whether it is an operating lease, whether it is a financial lease. Try to understand. In both the cases, what IndAS 116 is assuming is, sir, in both the cases, lessee is using the asset which is belonging to lessor. So if you just observe substance over form, sir, whether it is operating or financial lease, in the books of lessee, nothing is actually changing. Because lessee is after all using the asset which is held by the lessor, whose ownership is with the lessor. Now the now the lessee is only using the asset. So IndAS 116 is saying, okay, you may have learned some different accounting treatment in the books of lessee, either for an operating lease or a financial lease. But the thing is, from lessee perspective, if you observe the substance over form, if you observe, just a second, if you observe the substance over form, in both these cases, we will be having only one accounting treatment. We will be having only one accounting treatment. This is the first basic you have to understand. Okay, sir. Only one thing will be there. Sir, what exactly is that accounting treatment and all? Let us slowly understand in steps. Okay. So first, if you observe these notes, first I have written some normal things. Sir, what are these normal things? Chotusa points. Leases is applicable to all assets. For example, sir, assume I have taken one building on lease. For this, IndAS 116 is applicable. Answer is yes. I have taken one machinery on lease. For this, IndAS 116 is applicable. Answer is yes. Which means I can say that IndAS 116 is applicable to all leases except 106. We are having a separate standard, not that much important from examination perspective, so you can just read this once and you can forget. Biological assets, sir, biological assets, though we have remembered in IndAS 16, though you have some discussion with respect to this biological asset, wherein we have understood the meaning of a bearer plant and all. So for biological assets, what they are trying to say is, Are Baba, if you have taken any biological asset on a lease, don't come to IndAS 116. Go to IndAS 41, because separate treatment is there now. Okay, sir. Sir, another thing is service concession agreements. Sir, what is the meaning of service concession agreements? This we will be discussing in IndAS 115. Since a separate standard is already there for this service concession agreements, don't come to IndAS 116. Don't come to IndAS 116. Sir, rights held by lessee under licensing agreements. Some sort of discussion we have already made in IndAS 38. IndAS 38, for example, any trademark or copyright or franchisee, if any licensing related rights if you are having, don't come to IndAS 116. IndAS 38 may they have given some guidance with respect to this point. Okay, fine, sir. So this is totally fine, not that much important from examination perspective. Aram se we can ignore this. Now comes the second part, little bit important. Sir, what is the meaning of second thing? Practical, expedient or optional exemptions. Whatever I am saying, this practical, expedient and optional exemption, that is only from the perspective of lessee, which means lessor don't have any option. He have to follow IndAS 116 only. Lessor to have to definitely follow IndAS 116. But what they have said is, okay, for some entities, if you are a lessee, for you, practical expedient will be given. Said, what is the meaning of practical expedient? Let us try to understand. So first one though, if you want, in these two cases, don't apply IndAS 116, because you will slowly understand IndAS 116 is not that much easy. You have to find out many things. You have to find out the incremental borrowing rate. You have to find out the ROU asset. You have to find out the lease liability. You have to unwind the finance cost in each finance year. You have to depreciate the ROU asset. All those things will be discussed in detail, very briefly. Okay, very detailed manner you are going to discuss all the things. But the thing is, this lease accounting itself is very crucial, very complicated. So what they are saying is, if you are taking any item of lease, and if it is for short term, don't follow IndAS 116. Don't follow IndAS 116. And what they are saying is, you can aram say choose normal thing only. Sir, what is a normal thing? Simple, Baba. As and when you are paying lease rent, just charge the same to P&L account. You have to recognize an expense on SLM basis over the lease period. Sir, what if it is a short term lease? Sir, what is the meaning of short term lease? Short term lease money up to 12 months lease period. Okay, sir. Second item, the low valued assets. Because if you observe, financing component will not be there generally if the term is less than 1 year. So that is the reason the standard is saying, okay, don't follow IndAS 116. This though they have provided in the standard itself in the name of practical expedient. Practically speaking, this IndAS 116 will become more complicated to the users of financial statements. Since the lease period is very short term, I don't want to follow IndAS 116. But remember, this is only applicable for the lessee. ठीक है सर. सर सेकेंड आइटम तो लो वैल्यूड एसेट्स. अरे बाबा, इफ योर एसेट का वैल्यू इटसेल्फ इज वेरी लो, don't follow IndAS 116. For example, sir, assume there are software companies. Software companies का main job itself is they will be providing laptops to all those employees. The thing is, if you observe, they will be giving bulk. They will be giving all the laptops on a bulk. They will not purchase, guys. They will take all the laptops on lease from some other companies. If you observe, many companies will take like this, some 10,000 laptops, 20,000 laptops. Lease period though very less only it will be there. For example, 12 months or 24 months like this only. The value of each item is very low. The value of the computer is there na. Computer ka lease value, computer ka whatever the asset ka value itself is very low. Sir, if the asset is that much insignificant, if I follow entire IndAS 116, first of all, that is not that much material from the user's perspective. So why waste my precious time in follow this accounting? This much in-depth ka accounting itself is not required, because the value of the asset is very insignificant or very low. Sir, if the asset is low valued, then what is the accounting treatment which I have to follow? Arey baba, very simple. Just as and when you have paid the lease rent, please debit the same to PL account. No IndAS 116 is required. To summarize, IndAS 116 is not applicable in two cases. So first case to short term assets, second case to low valued assets. Sir, in these two cases, what I have to do? Please recognize as an expense on SLM basis over the lease period. Over the lease period. Okay, fine, sir. Now you have to understand another thing. So first of all, you have been saying lease from last 10 minutes. So can you please explain us the definition of the lease which they have given in the standard? Okay, sir. So lease is nothing but a contract. Lease is nothing but a contract which conveys the right to control the use of an identified asset for a period of time. Try to understand these three words. Lease is nothing but a contract which conveys the right to control the identifiable asset ka use at a given point of time. Let us break the definition. So first of all, contract should be entered between two parties, lessor and lessee. Lessor is the one who is giving the asset on lease. Lessee is the one who is taking the asset on lease. Now try to understand. Sir, whoever the lessee is there, that lessee should have the right to control the use of an asset. Lessee should have the control to lessee should have the right to control the use of an asset. For example, sir, if I have taken one machine on lease from A Limited, I have to control what I have to do with the A Limited. Sorry, what to do with that machine. Sir, A Limited is saying A Limited have only given the asset on lease, but the thing is, control to is still there with A Limited only. Guys, this is not a lease. In order to call it as a lease, right to control the use of an asset should be given to lessee. That is the first part. Which means lessee must obtain the economic benefits from using the asset. So whatever the economic benefits which I got from the machinery, that lessee have to enjoy, which means me have to enjoy. Second thing, to direct the use of an asset, sir, how to use that asset should be decided by the lessee, and lessor do not have any intervention. Lessor ka job only to receive the lease rentals and to receive the residual value at the end of the lease period. That is only lessor ka job. How to use the asset and whatever the benefits which are receiving from the asset and all will be taken care by the lessee only. I hope this point is clear. It is a contract which conveys the right to control the use of an identified asset. Another important thing, sir, asset should be specifically identified either explicitly or implicitly. Sir, what is the meaning of explicitly or implicitly, and what is the meaning of this identified asset? For example, try to understand. I have entered a contract with some transport company, to provide a cab. Okay, I have taken that on lease. Now, sir, the cab company, for example, travels ka company is there now. It is having some 20 cabs. Depending upon the comfort of the cab company or travels company, sometimes it will be sending one Innova car. Sometimes it will be sending one Ertiga. Sometimes it will be sending Fortuner. Sometimes it will be sending Indica. And sometimes they will be sending Mahindra. Oh, in this contract now, asset is not identified. Asset is not specifically identified. Depending upon the comfort of the supplier or the lessor, asset will keep on changing. If this is the case, IndAS 116 says it may be a lease as per your normal contract, but as per IndAS 116 though, since the asset have not been identified, I cannot follow the accounting treatment as per IndAS 116. Sir, here what I have to do, please debit the expense to PL account. Third part though, for a period of time. Sir, what is the meaning of period of time? Period of time means over the lease period, which will be generally mentioned in the contract, lessee will get the right to control the asset. Okay? Asset must be explicitly or implicitly mentioned in the contract. Okay? Or it can be like this also. Sir, I only have one car. I am a travel company. I only have one car. Now you have to understand. Sir, here though I have entered the contract with the car company, correct? Okay, they have not specified whether it is Indica or Fortuner because they are only having one car. So that car only will be directly sent to my, or should I say, employees, which means this is explicitly identified in the contract. Anyways, it should be identified asset. It should be a specific asset, then only this leasing car standard will be applicable. Sir, period of time means over the lease period, which means once the lease period got completed, lessee have to hand over the asset to the lessor. Lessee have to hand over the asset to the lessor. Okay, fine, sir. We have understood the definition of the lease. Now comes the next part, guys. Now comes the next part, sir, which is called as inception date of the lease. Inception date of the lease. Sir, what is the meaning of inception date of the lease? Little bit technical term, so let us understand these things. First one though, the date of lease agreement, which means the date on which the lease agreement have been entered from by the lessor and lessee. Take the lease agreement ka date, and this should be compared with the date the parties committed to the principal terms of the lease. Oh, which means from the date, if they want to make any renovations, for example, let's see, have said that, okay, I have understood this place is fine, but I want some renovation which should be done at this place. Okay, so only when the party have committed to the principal term of the lease, which means after this renovation gets completed, then only I will be using the asset as per my requirement. So now take these two dates. and whichever is earlier will become your, whichever is earlier will become your inception date of lease. Whichever is earlier will become your what, sir? Inception on the date of the lease. The date of agreement or the date when the parties commit to the principal terms of the lease. Whatever terms are there in the lease, I have already committed to all those terms. So these two dates ka earlier date should be taken as inception date of the lease. As inception date of the lease. ठीक है sir? Yes sir, we have understood the concept till here. Without making any further delay, let us directly start with the accounting treatment in the books of lessee. Very important. 95% they are going to ask the question from this lessee only. Okay, so you guys should be having complete clarity on this aspect. Okay, fine. So okay, sir, let us try to understand, guys. But before starting, I just wanted to give you one example with one practical kind of, one example I will be taking so that you will be getting a comfort over this. Sir, A Limited is there. A Limited have entered a leasing transaction with another entity which is B Limited. Both have entered into a lease. So in this case, B Limited is the one who is providing the asset, and A Limited will be the one who is taking the asset on the lease. In this case, sir, A Limited will be treated as lessee and B Limited will be treated as lessor. Try to understand. A Limited is lessee and B Limited is lessor. Okay, sir? Okay, sir. Now try to understand the things. So what have happened is, A Limited have entered into a leasing transaction with B Limited. So they have decided to take the machinery on lease. Take the machinery on lease. Sir, at what value they wanted to take, sir? Sir, they wanted to take the machinery. Every year they should pay. Every year they should pay 1 lakh rupee lease rent. Sir, for how many years, sir? Lease period equals to 3 years. Guys, now try to understand what the standard is saying. This A Limited have to pay lease rental of 1 lakh rupees every annum. 1 lakh rupees every year they have to pay for a period of 3 years. A Limited have to pay 1 lakh rupees lease rent per annum to B Limited for how many years, sir? 3 Limited. Smart student will understood, sir, that I am having a liability. A Limited is having a liability, and that liability is nothing but a lease liability. Students who are having a basic knowledge of IndAS will understand, sir, whatever the value which is there now, I will be calculating the present value of the lease rentals which I have to pay over the lease term, and this will become my lease liability. Try to understand. Sir, I cannot say that the total lease payment is 3 lakh rupees because there is time value of money which is involved here now. So rather than taking 3 lakh rupees, I will only take present value of the 3 lakh rupees. Present value of the 3 lakh rupees I will be taking. Sir, if I want to take the present value, there should be some discounting rate which should be there. Sir, if I want to take the present value, sir, what should be there, sir? There should be a discounting rate. So smart student will understood, sir. ठीक है sir. In this lessee books में lease liability is going to come. Sir, at what value I have to record the lease liability? अरे बाबा, take the present value of the lease payments. Take the present value of the lease payments, and that present value of lease payments जो है ना, that present value of lease payments, that will become your lease liability का value. Sir, in order to calculate the present value, I need two items. First one to lease rent I need. Second one to discounting rate also I need. ठीक है sir. Now there is one point which a student have to understand here. Sir, this A Limited have to pay 1 lakh rupees per annum for the lease period, which is 3 years basically. Now, sir, for these 3 years though, However I want, I can use this machine because I am paying lease rentals. According to my customization and my requirement, I have total control over the use of the asset. How to use the asset will be completely determined by A Limited only. B Limited cannot intervene with A Limited, and they cannot say that no, you don't use this machine, you should not use this machine for this purpose. Like this, B Limited cannot place any restriction. Guys, try to understand my wordings very carefully. Sir, here I am saying A Limited is having the right to use the asset. For how many years? Of course, for 3 years. Because once this 3 years got completed, A Limited have to revert the asset back to the B Limited. Now, IndAS 116 is very simple. Are Baba, since you are having the right to use the asset for the next 3 years, that right to use is there now. Right to use will become asset. That right to use will be recognized in A Limited ka books as an asset. Try to understand. Sir, this machinery will not come in books of A Limited because A Limited is not the owner, guys. But B Limited is the owner, and B Limited have entered into a lease contract, which means A Limited, though control of the asset is not transferred, but control over right to use of the asset have been transferred. Control is not transferred, but I have a control over right to use the asset. Oh, which means I am having right to use the asset for the next 3 years, which is nothing but the lease period or lease term. Try to understand, guys. Whether it is a operating lease or a finance lease, lessee is having the same right to use the asset, right of use the asset. And second thing though, sir, he have to pay the lease rentals for sure. So you will be calculating the present value of such lease rentals with, of course, some discounting rate. So they will give in the question. Okay, sir. So I will be calculating the present value of the lease rentals which are discounted at some rate. I will be getting my lease liability. I think that point is pretty clear to you, sir. But another thing is, lessee also have something which is called as right to use the asset for the lease term. So the standard is saying you have to recognize this right to use asset also. Keep these basics in your mind. Okay, come to the notes. Try to understand. Sir, lessee should recognize, one second. Lessee should recognize lease liability and ROU asset as on commencement date, which means the date on which asset provided to lessee by the lessor. Guys, you have to remember very carefully, whatever the accounting treatment which I am saying, that will be done on the date of the commencement. On the date of the commencement is nothing but the date on which asset provided to lessee by the lessor. The date on which asset is provided to lessee by the lessor. This date though, on this date, lessee have to recognize two items, guys. Sir, first one though, lease liability. And second one though, ROU asset. Sir, what is this ROU asset? ROU asset is nothing but right of use asset. Sir, again I am saying asset will not be there in lessee ka books. Asset will not be there in A Limited ka books because A Limited is not the owner. Sir, then what will be doing? Record something which is called as right of use. Asset will be there in this B Limited ka books only. Whether B Limited will keep or not, let us discuss later. But our first objective is to understand the accounting treatment in the books of lessee. Okay, sir. Lessee. So two items. Lease liability also I have to record, and ROU asset also I have to record, sir. Okay, sir. Sir, how to record this lease liability? Are Baba, I have already said this point now. Sir, we have to take the present value of the future lease payments over the lease term by using the discounting rate. By using the discounting rate. Sir, what is the discounting rate, sir? From the starting onwards, you are saying the discounting rate, discounting rate, discounting rate. You have to take the implicit interest rate or lessee ka incremental borrowing rate you have to take. Sir, what is the meaning of implicit interest rate or lessee's incremental borrowing rate? Please let us understand. This implicit interest rate is nothing but IRR in the books of lessor. IRR in the books of lessor. Sir, what is the IRR? If you remember financial instruments ka chapter, we have did this IRR ka calculation by trial and error method. This is nothing but implicit interest rate means IRR for lessor you have to calculate, and that should be your first preference, guys. This will be always given in the question. Don't worry. Sir, but what if they have not given? Then you have to calculate the IRR for the lessor. Sir, what is the meaning of IRR? At what rate of return? Lessor ka future cash flows will be equivalent to the cost of the asset. That will become my IRR. That should be the first preference. ठीक है, lessor का IRR. I am not going into in-depth. Sir, if lessor ka IRR is not given, then we have to go for lessee's incremental borrowing rate. Sir, what is the logic why we have to take lessee's incremental borrowing rate? Guys, try to understand. Sir, first of all, why the lessee is taking the asset on the lease? Because he don't have money. If he have full money, what he will be doing is he will be purchasing the asset. Since the lessee is not having full amount, he is taking loan. So at what rate of interest? If you borrow, what is the rate of interest which is applicable? And that is called as lessee's incremental borrowing rate. Implicit interest rate or lessee's incremental borrowing rate. Your first preference, always give to implicit interest rate. If it is not given, then we have to take this lessee's incremental borrowing rate. In question, 99.99% they will give discounting rate in the question. Okay? They will not make it that much complicated because they will anyways ask only one question from 7 marks. So 99.999999% this lease liability ka discussion to they will be giving. Discounting rate to they will give, don't worry. Sir, next what we have to do, sir? You guys have already know that part now. Sir, what we have to do? Arre baba, prepare amortization table. Year, take that, opening balance, finance cost, lease installment and closing balance. That's it, guys. Repeat the process till the finance term. Till the lease term. Very simple. Lease liability ka calculation is most easiest part. We have been doing this number of times, but we have to take the present value of the future lease payments. Only one thing you have to remember is this discounting rate. Sir, what is the discounting rate? Implicit interest rate. Sir, what is the meaning of implicit interest rate? Implicit interest rate is nothing but IRR for the lessor. Implicit interest rate is nothing but IRR for the lessor. Okay, sir? Fine. At each reporting period, interest cost on lease liability will be recognized in P&L account as per amortization table. Okay, sir. Now comes the next part. Guys. Sir, it is nothing but ROU asset. Try to understand. Sir, ROU asset will be initially recognized at cost. ROU asset will be initially recognized at which value, sir? It will be recognized at cost. One thing you have to remember, sir, on this ROU asset also, I have to charge the depreciation. Try to understand. This ROU asset is very similar to other PPE. If I purchase the asset, assume it is a plant and machinery. Okay, in my books though, what will be there? Plant and machinery will be there. But now, sir, I am not purchasing. What I have did is I have taken the asset on the lease. So plant and machinery will not be there in your books, but what will be there? Right of use the asset will be there. What will be there, sir? Right of use the asset will be there. Okay, sir. So here what they are saying is, sir, depreciation will be charged on ROU asset over the lease period of the asset. This is important. This is important, sir. What they are trying to say is depreciation will be charged on ROU asset over the lease period of the asset. Okay, sir. ROU asset over the lease period of the asset. Fine, sir. Sir, simple. See, ROU asset ka value, sir. Assume I have calculated, sir. How to calculate? Just wait for a moment. You will understand. ROU asset ka value, sir. I got 15 lakh rupees. How to calculate? Wait for a minute. Sir, lease term to they have given. Sir, lease term to 5 years. Lease term to 5 years. ROU to 15 lakh. ROU to 15 lakh. Lease term to 5 years. Now, if you observe, sir, I have to do the depreciation. Sir, this 15 lakh will be depreciated for 5 years. Sir, which means my annual depreciation will be 15 by 5, which means 5 lakh rupees will be my annual depreciation. ROU asset will be depreciated over the what should I say, lease period of the asset. Please check the lease period, and ROU asset will be depreciated over the lease period of the asset. But sometimes what they will be saying is, see, usually what we'll be having is that there will be two things which is called as economic life of the asset, and the second thing to what should I say, lease term. Economic life of the asset and lease term. Sir, what is the difference between these two? Try to understand. Sir, economic life is nothing but total useful life of the asset. Sir, assume the total useful life of the asset is 10 years and lease term is only for 3 years. Now try to understand. Whatever the ROU asset is there, now that ROU asset should be depreciated based on this lease term, which is 3 years only. Try to understand. Based on this 3 years only, it have to, okay, so a small mistake. So here I think it should be 3 lakh rupees, correct? 15 by 5, 3 lakh. Okay, sir. Sir, lease term to 3 years. Now, whatever the ROU asset which is there, now that should be depreciated over these 3 years only. Now, sir, sometimes what they will be doing is, in this lease contract measure, once this 3 years got completed, lessee will be giving an option. What lessee will be giving an option is, lessor will say that, lessee, if you want, you can purchase this asset at the end of the 3 years. Even if the lease period got completed, we will be giving an option for you to purchase this asset at a concessional rate. To purchase this asset at which rates are concessional rate. And assume the lessee wanted to purchase the asset. Assume the lessee wanted to purchase the asset, because see, lessee though the asset is very comfortable now. He have been using the asset from the last 3 years. Sir, if I want some new asset currently, I don't think my workers will be habituated to that machine, because old asset though workers are more habituated to that machine, and also I will be having few benefits. So some lessees will take this option to purchase the asset at the end of the lease period. Now the standard is saying, if you read this, if lessee is reasonably certain to exercise the purchase option at the end of the lease term, depreciation will be charged over the useful life of the asset. Depreciation will be charged over the useful life of the asset, which means in this case, my useful life or economic life is how much, sir? 10 years. So depreciation should be charged over this 10 years if you want to exercise the purchase option at the end of the lease term. Because here they will use the word, if it is reasonably certain to exercise the purchase option. If you are reasonably certain, then what you have to do is you have to aram say charge the depreciation over the useful life, not just the lease period. Okay, fine, sir. Just a moment, guys. I'm just checking the things. Okay. We'll be solving one question anyways. No need to worry at all. Okay, you will be aram se understanding all the things, guys. So now the third point or the fourth point, which means what is the meaning of lease payments? Because if you observe here, while calculating lease liability, I have written something which is called as present value of the future lease payments. Future lease payments ka present value I have to take, and that present value will become my lease liability. ठीक है, फाइन. Now check this fourth point. Check this fourth point, numerical point, guys. Very, 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 very important. Very, 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 very important. Try to understand this. Super duper important because numericals are being involved in this step. Okay, fine, sir. How? Lease payments. Sir, lease payments are nothing but very, very simple. Payments made by lessee over the lease term. आराम से. Payments made by lessee over the lease term. Sir, what is the meaning of payments made by the lessee over the lease term? Arey baba, आराम से. Simple. Just look at the lease agreement. By looking at the lease agreement, you will be understanding what all the payments which are included in this. First, it includes fixed lease payments. Guys, fixed lease payments means it is not, for example, sir, assume this 3 years. 3 years period is there now. Sir, this 3 years to the lease rent is 1 lakh rupees. Okay, and assume the things are, so sometimes what they will be saying is, sir, 1 lakh rupee in the first year, 1 lakh 10,000 in the second year, 1 lakh 20,000 in the third year. These are also fixed lease payments. Fixed lease payment means there is no need that they have to be same. They should be fixed in the lease term. They have to be, fixed in the contract is what they are trying to say. Okay, fine, sir. So 1 lakh, 1 lakh 10,000, 1 lakh 20,000. This is there now. This is the lease term. These are the lease payments, and these are called as fixed lease payments. Minus, remember very carefully, sir, if any lease incentive is received from the lessor, this they will mention in the question. Sir, assume the lease rental is 1 lakh rupees, but lessor is saying, okay, some improvements, because of some improvements, what I am doing is, I will be giving you 50,000 rupees. I will be giving you 50,000, and this 50,000 is called as tenant reimbursement, or this is also called as lease incentive, which is promised by the lessor to the lessee. Sir, what will be my net lease payment which I have made? This 1 lakh though you have made, but 50,000 though, since it is reimbursed by the lessee, this should be deducted, and net 50,000 will become only your lease rent. And 50,000 only will become my net lease rent, that you have to understand. Okay, fine, sir. So whatever the net lease payment is there now, only that net lease payment only you have to take. So if you observe this part, fixed lease payment minus lease incentives received from the lessor. Okay, so second part though, payments linked to interest rates or index. Sometimes they will give this consumer price index. Whatever the payment which you are making now, if that is linked to interest rates or index which is consumer price index, this also they will give in the question. First of all, in most of the cases, lease rents are fixed. Lease rentals are fixed in nature, but sometimes what will happen is, lessor is worried that sir, future may there is huge changes in interest rates, or assume in future though there are huge changes of this consumer price index and all. So if I charge these fixed rentals only, there are high chances that I am going to lose some revenue in the future. So lessor knows this point, and he have decided to include some sort of variability element in the contract. Sir, how it will be done? Simple, just collect variable rent. In the lease agreement only you have to mention this, okay, I will be collecting lease rental which is depending upon the interest rate. If interest rate on the outside market is higher, obviously I will be collecting more lease payments from you. Basic sense. Since he is worried about the interest rates, or since he is worried about the consumer price index, sir, consumer price index too is severely increased. So this existing rental though will never sufficient for my needs. So the thing is, what I will be doing is, rather than fixing a fixed amount of lease payments, I will say that depending upon the consumer price index, your rentals will be decided. This is the meaning of variable rentals. Even these variable rentals also should be included in the lease payment ka calculation. Even these lease payments, variable lease payments also will be included in the lease payment ka calculation. But students will be getting some doubt. Sir, what is that doubt? Arey baba, this interest rate or index are there na. those you will never know as on current date. Because, sir, why we need these lease payments? We need these lease payments to recognize this lease liability. Sir, this lease liability will be done on the date of commencement of the lease. Oh, so on the date of commencement of the lease, I have to calculate the lease liability. So on this date, I have to estimate. On this date only, I have to calculate these lease payments. So whatever the interest rate which is there now, I will expect that this interest rate will be continued in the future. And I'm damn sure this interest though will not be there exactly. Of course, there will be some differences because that is variable. Since that is variable, there will be some differences. But the thing is, while making estimation, while making initial estimate of this lease liability, you have to even include these payments linked to interest rates or index also in the lease payment ka calculation. We will have questions. So complete information you will get after solving the question. ठीक है सर. Third point though, sir, exercise price of the asset if it is reasonably certain that lessee will purchase the asset. See, sir, in this lease term though, sir, what have happened is 3 years is the lease term. Lessor have given the option to lessee that once this 3 years got completed, I will be giving you an option. If you want, please purchase the asset right now. I have already said now, sir, this A Limited though is very much comfortable with the asset. So rather than purchasing a complete new equipment or complete new machine, it can take this asset only now. If it takes this asset, obviously A Limited have to pay purchase price also at the end of the 3rd year. It will calculate the fair value. Okay, it will be given in the contract only. So that value though A Limited have to pay to the B Limited. Therefore, that purchase price which will be made at the end of the 3 years also should be included in lease liability ka calculation. Guys, simply speaking, these lease payments are nothing but all the payments which need to be paid by the lessee over the lease term will be included. Okay, fine. Last point. Guaranteed residual value paid by the lessee. Sir, first of all, what is this guaranteed residual value paid by the lessee? Try to understand. Sir, this B Limited is there now. Machine is there in the B Limited books only. A Limited have taken the asset on the lease. Sir, now what have happened is once this lease period got completed, assume there is no extension option and the company also don't want to purchase the asset. Sir, now what have happened? Now what have happened is, try to understand. After this 3 years got completed, A Limited will return back the asset to B Limited. Sir, assume the useful life of the asset is also 3 years. Sir, I have estimated the residual life of, the residual value of this asset is 1 lakh, sorry, not 1 lakh, it is just 20,000 rupees. 20,000 rupees is what I have expected. This is the total residual value, total estimated residual value. B Limited is expecting once these 3 years got completed, if I sell the asset in the outside market, I will be getting 20,000 rupees. But B Limited is little bit worried. B Limited is worried. What if the employees of A Limited have used the machine very carelessly? They have completely, continuously used the machine for the entire 3 years. So now, if I sell outside now, I will be getting only 2,000 rupees. I will be getting only 2,000 rupees. So this B Limited don't want this to be happened. B Limited is asking A Limited, you have to give some guarantee to the residual value because I cannot trust A Limited ka employees na. How much carelessly you use, my residual value will be reduced that much. So the thing is, you have to give some guarantee to the residual value. Oh, which means this 20,000 will become my total expected residual value of this B Limited. Sir, out of this 20,000 assume A Limited have given a guarantee of 15,000 rupees. Which means, assume after 3 years got completed now, if you sell the asset in the outside market, you have not received even a single rupee also, but still this A Limited will pay you 15,000 rupees. This A Limited will pay you how much, sir? 15,000, which means some part of the residual value will be guaranteed by the lessee, and this is called as guaranteed residual value. This guaranteed residual value also have to be paid by the lessee, and therefore it will be included in the calculation of lease payments. If it is included here, obviously it will be indirectly included in lease liability ka calculation. It will be included indirectly in which calculation, sir? Lease liability ka calculation. Very simple. Just to go through these items, you will be getting complete clarity when we start solving problems. Okay, so lease payments में fixed lease payments also will be included. Variable lease payments linked with the interest rate or CPI. These two also will be included. So next part, the exercise price of the asset will be included. Guaranteed residual value also will be included, because since it is guaranteed by the lessee have to pay this. Therefore, it will be also treated as an outflow only in the books of B Limited. So while calculating lease liability, you have to also take that part as well. Okay, so understood. So now, initial recognition of this ROU asset. Sir, we have understood how to do the initial recognition for the lease liability. Arey Baba, present value of the future lease payments. Aram se done. Now comes this initial recognition of ROU asset. Sir, whatever the lease liability which you have calculated, normally same item I have to add. But other than this, I have to add few adjustments. First adjustment, this you have to understand. Sir, if any lease payment made before the commencement date, for example, sir, if any advances have been paid, or some payments will be there, those should be exactly paid at the beginning of the lease term. Advance lease payments, I can say that. Those advance repayments, lease payments, so what you have to do is, those will not be included in lease liability calculation because you have already paid. Since you have already paid, though that have been not included in this lease liability calculation. But why you have paid? You have paid only for the purpose of acquiring this ROU asset. So now I have to add this lease payment made before commencement date. So if any incentive you have received before the commencement date, which means already you have taken the benefit of that. Okay, so if any incentive is received now, that will be obviously deducted from the cost, because those are not, the purpose of the benefit itself is to reduce the cost. Okay, so those incentives will be adjusted from this cost. Any initial direct cost incurred by the lessee. Any direct cost, it is similar to other PPE. It is very similar to other PPE, sir. Any direct cost, for example, any stamp duty, any legal charges, etc. Those charges will be added. And last, present value of dismantling or restoration cost. So here, what is this dismantling or restoration? If you remember in day 16, sometimes in contract it will be mentioned like this, sir. Once this lease term got completed, it is the total responsibility of the lessee to restore the asset back to the original condition. If this is mentioned in the lease term, then we have to do like that only. Okay, then that present value of this decommissioning or dismantling or restoration cost also will be adjusted. Okay, sir. Check this part, guys. Discounting rate. So next preference we have to give to the discounting rate. Sir, what rate I have to take? This I have already explained. First preference we have to give to implicit interest rate in the lease contract, which means lessor ka IRR we have to take. Sir, what IRR I have to take? I have to take the lessor ka IRR. Think from the lessor perspective. Lessor is expecting, sir, some payments. Lessor is expecting from this lease contract to whatever the lease payments which he is getting, those I will be taking. Sir, along with this lease payments, so I have to take the present value of unguaranteed residual value also. Sir, why I have to take this unguaranteed residual value? Try to understand. Okay, think from lessor perspective. That is the reason I am saying. Sir, while calculating this PV of lease payments, if you observe the lease payments calculation here, if you check guaranteed residual value paid by the lessee, which means guaranteed residual value will be included in the lease payment calculation. guaranteed lease payments will be included in the lease payment calculation. Sir, for this what I have to add? I have to add unguaranteed residual value. Sir, why I have to add this unguaranteed residual value? Try to understand. Sir, the total residual value is there now. Total residual value of the asset is 20,000 rupees, sir. Okay, I have sold the asset in the market and I have got 5,000 rupees and I have got 5,000 rupees, sir. But now this A limited is there now. This A limited is promised to give me 15,000. So the total value which I have got is out of this 20,000, guaranteed residual value is only 15,000. Sir, what about 5,000? That 5,000, so it is nothing but UGRV. If I sell the asset now, I will receive, if I receive this 20,000 exactly, 15,000 from A and 5,000 from the outsider. Try to understand. The A limited will be getting the benefit of this UGRV also now. This will be getting the benefit of this UGRV also now. So whatever the total residual value is there now, this I have to divide into two parts. So first part to GRV, second part to UGRV. So this GRV will be included in calculation of future lease payments. I mean, this will be included in the calculation of FLP for finding out lease liability. For finding out lease liability. So then what is this UGRV? Unguaranteed residual value. This will also be recovered by the lessor. So guys, these are the total cash inflows. These are the total cash inflows for the lessor na. Sir, at what value the present value of all my cash inflows will become equal to the fair value of the asset, and this interest rate will be called as discounting rate. Okay, guys, this is not that much important from exam perspective because in question 2 they will definitely give the discounting rate. Sir, but what if nothing is given? Then we have to calculate the IRR. Okay, sir. Sir, or incremental borrowing rate of lessee we have to do. What we have to do, sir? Incremental borrowing rate of the lessee. Now, initial recognition, what I have to do? Try to understand. Journal entries I have explained here. Okay. Journal entries, if you check, sir, ROU asset account data to lease liability account. This is the entry which I have to pass. Sir, I am having a right to use the asset, therefore I have to record this ROU asset. Sir, along with this, I also have lease liability. I also have liability to pay the cash now. So therefore, my lease liability is also there. My ROU asset is also there. Sir, along with this, the company have also paid me, lessor have also paid me some incentives. So your bank will be debited. Sir, but I only have to pay the lease payment, so my bank will be credited. If any dismantling cost is there, that also will be credited. You have to understand only this entry, sir. ROU asset will be debited, lease liability will be credited. ROU asset debit, lease liability credit. Sir, at what value lease liability will be credited? Simple. Present value of the future lease payments. Sir, at what value do I have to recognize this ROU asset? Lease liability plus some adjustments, whatever I have explained. Sir, if any incentive though I have already received, then bank will be debited. Sir, if any liability though I have to credit, then bank will be credited, Baba. I hope you guys have understood. Sir, now what I have to do? This each reporting period ka calculation you have already known na. Sir, finance cost ka unwinding we have to do. At IRR, you will be recognizing the finance cost on the total balance, like how we will be doing normally. And sir, not only that, on this ROU asset though, depreciation also should be charged. On this ROU asset though, sir, what will be charged, sir? Depreciation should also be charged. Installment you have to pay now. At the time you will be making the payment, you have to credit the bank. Okay, guys, now we are learning the accounting treatment in the books of lessee. Okay, but here you have to take lessor ka IRR. Okay, this you have to be careful. But anyways, this discounting rate they will be given in the question. Okay, don't worry at all. They will be aram se giving in the question. Okay, sir, discounting rate done. Journal entries also we have completed. And now what we'll be doing is, let us quickly check this basic wala example. Okay, आराम से will understand the entire leasing का transaction sir. A limited, B limited, lease term to 4 years, discounting rate to 10%. Discounting rate to 10%. Assume sir lease rent to 1 lakh rupees. Lease rent also, let me write here sir, lease rent to how much? 1 lakh rupees. They are asking me to pass the journal entries in the books of A limited. Sir, first step may I have to calculate the lease liability. Sir, how I will get the lease liability? Very simple. 1 lakh you have to pay for every year you have to pay. Sir, how much is the lease term? Lease term is the 4 years. Discounting it to 10%. Also they have given in the question. So simply I have to calculate the present value annuity factor of 10% 4 years. Just to calculate, you will get this 3.1699 and this will become your lease liability. This will become my lease liability. So in step number 2, what I have to do? Are Baba, in step number 2, though you have to calculate the ROU asset ka cost na. Sir, I have to take the lease liability as the base. If any adjustments, for example, any lease payments received before the commencement or any lease payments paid after the commencement, those adjustments if you have to do, you will be getting ROU asset. But in this question, though, there are no adjustments because it is a basic example. Okay. So very simple, sir. My ROU asset also is 3,16,990. My lease liability is also this only, sir. Array, if you observe, sir, depreciation on ROU asset also you have to calculate, and finance cost to be recognized also you have to calculate. So depreciation on ROU asset, how I will be getting, sir, 316,990 is your asset ka value na. Your lease term is 4 years. So divided by 4 if you do, you will be getting this 79,248 per annum as the depreciation, and this finance cost. So aram se we are doing from the starting na. Amortization table you have to draw opening balance, interest, lease installment, closing balance. That's it you do. After end though you will be getting 0. After end though I will be getting 0. That's it. Just go through this example, guys. Easiest example. Sir, journal entries to what, sir? First to ROU asset according to lease liability. This finance cost will be transferred to lease liability, sir. How much? 31,699 in the first year. Okay, sir. Sir, depreciation also should be charged na. Depreciation accounted to ROU asset. Finally, lease liability will be debited and bank will be credited. So 1 lakh. Guys, basics are entries. You just have to understand this lease liability ka calculation. ROU asset ka calculation. Further treatment means that every year how much will be depreciated, every year how much finance cost to be recognized. You just have to be understanding only these items, guys. That's it. Okay? Fine, sir. So now the next question, guys. Let us quickly come to this question number 6. In this question number 6, let us try to read the question quickly, and this is very basic sa question. Okay? This kind of a question may come in the examination, but you should get a complete clarity on this. Very basic sa question. But if they just wanted to touch upon this IndAS 116, they may give this question. Okay? So let us quickly check this. They are saying, sir, company EFG enters into a property lease with entity H. The initial term of the lease is how much, sir? 10 years with a 5-year ka renewal option. Initial lease term of how the entity EFG have entered into entity H is 10 years. In that itself, they have also specified that 5-year ka renewal option is also there, which means once 10 years are completed, if I want, I can exercise for additional 5 years as well. That is at the choice of company EFG only. Okay, fine, sir. They are also saying the economic life of the property is how much? Economic life of the property is 40 years. This is economic life of the property. Sir, lease term to 10 years. And they are saying, sir, fair value of the leased property is 50 lakh rupees. They have given the fair value of the property and it is how much, sir? 50 lakh rupees. Okay, sir. Company EFG has an option to purchase the property at the end of the lease term for 30 lakh rupees, which means once these 10 years are completed, it is having an option to purchase the property at 30 lakh rupees. Okay, sir. The first advance annual payment is 5 lakh rupees. Try to understand this word very carefully, guys. Sir, what is this? They are trying to say that the first advance annual payment is how much, sir? 5 lakh rupees with an increase in 3% every year thereafter. Guys, it is not variable rent. It is not variable lease payment, it is still fixed lease payment only. As I have said that, sir, fixed lease payment means they do not necessarily mean to be the same. Sir, what is the meaning of variable lease payments then? Variable lease payments are nothing but lease payments which are linked with index, like consumer price index, or for example if you remember interest rates like LIBOR, MIBOR, etc. Okay, if those are interlinked with those kind of an a derivative, I mean those kind of an underlying asset, then I can say that it will be treated as a variable rent. But here you have to understand the first advance annual payment will be made at 5 lakh rupees. Try to understand what they are trying to say. While calculating present value of the lease liability, while calculating present value of the lease liabilities, and what they are saying is, if you draw the timeline, sir, at year 0 itself you have to make a payment of how much, sir? 5 lakh rupees. Which means this 5 lakh जो है ना, this 5 lakh pay will not be discounted. First payment of 5 lakh will not be discounted because it is already there in year 0 na. Discounting will be starting from the next payment onwards. I hope this point is pretty clear. But if this payment, if they have given like this, the annual payment is made at the end of the year, then this 5 lakh rupees will be made at year 1. So while calculating present value, I have to discount this value. But since they are specifically saying that this is an advance annual payment of 5 lakh rupees, this 5 lakh rupees will not be discounted. ठीक है सर. सर every year तो how much is the increase, sir? Every year तो 3% is the increase, which means sir 5 lakh in the first year. So second year may 5% if I add, it will become 525,000. Like that it will be increased by 3% every year. So they have also given the implicit rate of interest is how much, sir? 9.04%. As I have said that discounting rate will be always given in the question. Okay, so implicit interest rate to 9.04%. Then they are saying, sir, entity H gives company EFG an incentive of 2 lakh rupees. Oh, incentive of 2 lakh rupees they have given, sir. This will be given by entity H to entity EFG. Guys, this point I have already said. Any incentive if provided by the lessor, that will be deducted. Sir, whatever the lease rent which I have to pay, I will be calculating that amount. From that amount though, I will be deducting this 2 lakh rupees because this is given by my lessor. So my net payment only I will take. But carefully observe, this is payable at the beginning of the year 2. Guys, beginning of the year 2 or end of the year 1, both are same. If you have little bit of SFM knowledge, sir, beginning of the year 2 and ending of the year 1 both are same. Okay, sir. Which is used for the normal tenant improvement, and they are saying company EFG is reasonably certain to exercise the purchase option. Oh, they are having an option to purchase the property at the end of the lease term na. And now they are saying it is reasonably certain to exercise the purchase option, which means the company wants to purchase the asset. How would EFG measure the right of use asset and lease liability over the lease term? Very simple सा question, guys. Basic सा question. ठीक है. Here what you have to understand is, sir, while calculating lease liability, sir, what I have to take is I have to take the present value of the future lease payments. While calculating these future lease payments, I have to take first year का value तो 5 lakh, second year का value तो 5 lakh plus 10%, 5 lakh plus 3%, again plus 3%, plus 3%, plus 3%, like that we have to take. First 5 lakh is made at year 0. ठीक है, year 1 end or year 2 beginning both are same. Another thing you have to notice is, if you have checked our notes, what I have written there is, if you check this part, sir, while calculating lease payments now, I have to include the exercise price of the asset if it is reasonably certain that lessee will purchase the asset. Which means here they are saying it is reasonably certain to exercise the purchase option now. Therefore, what I will be doing is I will be taking this 30 lakh ka present value also in the calculation of my lease liability. In the calculation of my lease liability. ठीक है sir? Fine sir. let us quickly calculate the lease liability का calculation. ठीक है guys, I will be solving from here only. Okay, you can just read this theory part, you will be आराम से understanding. Here they have calculated lease liability का calculation which they have given in working note number 1. ठीक है, परचेज नोट का ऑप्शन. सो टोटल लीज लायबिलिटी व्हाट दे हैव गॉट इज 50 लाख रुपीस अप्रॉक्सीमेटली. लेट अस चेक हाउ दिस कैलकुलेशन हैव बीन अराइव्ड. ठीक है, फाइन सर. सो फर्स्ट व्हाट विल बी डूइंग इज दिस वन गाइस, कैलकुलेशन ऑफ प्रेजेंट वैल्यू ऑफ द लीज पेमेंट्स लेस लीज इंसेंटिव. ठीक है, ट्राई टू अंडरस्टैंड गाइस. सर हियर तो लीज पेमेंट इज मेड एट द बिगिनिंग. Lease payment is made at the beginning, sir. Since it is made at the beginning of the year 1, discounting factor will be 1. Sir, if it is made at year 2 ka beginning, then my value will be, I have to discount, sir, year 2 beginning or year 1 ka end, both are same. If this is made at year 2 beginning, which means year 1 ka end, since it is made at year 1 ka end, I have to discount this for 1 year. Therefore, if you calculate 1 by 1.0904, you will be getting 0.92. They have rounded off to 2 figures. ठीक है सर, year 2 का value please multiply, you will be आराम से getting the thing. Sir, but why they have taken only 3,15,000? Arey Baba, that's what I'm saying na. Sir, on this 5 lakh, what have happened is 2 lakh ka incentive तो they have received na. 2 lakh ka incentive they have received na. ठीक है sir. So sir, what will be the value first of all? 5 lakh plus 5% minus 2 lakh rupees if I do, I will be आराम से getting this 3,15,000 rupees na. So which means 5 lakh plus 5% minus 2 lakh if I, sorry, I think it is 3%. I think it is 3% guys, check the question. So ठीक है sir, 5 lakh plus 3% minus 2 lakh if I do, I will be getting 3,15,000, hence this will be the correct answer. In the same manner, repeat the process. Sir, have you got this 530, 450? Arey guys, 5 lakh 15,000 plus 3%, or you can write like this also, into 103%, both will work. ठीक है sir, like this continue the procedure. Guys, year 3 end means year 2 का beginning, year 4 end means year 4 का beginning, year 5 end means year 4 का beginning, sorry, year 5 beginning means year 4 का end, year 6 का beginning means year 5 का end. Therefore you have to discount that for 5 years. Very basic सा SFM going on here. I hope this point is pretty clear to you. ठीक है sir. Guys, but the thing is, along with all these payments, I also want the purchase price का value also na. Now check carefully. Now if you check carefully, you will understand. Sir, at the end of the lease term, the purchase price is 30 lakhs. Sir, end of the lease term means 10th year का end. 10th year का end का discounting factor you have to take, which is nothing but, where is it? Which is nothing but, check this. 10th year का end पे what is the closing factor sir? It is 0.42. Guys, this year 10 is different, this year 10 is different. Sir, this is nothing but year 10 का beginning na. If it is year 10 का beginning, this means it is year 9 का end. But this is year 10 का end. This is year 10 का end guys. I hope this point is pretty clear to you. ठीक है sir. Because payment should be made at the purchase option at the year end pay. So please calculate, it will come to 0.42, and if you do, you will be getting 12,60,000. And they have written this point also. The discount rate for the year 10 is different in the above calculations because in the earlier it is the beginning and in the later one it is the end of the year 10. ठीक है sir. Sir, here to the value is 37,39,000. Let me write 650 approximately. For this, let me add 12,60,000 rupees. Sir, if I add these two, I will be getting 49,99,650. Sir, this 49,99,650 is nothing but my lease liability ka value. This is nothing but my lease liability ka value, and I hope this point is pretty clear to you. ठीक है सर, प्लीज गो थ्रू द कैलकुलेशन once again, you will आराम से understand. ठीक है सर. Next, if you read the question, sir, in the question though, there are no adjustments which are made just before the commencement lease. Which means if you check our notes, lease incentives, yes, this one if you observe, there are no lease incentives received before the commencement date. There are no lease payments which are made before the commencement date. Initial direct costs also they have not given. PV of dismantling also they have not given. Normally speaking, lease liability and ROU asset both will be same unless there are these differences. If these differences are not there, then both lease liability and ROU asset both will be same. ROU asset and lease liability both are going to be same if there are no these adjustments. In the question though there are obviously no adjustments. Sir, so my ROU asset also will be 50 lakh rupees approximately. Will be 50 lakh rupees approximately. Sir, what is the entry which I will be passing, sir? Arey Baba, ROU asset account data to lease liability. So it is 50 lakh rupees. Yes, it is 50 lakh rupees. Sir, what will happen to every year? Guys, every year to this right of use asset will be depreciated now. Sir, while doing depreciation, what should be the useful life which I have to take, sir? Sir, if I check the question may they have given lease for only 10 years. So should I take this 10 years as the lease term? Or should I take the useful life of the property which is 40 years? Guys, this point already we have written now. Already we have written this point now. Where is it? ROU. If lessee is reasonably certain to exercise the purchase option at the end of the lease term, depreciation will be charged over the useful life of the asset. ठीक है सर, ROU asset का thing is already done sir. ROU asset का calculation is already done sir. ठीक है sir. Now, okay, come to the answer. Sir, ROU asset to 50 lakhs since purchase option is reasonably exercised. I will be taking the economic life of the property as its useful life. Therefore, 40 years will be my useful life. Sir, this will be amortized. If I do 50 lakh upon 40, 125,000 will be my annual amortization. 125,000 will be nothing but my annual amortization. ठीक है सर, ठीक है सर, ठीक है सर. We understood this point completely. Sir, what will happen to this lease liability? Guys, this lease liability, so unwinding of discount will be done at every reporting period now. Amortization table, beginning balance, interest, lease payment. That's it. Lease liability at the end of the year. Like this only we have to do, guys. Sir, but what they have did like this, sir? First one though, commencement may you have paid 50 out of this 50 lakh, you have paid 5 lakh rupees at the beginning only na. So sir, if I calculate the closing balance, if I calculate the opening balance at the beginning itself, it is not 50 lakh, it is only 45 lakh. Because 5 lakh I have paid right now itself. So while calculating interest for the year end pay, I will be calculating interest only on 45 lakh na, not 50 lakh. That is the point why I have discounted, why I have taken the discounting factor for the year one beginning as 1, which means interest will not be calculated since the payment is made on the first date. Other than this, rest of the calculation are exactly same. You just have to do the annual amortization ka table. That's it, guys. But here smart student have to understand one thing. Sir, year 10 पे end में lease liability का balance will be 0, but still ROU asset will be depreciated for the next 30 years. That's what they have given here. Nothing, guys. Very, very basic sa question. You will definitely understood this question. So once you have completed watching the video, I recommend you to definitely solve this question. Very, very basic sa question. If you read whatever they have written, आराम से you will understand everything. ठीक है. With this we have completed this beautiful question. Question number 6, little bit important. ठीक है. So let us come to the next super duper bumper important part, which is nothing but lease modification in the books of lessee. Guys, sir, what if they have asked the accounting treatment and journal entries also? Can't we pass journal entries? ROU asset to lease liability. Sir, every year on this ROU asset, I will be passing depreciation or amortization, na? So amortization account data to write off use asset. Sir, this lease liability, so finance cost will be recognized. That's it. Those entries are very common. Okay, sir. So this question is done. Even if they have asked the journal entries or accounting treatment, you should be able to write that. That should be the attitude which you have to develop. Okay? Just don't mug up the questions. This IndAS 116, though, if you want to mug up, nothing will be achieved. You have to practice this. You have to get the feeling that you are understanding something, then only you are able to solve this kind of a chapter. This is not that much easier, but I'm not saying it is impossible. You just have to develop certain sort of interest in solving these type of typical chapters. Okay? Which you have to take this seriously, then only you are able to solve. Students, if you are taking consolidation chapter as choice, please watch this IndAS 116 because I am seeing one question which will be coming in your December 2025 examination from IndAS 116. High chances from IndAS 116. Okay? So no option, you have to watch. Okay, sir. Done, sir. Done, sir. Done. So the concept is completed. So next what we'll be doing is super duper bumper important question, which is nothing but lease modification in the books of lessee. High chances that this type of modification question is going to come in your exam. There are 4 to 5 models which are there in this chapter. You just have to remember the accounting treatment. First time pay, you have to understand the things. Second time pay, that much understanding pay, you will not be paying any kind of a focus. First focus, understand the concepts completely. Then you have to watch this video 2 to 3 times to get the concept fixed in your mind. Both are very important. Even if you by heart without understanding, nothing can be done. If you don't remember anything, still nothing can be done. So both you have to do, guys. Very important. So this, many of the students are terrified with this lease modification. But trust me, after explaining everything, you will be aramse understanding and you will be solving any type of question, whatever they have asked in the examination. That is my guarantee. Okay? Fine, sir. So now, lease modification in the books of lessee. Sir, first of all, why this modification will be having, let us try to understand. Okay, let us take few examples to understand the concept of lease modifications. Okay, sir. Lease modifications. First, try to understand. Sir, initially I have entered, for example, let us take Mr. X have, okay, not Mr. X, let us take company names. So X Limited is there, sir. X Limited have entered into lease with Y Limited. Okay, fine, sir. X Limited have entered into lease to Y Limited. For example, they have decided to take one building as a lease. Okay, one building they have taken, sir. Fine, sir. Sir, initially this Y Limited ka building, assume it is 3 floors. This Y Limited ka building, assume it is how many floors, sir? 3 floors it is. Okay, sir. So initially what I have thought is I have decided to take one floor only. I have decided to take one floor only as lease. This X Limited have decided to take only one floor to Y Limited. Okay, only one floor. Fine, sir. The business is going good. Years are being passed. Let us assume the lease term to 5 years. What should I say? The business is very good. The business is very good. So just after 2 years got completed. Sir, this first floor is not at all sufficient for X Limited. So X Limited have decided to increase the scope of the lease. X Limited have decided to increase the scope of the lease by adding another floor also. By adding another floor also, sir, which means for the first 2 years though only first floor is on lease, but from next year onwards even the second floor is also added to the lease. These kind of modifications will be generally taken place in the agreement itself. In the lease agreement pay, they will be generally making these kind of modifications. Okay, fine, sir. So from next period onwards, 2 floors will be taken. Okay, so here my scope of lease have been increased. So scope of lease means it is nothing but area of the lease. Earlier it is only one floor, but now it is another floor also. Okay, sir. This is nothing but increase in scope, or increase in area, anything you can call, guys. ठीक है सर, increase in scope sir, increase in area, both are done sir, fine. Another thing what will be happening is, sir, earlier though, okay, let us don't combine these two examples sir. I have decided to take only one floor. Okay, yes sir. Sir, the business is very good only. But what I have decided is, after completion of these 5 years, okay, 4 years are completed. Think like this: 4 years are completed. Now I am having only 1 year. Now. So what I have decided is, okay, let me just continue this business for next 5 years in the same building only. They have decided to continue the business for the next 5 years also in the same building only, which means this is nothing but increase in lease term. ना. ठीक है sir. So this is also a modification. Yes sir. Sir, this will also be done in the lease agreement only. Answer is yes. Sir, why they want to do the modification? Because right now the price may be different, but after 1 year got completed, lessor will be becoming more greedy and he will be even increasing the lease rental. Oh, so now what you have to do is, you don't have any option. It is beneficial for you to extend the lease right now itself, which means this is also a kind of a modification wherein increase in lease term, or here to earlier what I have said sir, increase in scope. Sir, if increase in scope is there, obviously there will be increase in lease rentals also na. Sir, earlier I have decided to take only one floor na, but now another floor will be added, therefore my lease rentals also will be going to change na. That's it. These are only modifications. Sir. If there is increase in lease term, what I have to do? If there is increase in area or increase in scope along with lease rentals, now what I have to do? Sir, will there be always increase only? Answer is sometimes decrease also will be there na. So how we have to do the accounting in case of decrease of lease term, in case of decrease of area, that you have to identify. Okay, fine sir. Guys, this is nothing but lease modification. This much simple. Sir, is it going to be this much simple? 100% yes. Just be a little patient. I will explain the entire concept along with the question, then you will be aram se understanding. Okay, fine sir. Let us check the first part. First thing though, lease modification. Whatever the modification which we are discussing, that will be discussing in the books of lessee. Lessor तो it will be coming. Okay, आराम से wait. Lessor का discussion is little bit छोटू सा discussion only, but we will focus. Sir, first of all, listen. If it results in addition of assets and payment is in the ratio of their SSP, sir, what is the meaning of SSP? Standalone selling price. If this modification results in addition of the assets and payment is in the ratio of standalone selling price, they are asking you to treat the same as a separate contract. Sir, what they are trying to say is, sir, assume I have decided to take only first floor now. Now I want second floor also. That second floor though, not only me, even if any outsider have come to the lessor and if any person have asked for the lease, that person will be giving only at 50,000 only. For me also they have given 50,000, which means it should not be adjusted in the current lease, because there is no relation with the current lease. Therefore, this will be treated as a separate contract. But sir, for outsiders though, they will charge 50,000. But for me, since I have already taken the first floor, they have given me concession and they are charging only 40k. Oh, which means this 40k, the reason why they have reduced the price, that is having some interlinking. With existing lease, and therefore that will be requiring some sort of modification in the current lease or existing lease. Sir, how exactly that will be done? Let us understand that very slowly with the help of an example. Okay, so guys, these you have to remember. Sir, first of all, if increase in lease term is there, or if area is increased, area means scope, guys. Area means scope. Sir, if scope is increased, obviously my lease payment also will be increased na. Yes. Sir, they have also given increase or decrease in lease payment if all these three items are there. If all these three items are there, you have to follow the same procedures. Sir, how many steps are? Only three steps. Oh, only three steps do I have to calculate? Answer is yes. Only three steps you have to calculate. Your answer will be done. But very, 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 very smartly you have to do. If you are super smart, if you remember these three steps, whatever the modification which they are going to ask, those you are able to solve things. Okay, fine, sir. Sir, first of all, in this type of question, though, what I have to do? First, you have to calculate the ROU asset ka balance and lease liability ka balance on the date of modification. Remember this. Sir, first of all, whatever, see here I have given only three items. Down to I have written some two items. And another also I think I have written one item. ठीक है सर. In all these items though, first step में you have to always find out ROU asset का balance and lease liability का balance as on the date of modification. While solving problem you will understand. On the date of modification, ROU asset का balance is how much? Lease liability का balance is how much? ठीक है सर. Sir, how I will get ROU asset का balance? Guys, prepare depreciation schedule till the date of modification. In the same manner, this amortization table also should be prepared till the date of modification. Through those two items, you will find out ROU asset का balance and lease liability का balance. ठीक है सर. Sir, now what I have to do? Now what you have to do is you just have to calculate the revised lease liability का balance. Try to understand. Sir, here why I have to calculate this revised lease liability? Sir, from today to modification have been done na. Therefore, that revised value only should be appearing in my books. But this revised value though, how I will be getting? You have to calculate once again based on the revised lease rentals. Based on the revised lease rentals or based on the revised lease term, you have to again calculate the present value. But this time listen one thing. Use the discount rate as on the date of modification. That's it. On the date of modification, so you have to calculate the revised lease liability ka balance. Sir, if there is any difference, see, this is the actual balance, this is the should be balance. The difference is there na, the difference will be adjusted. That's it. Sir, where I have to adjust in ROU asset also, adjust in lease liability also. You will understand the things. Sir, what you are exactly trying to say? Please give us an example. I will give you an example. Don't worry. Okay, fine, sir. Sir, here. Okay, here, guys, you have to remember these three items. Very, 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 very important. Crucial adjustment. First one, to increase in lease term, increase in area, and increase in lease rentals, increase in lease payment or decrease in lease payment. Teen adjustments के लिए you have to solve like this only. ठीक है sir. Now try to understand, guys. I want 100% focus. ठीक है sir. Sir, as per step number one, I have calculated ROU asset ka balance also and lease liability ka balance also as on the date of modification. Sir, assume ROU asset ka balance will be 10 lakh rupees and lease liability ka balance, so assume it is 9,50,000. Sir, why these two balances are not same? Guys, these two balances will be generally same on the initial recognition only, but subsequently this ROU asset will be depreciated now based on its useful life. This lease liability though amortization schedule will be followed, which means these both though need not be same in further years, because this ROU asset depreciation as per useful life. This lease liability though unwinding of finance cost you have to do. Okay, so both may not be same. That is what you have to understand. Okay, sir. So now what I have to do is, see, this lease liability is there now. This liability I have calculated by keeping in mind 10% as the discount rate. But now what have happened is they have decided to increase the lease rentals. Now they have decided to increase the lease rentals. Now I am standing, assume year 3 end pay. Year 3 end pay I am standing and T. Original lease period is 5 years. Now they have decided to extend the lease term. So what is the meaning of extend the lease term? I still have 5 years left. I still have 5 years left. So I will be calculating 4th year, 5th year, 6th year, 7th year, 8th year. I am there at year 3 end now. So I will be discounting all these future cash flows at a discount rate. Sir, do I have to discount the same at 10% only? Need not be, because they will be generally giving new discount rate in the question. So while discounting these future cash flows, please use the old wala please use the new discounting rate on the modification ka date. Oh, which means, sir, assume they have given 11%. Assume they have given how much, sir? 11% they have given, and I have calculated the lease liability ka value. Sir, assume it have got 9,90,000 rupees. Sir, my current lease liability, see, this is my revised lease liability, guys. Sir, my current lease liability is 9,50,000, but your revised lease liability is 9,90,000 na, which means my lease liability should be increased by 40,000, sir. Therefore, I will be crediting the lease liability of 40,000. Sir, if your lease liability got credited, opposite, so you have to give something na. Sir, should I give P&L account? No. What you have to do is you have to debit the ROU asset. This should be the entry. Whatever the difference which you have got, that will be adjusted in both lease liability as well as ROU asset, guys. That's it. Only these 3 steps you have to follow. Sir, these 3 steps, so how I have to follow, sir? Check question number 11. You will aram se understood the things. You will aram se understanding the things if we check question number 11. Okay, sir. Quickly come to question number 11, 11, 11, 11, 11, 11. Guys, this question number 10 though, just read the question once, you will completely understand the question. Here I will be highlighting only the important things. So what they are saying is, see, the additional space is made available at the end of the second quarter. The increase in total consideration, this is important, is commensurate with the current market rate. Modification is there, that modification has taken place in the ratio of their standalone selling prices, which means that will be treated as a separate contract. That's what I have already explained in the theoretical part. So this question though is not that much important, but still I have explained the logic. It is incommensurate with the current market rate, therefore it is treated as a separate lease. That is okay. Aram se normal sa question. Come to this part. 11th question little bit important. 11th question little bit important. Modification ka question. Good question it is. Okay? So let us take this question. Fine, sir. Lease lessee enters into a 10-year lease for 5,000 square meters of office space. The annual lease payments are 1 lakh payable at the end of the each year. The interest rate implicit cannot be readily determined. Oh, sir, implicit interest rate though is not there in the question. Then what we have to check? We have to check for the lessee's incremental borrowing rate. That also I have already said na, guys. Lessee's incremental borrowing rate, the commencement rate is how much, sir? 6% per annum. Now try to check. Sir, at the beginning of the year 7 though, at the beginning of the year 7, which means a smart student will identify, sir, on the beginning of year 7, modification has been taken place. On the beginning, I mean, at the beginning of the year 7, they are trying to say that modification will be taking place, which means, sir, if I observe these steps, first step though, I have to calculate the ROU asset and lease liability balance as on the date of modification. So what is the meaning of as on the date of modification? Which means beginning of year 7 or end of the year 6, both are same. Beginning of the year 7 or end of the year 6, both are same, guys. So which end of the year 6 or beginning of the year 7, both are same, which means I have to calculate ROU asset and lease liability balance as on end of 6th year. That's it. They are saying lessor and lessee agree to amend the original lease by extending the contractual lease term by 4 years. Oh, so here they are trying to say that increase in lease term वाला point ना, increase in lease term का modification ना, ठीक है sir. Lease payments though are not changed. Even if lease payments are not changed, since the tenure is increased, sir, earlier so it is only 10 years, but now it is another 4, which means the total lease should be 14 years. Sir, 6 years are completed now, which means the balance lease period is how much, sir? 8 years. Sir, if my lease payment increases by further 4 years, which means further 4 years, which means 4 additional payments will be added now. I will explain with the help of a timeline, just be a little patient. The annual lease payments are unchanged. Less is incremental borrowing rate at the beginning of the year 7. This is the, what should I say, date of modification ka discounting rate. So they are saying how should the said modification be accounted for. Let us quickly understand with the help of a timeline, then you will be aram se understanding the question. Okay, fine sir. So let us write about original lease. Let us write about original lease. Sir, original lease let us try to understand. Okay sir. Sir, first of all, lease term to 10 years. Lease term to 10 years. And then, sir, annual lease payment to 1 lakh rupee. Annual lease payment to 1 lakh rupee. Next, if you read further, discount rate to 6%. 6%, 6%. That's it. It is fine. Sir, now, sir, first of all, in order to calculate the value as on, see, this is the original lease. Okay, let us understand. Let us try to interpret the question first. So now what have happened is modification. Modified lease here. Let me write that part. Modified lease means, sir, what is your revised lease term? Revised lease term to 14 years. Revised lease term to 14 years, sir. This modification is done after 6 years or end of the 6th year. Okay, fine sir. Now, annual lease payment is still same. Annual lease payment to still same, sir. How much the annual lease payment? Sir, annual lease payment to 1 lakh only na. Discounting rate is also changed, guys. Sir, discounting rate to how much? Discounting rate to 8%. I think is it 8? 7. Okay. Discounting rate to 7%. That's it, sir. Guys, very very simple sir question. Let us quickly solve this question. Sir, just try to understand. Sir, first step though, I have to find out the ROU asset and lease liability as on the date of modification. Sir, modification is done after 6 years. So just try to understand whatever I am doing. Sir, first let me calculate calculation of ROU asset and lease liability. ROU asset and lease liability to be measured initially, which means sir I am finding out initial recognition ka value. Okay, fine sir. So here sir let me write lease liability ka value. Sir, lease liability ka value to how much sir? Present value of future lease payments. Sir, what is the future lease payments? 1 lakh. Every year I have to pay, so I will write present value annuity factor. Present value annuity factor, sir, what is the discounting rate to 6% here? And 10 years is the initial lease term, so 10 years I will take. This is initial value I am writing. Try to understand. Okay, sir. So if I calculate this value 1 by 1.1, first year, second year, third year, fourth year, fifth year, sixth year, seventh year, eighth year, ninth year, 10th year, you will get 6.1445. You will get 6.14. Let me take, sir, my value will be 6,14,000. I think it is 6,14,000. 6,14,000 was my initial recognition ka value. Let us just check the question, guys. what they have written. 1 second guys, I think they have 6% to 10 years only they have to take. So let me just sorry guys, I have taken 10%. Okay, just a moment. 1 by 1.06, first year, second year, third year, fourth year, fifth year, sixth year, seventh year, eighth year, ninth year, 10th year. So 7.36, my bad. So sir, the asset ka value is how much, sir? 7,36,000. Sir, this will be my initial recognition ka value. This will be my initial recognition ka value, guys. Like this also you can do. Sir, annuity. So annuity I can do like this also now. Sir, can I do like this also? Aram se do like this also. Anything is fine. Anything is fine. If you want to enjoy the question, just do like this. Steps, 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 steps. But that much is not required. You can directly calculate the present value of annuity factor. Approximately I got 7,36,000, both are fine. So guys, can you tell me, sir, what will be the entry which I have written at initial recognition? Sir, initial recognition day, the entry which you would have been passed is ROU asset data to lease liability account. Sir, what will be the amount? Amount will be 7,36,000. 7,36,000 will be the entry which I have passed then. Okay, fine sir. Sir, but this is not the value which I want now. I want these values on the date of modification. I want these values on the date of modification. Sir, here though, let me write this as working note number 1. Okay. So here on working note number 2, what I will be writing as calculation of ROU asset ka balance as on date of modification. Calculation of ROU asset ka balance as on date of modification you have to do, guys. Sir, how I have to do this? ROU asset ka balance as on date of modification. Let us try to understand. Sir, first of all, my value is how much, sir? Sir, my value is, let's just try to understand what I am writing here. 7,36,000 is the opening balance minus depreciation or amortization. Anything is fine. Sir, how many years are completed? 6 years are completed. How many years? 6 years are completed. Sir, can you tell me what is the depreciation? 7,36,000 divided by 10 into 6 years are done. So 7,36,000 divided by 10 into 6, if you do, 441,600 is already amortized. Sir, what will be the balance on the date of modification minus 736,000 if I do 294,400 will be the balance as on date of modification. So 2,94,400 is nothing but ROU asset का balance as on the date of modification. ठीक है sir? ठीक है sir. Let us take the question, guys. 2,90,000. Sir, where they have written? ठीक है. Okay, I think they have forgotten to calculate, but still, okay, let us do as per the problem. ठीक है, fine sir. Sir, working note number 3 also let me calculate. Working note number 3 में what I will be calculating is, sir, calculation of lease liability का balance on the date of modification. On the date of modification, what will be the balance I have to calculate? Guys, there are 2 ways I can calculate. Sir, first to prepare amortization table. Prepare amortization table for the 6 years. That way also you can do. Or another way what I can do is, sir, another way what I can do is, 3, 4, 5, 6 years are done now. Why they have taken 6 years? Okay, see, first year though, like this you can do. Like this you can do, which is totally fine, sir. Another way is also there, sir. What is that way? Guys, see, modification ka value to how? I am not explaining this because you already know this: opening liability, interest, lease payment, closing. amortization table का basics are calculations they are doing, guys. ठीक है sir, is there any alternative? There is another alternative also, but my strict suggestion is follow this only to get full out marks, because the examiner or the whoever person who is evaluating, they may not understand the shortcut which I am explaining right now. But if you don't have time, then you can use that shortcut to save the time. But I am assuming that they will be giving this only in the key. But sir, what is the shortcut? Guys, try to understand. Sir, as per the original lease, though, 6 years are completed, which means 4 years are still there, na. Which means 4 years are still there, na. So, sir, here I will be writing the lease liability ka balance at the end of the year 6 will be 1 lakh rupees. Present value of annuity factor I have to take 6%. Now I have to take only for 4 years, because 4 years ka lease rent is still pending. If you calculate, you will understand 1 by 1.06. First year, second year, third year, fourth year, 3.465 will be the value. So 3.47 if I take, it will come to 3,47,000, and this will be the value as on the date of the modification. Okay, fine. Now working note number 4 में what I will be doing is I will be calculating revised lease liability का balance. Revised lease liability का balance, but this time based on new discounting rate. Based on new discounting rate, I will be calculating the revised lease liability का balance. First of all, can you tell me how it is? See guys, 1 lakh is there. 1 lakh, sir, we are standing at year 6 का end. We are standing at year 6 का end. Sir, the lease value is 1 lakh rupees into present value of annuity factor, because the lease rentals are not changed, but discounting rate got changed. Sir, now what is the discounting rate, sir? 7%. Check the question, you will understand. 7% per annum. Okay, sir. Sir, what will be the value? 7%. And how many years are still there, sir? 8 years are there. Sir, have you got this? 6 years are completed. Now it is modified, na? Modified lease liability का value तो 8 years are there. Okay? So, sir, if I calculate the value, first year, second year, third year, fourth year, fifth year, sixth year, seventh year, eighth year, 5.97, and sir, my value will be revised lease liability ka value will be 5,97,000, guys. 5,97,000, sir, approx. Guys, try to understand. Sir, this can be alternatively calculated like this also. Anything is fine. 1 lakh, 1 lakh, 1 lakh, 1 lakh, 1 lakh, but discounting factor was 7%. Guys, anything you can do in exam. If you have time, present it nicely like this. Or this is also, I think this is useless, because till these answers are matching, it is totally fine, because this is the shortcut. We cannot waste our time solving like all this, correct? We can aram se do this annuity factor ka value na. So 5,97,000 will be the revised liability ka balance based on new discounting rate, which means my lease liability should be 5,97,000 in my books, but it is only showing 3,47,000. Oh, sir, what will be the journal entry which I will be passing, sir? Very, very simple, sir, journal entry. Sir, can you tell me? Arey Baba, my lease liability, sir, should it be increased or should it be decreased? This is the actual value. This is the should be value. Sir, it have to be 5,97,000, but it is only 347,000, which means it should be increased. Sir, what should be the increase in value? Increase in value will be 2,50,000. So I will credit the lease liability account 250,000. Sir, if lease liability is credited asset, I will be giving, debit, I will be giving to ROU asset account data 2,50,000. I hope this point is clear. That's it. First kind of a modification is super duper easy, Baba. First kind of a modification is super duper easy. Yes, it is easy. If you check, they have got the answer as 2,50,000. They have written the ROS will be increased by 257.45 on the date of modification. Again, guys, very, very important question, brilliant question. First modification, we have to do like this only. Sir, just by heart these items, guys. at the time of first time you are watching, try to understand. So here what I have written, if there is increase in lease term or if there is any increase in area and lease payment, since area is got increased, your lease payment also will be increased, and last may increase or decrease in lease payment is also there. In this case also you have to follow these three steps. So first step, ROU asset and lease liability ka balance as on the date of modification. Sir, ROU asset का value I will get by depreciation schedule, lease liability का value I will get by amortization table. ठीक है, fine. Sir, can I solve like this shortcut also? Can I solve? Answer is yes. I think this shortcut you have understood. ठीक है, original lease term to 10 years, 6 years are already done. 6 years are already done. ठीक है sir, now how many years are left? Balance 4 years are left. For these 4 years though, I have to calculate the present value. And it will be coming to 3,47,000. Sir, I did not understand this. Do the amortization table. Anything is fine. You want marks, that's it. Whether you do shortcut or whether you do full method, anything is fine until your answers are same. Okay, fine sir. We have understood this concept. If yes, then only move forward. Okay, this is the super duper bumper step which we have to do. Revise it lease liability on the date of modification using the discounting rate, but this time on the date of modification only you have to take. ठीक है sir. Difference will be adjusted in lease liability also and ROU asset also. ठीक है, fine sir. Top important modification like that we have to understand guys. ठीक है, fine sir. Fine sir. We have understood the first kind of a modification and we have understood the question also nicely. Now second question guys. Sir, now what have happened sir? Second question will be coming. This is a little bit typical. Sir. This why I'm saying this is difficult adjustment. This is a difficult adjustment, hard to understand in a one go itself. But if you have conceptual clarity, aram se you can solve. Just by heart what I am trying. Definitely I will explain the logic, that's my responsibility. But if you don't understand, just by heart the thing, because this super duper important in an examination. If I am your exam setter, I will definitely give this kind of a modification because most of the students by seeing the question itself they will go. Okay, but you students, you are very smart. You will watch this, you will understand this, and you will solve this, and you will get damn 7 out of 7 marks. That is my assurance. Okay, fine sir. Let us check this. Yes. Now, second type of modification. Second type of modification is, sir, when there is decrease in lease term or area is also decreased, lease payment is also decreased. Sir, here we have to do, let us understand. Sir, decrease in lease term and decrease in area or lease and decrease in lease payment. Sir, here let us try to understand guys. First of all, first step though same as above, which means calculate the ROU asset and lease liability balance as on the date of modification. Guys, here first let us understand whatever the steps which are there. Okay? So here you have to calculate gain or loss due to modification. Gain or loss due to modification first you have to calculate. So first of all, how I will be getting that? Try to understand. So assume if decrease in area is happened, we have to do like this. Sir, if decrease in lease term have happened, I have to do like this. Okay? You will be getting gain or loss. You will be getting gain or loss. Okay? Fine sir, we have understood the things. Now try to understand. Sir, here we have to do like this only. For the next 5 minutes, just with 100% focus, try to understand what I am explaining. Okay? Just listen to this, then I will definitely explain the logic as well. Sir, if there is any decrease in lease term or if there is any decrease in lease rentals and decrease in scope. Okay? Decrease in lease term, decrease in scope and decrease in lease payment. In this case, how to do the accounting? Let us try to understand. First step to same. ROU asset ka balance, lease liability ka balance as on the date of modification. So you have to find out, because what is the actual balance which is there na, that is your responsibility. You have to find out. Second step, you have to calculate the gain or loss due to modification. Sir, in first step what I have calculated? First step though, I have directly calculated the revised lease liability using the discounting rate as on date of modification. This step also we will calculate in this type of modification. But before that, let us try to calculate the gain or loss due to modification. Sir, how this should be calculated? Let us try to understand. Sir, here what have happened is your scope got reduced. Your scope got reduced. Sir, what is the meaning of my scope got reduced? Your area got decreased. Sir, because earlier though, let us assume like this. Sir, earlier though what have happened is I have decided to take the asset as lease for 10 years. But now though 10 years is not required only. I have decided to reduce the term to only 6 years. Sir, earlier though my ROU asset ka value I have kept assuming my useful life is 10 years. And this lease liability ka balance ka amortization also I have been making assuming my lease term is 10 years. But now they are saying okay, only 6 years is required. We have decided to cut down the lease term by 4 years. So like this, how we have to do, let us try to understand. We have to do proportionate reduction. What we have to do, sir? We have to do the proportionate reduction. Sir, what is the meaning of proportionate reduction? Try to understand. If it is decrease in area, you have to do like this. Sir, if ROU asset got decreased, see. Sir, whatever the closing balance which is there now, take that closing balance and that should be multiplied by, sir, how much area is decreased, what is the original area. Okay, question is there, you will understand. This is the formula. Sir, this is reduced now, so this value will be eliminated. So how much value I have to reverse that I have calculated here? Decrease in area divided by original area I have to do. Then I will get ROU asset ka adjustment. Second though, sir, lease liability also to be reduced same manner. Sir, lease liability ka calculation also like this only you have to do. Take the closing balance of liability into decrease in area divided by original area. Okay, difference in these two assets will be treated as gain or loss due to decrease in area. Sir, what is the entry which we will be passing? Slowly I will explain. Just be patient. In case of decrease in area, you have to calculate how much amount should be decreased in ROU asset, how much amount should be decreased in lease liabilities, and how much proportionate reduction. How much proportionate reduction will be made? Even in ROU asset also proportionate reduction, even in lease liability also proportionate reduction. Sir, how? This formula. This difference in two will be either gain or loss due to decrease in area. Next part. Sir, what happened in case of decrease in lease term? This is little bit tricky part, so you have to understand this. Sir, in case of decrease in lease term, sir, my ROU asset will be decreased. Sir, how? Same formula like above. But here comes the thing, reduction in lease liability ka balance will be, sir, whatever the balance on the date of modification that is there, that I have to take, minus present value of lease liabilities for the revised lease term using original discounting rate you have to calculate. Sir, here I should not calculate this proportionate formula where I have calculated like this. Sir, what is the reason? Guys, here my lease term got revised. If I do proportionate reduction like this, time value adjustment will be ignored. Sir, earlier it is 10 years. Now they have changed it to 6 years. Sir, can't I write into 4 by 10? Answer is no, guys, because time value should be adjusted now. So that is the reason this reduction in lease liability, when there is a decrease in lease term, you cannot do proportionate calculations. You have to solve like this. Whatever the balance as on date of modification, from that minus present value of the lease liability for revised lease term using original discounting rate. This is the part. Original discounting rates you have to find out, and you have to calculate the lease liability for revised lease term. Revised lease term is how much? 6 years. For that 6 years, so calculate the present value using original discounting rate. Difference between those two will be treated as gain or loss due to decrease in area. So decrease in lease term though, decrease in area though, I have to do the proportionate calculations. ROU asset also, lease liability also. But sir, decrease in lease term though, I have to do this formula. On the date of modification though, whatever the discounting rate, original discounting rate pay, you have to calculate. Sir, what will be the entry? Entry will be simple. Sir, see, my lease liability will be reduced now. Lease liability will be reduced, correct or not? Yes, lease liability will be reduced now. Sir, if it should be reduced, it should be debited. If lease liability is debited, credit I have to give to ROU asset. Sir, what about the difference? If the difference is credit, it is P&L account. If the difference is debit, still transfer to P&L account. Okay? If it is debited, if it is losses, then if it is credited, it is gains. I hope you have understood this part. I hope you have understood this part. Now, sir, calculate the closing balance of both lease liability and ROI asset after the above adjustment. Just reverse how much lease liability you have taken here, how much ROI asset you have taken here. That will be your closing balance. Now once again calculate revised lease liability using discounting rate on the date of modification. Using discounting rate on the date of modifications are here. Original discounting rate here, modified discounting rate I have to calculate. That's it. Last step to same. Last step to same. Here you have to be very much careful with this part only. You have to calculate the lease liability for revised lease term in two times. You have to calculate here the original discounting rate, here to discounting rate on the rate of modification. Okay, question is there, let us understand. But once again watch the thing very carefully, sir. Here though I should not take the proportionate value because time value is there. All others I can take proportionate value, even if there is decrease in area or decrease in lease term. Also for ROI asset I can take because there is no time value adjustment in ROI asset, but adjustment will be there in this lease liability ka point. Okay, fine. Now let us check question number 12 for this understanding. Question number 12, let us check the question, guys. Good question, let us closely check. Question number 12. Lessee enters into 10-year lease for 5,000 square meters of office space. The annual lease payments are 50,000 payable at the end of each year. The interest rate implicit in the lease cannot be readily determined unless is incremental borrowing at the commencement it is 6%, discounting it to 6% we will be taking. At the beginning of the year 6, lessee and lessor agree to amend the original lease to reduce the space to only 2,500 square meters. Which means, sir, this is decrease in scope. This is a decrease in scope, therefore we have to do this kind of an accounting. Okay, sir, we will do very easy thing. Starting from the end of the quarter 6, the annual fixed lease payments are 30,000 rupees. Lease incremental borrowing rate, lessee's incremental borrowing rate at the beginning of the year is 5% they have given. How should the modification be accounting for? Guys, here you have to highlight one thing. Sir, in this question though, only one thing is there. What is that, sir? Decrease in scope plus decrease in lease payment, which means lease term का decrease is not there here. Lease term का decrease is not there here. ठीक है? That is very advanced point what I have discussed. But you just remember that you have to calculate like this. ठीक है? No questions are there. Unfortunately, I don't want to make this complicated. No institute का, I mean, study mat also there is no question. MTPs also they have no question. So directly they will not ask this type of question in the examination. Okay? But this question though I have taken from CA. I have taken for CA, but this is very important. Modification ka question. Definitely there are high chances of coming in the examination. So let us don't leave this. Okay. So at the beginning of year 6, which means 5 years are completed. How many years are completed, sir? 5 years are completed. So what we'll be doing is, sir, running notes page जाकर, okay, first step में working note में what I will be doing is calculation of ROU asset and lease liability as on initial commencement. Initial commencement of the lease, let us take here. Okay, fine. Sir, first of all, what is the total lease payment? Total lease payment of 50,000. Tenure to 10 years. Okay, so first let me calculate the initial recognition ka value. Sir, initial recognition ka value is very simple, sir. 50,000 into present value annuity factor. Sir, how many years? 10 years I have to take. But what is the percentage? Percentage is 6% per annum. This you do, you will be getting initial recognition ka value. So what is the value? Let me calculate 50,000. So 1 by 1.06, 2 years, 3 years, 4, 5, 6, 7, 8, 9, 10. 7.3600, 7.36 into 50,000. If I take, I will be getting 3,68,000 approximately. So sir, the journal entry which I will be passing initially is ROU asset account debtor to lease liability account. Sir, how much is the value? 3,68,000 is the value. ठीक है सर, ROU asset account debtor to lease liability account. So 3,68,000 will be the value which I will be passing at the time of initial recognition. ठीक है, at the time of initial recognition I will be passing that date. ठीक है, fine sir. Okay, let us take the second working note. Sir, second working note में what I will be doing is I will calculate ROU asset and lease liability balance as on date of modification pay. I will be calculating both the values. ठीक है sir, I will calculate like this also. Like this also it is totally fine. ठीक है, like this also it is totally fine. Or let us calculate this also like this. ठीक है, anything is fine guys. So what I will be doing is, let me calculate. Okay, here how much value they have got? So 3,67,950 approximately they have did. Approximately it is 3,68,000 as to how they have got. Sir, here what I will be doing is, let me calculate ROU asset balance at the end of 5th year. At the end of 5th year only, I guess modification have taken place. Yes, that's it. At the end of 5th year, let me calculate this. So see, 3,68,000 minus amortization. If you ask me to do 3,68,000 divided by 10 into 5 years are completed, sir. Okay, so 5 years depreciation if I deduct, then I will be getting 1,84,000. This is the ROU asset ka balance. Sir, now if you ask me to calculate lease liability ka balance, sir, I am standing at the end of the year 5, which means, sir, as on the original date of modification. So if I take the original lease itself, sir, 5 years are still there, 5 lease payments are still there. So sir, if you ask me to calculate the value, I will be getting like this, sir, 50,000 into present value annuity factor 6%, 5 years. I can do like this also, or I can do this also. Anything is fine. You prepare amortization table, still you can get the same to same value, guys. Still you will be getting the same to same value. Okay, fine sir, anything is fine. Here the value is how much, sir? 183,975. How much you got? 184,000. Fine. For both they have calculated like this, but anyways this is also fine. Anyways guys, I have said na, so in order to get ROI asset ka balance, you can prepare depreciation ka schedule. If you want this lease liability ka balance, you can prepare the amortization schedule. But according to me, to get the full marks, I recommend you to follow this only. If you have time in the examination, please follow this. But if you are short of time, then you can go with the shortcut. Okay, fine sir. What is this value first of all? 4.2123 into 50,000. If I do, I will get 4.21. 2,10,500 is the value which I have got. 2,10,500 is the value which I have got. Approximately it is same, 2,10,500. Sir, now what have happened, sir? Here though decrease in area is happened now, so I will be calculating these value. I will be calculating this. That's it. This difference will be read as gain or loss due to modification. So first of all, what I will be doing is next working note number 3 may I will write this. Gain or loss due to lease modification. Gain or loss due to lease modification. Let us try to check this part, sir. So first let me write reduction in ROU asset ka balance. Sir, first of all, current ROU asset ka balance is 1,84,000, but that is for 5,000 SFT. But that is for 5,000 square meters they have given. Anything is fine. Sir, how many square meters are gone? 2,500 meters is reduced, sir. So the reduction in ROI asset is how much, sir? To 184,000 into 50%. If I do, I will get 92,000, sir. My ROI asset should be decreased by 92,000. Sir, what about lease liability? That also let me write. Reduction in lease liability is how much, sir? Reduction in lease liability, so 2,10,500 divided by 5,000 square meter into 2,500 square meter. If I do, I will be getting 210,500 into 50%. If you do 105,250. Try to understand. Sir, my lease liability should be reduced by 1,05,250, but my ROI asset should be reduced by 92,000 only. Sir, what will be the entry which you will be passing? The entry which I will be passing is lease. Okay, let me write the journal entry. Journal entry for closing balance after so lease liability to be reduced by 1,05,250 and ROI asset to be reduced by 92,000. And the difference will be transferred to PL account. So this will be my gain due to remodification. Okay, fine. So now what I will be doing is I will be calculating the revised balances of lease liability and ROU asset. Still modification I have not calculated, guys. Revising modification I have not calculated. I will do that in the next step. So here what I was writing is ROU asset ka balance is how much? So earlier I think 1,84,000 is the value. So 1,84,000 minus 92,000. So sir, here I will get 92,000. And sir, ROI asset is done. Next sir, lease liability. If I do balance is 210,500. These will be my revised liability का balances. ठीक है. Sir, working note 6 में what I will be doing is calculation of revised lease liability as on the date of modification. Calculation of revised lease liability as on the date of modification, sir. How I will be getting? This time I have to calculate the present value of the future lease payments, but this time based on new discounting rate you have to calculate. New discounting rate I have to calculate. So see, lease period is not changed here. If lease period is also changed, I have to calculate this also. But this much complicated they will not give. Okay, so this entry also I have passed. Closing balances also I have passed. Revised balance also I have calculated, and last May revised balance now I have to do. Okay, so the rental is how much, sir? 30,000 only, and balance 5 years are there. So you can write like this: year 6, year 7, year 8, year 9, year 10, 30, 30, 30, 30, 30. Calculate the present value. Like this also can be done, or shortcut also I can do. 30,000 into present value annuity factor. So what is the discounting rate? Revised wala 5%, 6 years. Annuity na. So yes sir, 1 by 1.05. First year, second year, third year, fifth year. I think it is 4 years only. No, 5 years. Because 5 years are done. Beginning of the 6th, correct? So it is correct only. So 5 years you have to take. Take 5 years only now. Yes, you have to take 5 years only, that is correct. %7 where they have given incremental borrowing rate. I think they have given here 5% only now. Okay. So 4.33 into 30,000 if I do. It is correct only. I think it is a printing mistake. Here it is not 7%. It is 5% only they have to write. Okay, sir, if I calculate the values, I think I have also got the correct figure only, which is 129,900 only I also have got. 129,900 only I also have got. Okay. Sir, my revised lease liability ka balance is 105250. So now the entry, final entry will be like this. Sir, my lease liability should be increased more. Sir, but current value to how much? 1,05,250 na. Sir, if I deduct this, 24,650 should be increased. Debit also I will be giving ROE asset 24,650. That's it. 24,650 will be the modification ka value, guys. If you check the question, 24,650 is where we have got approximately the same figure we have also got. Guys, check the entire question. All the adjustments we have made correct only. Okay, go through the question once again, guys. I will be sharing this solution anyways, don't worry. Okay, I will share this. I will share this entire question. Entire solution I will be sharing with you, don't worry at all. Just a moment, where is it? ठीक है सर, last type of modifications. This though, there are high chances that they will not ask this. So we have not taken any questions from this, but let us just speak theoretically. Sir, increase in area is also there, decrease in lease term is also there. Sir, we already know how to do increase in area, and we have already know how to do this decrease in lease term. But what if these two have given? If these two have given, you have to just follow these steps. Okay, first do modification as per C point. C point means first do this thing. Okay, and after that you have to calculate as per C, and again you have to calculate the revised lease liability using this, and finally we'll be doing this part. Okay, again I am saying this is not that much important, so I am not placing much emphasis on this. Aram se I can even leave this point also, still it is totally fine. Finally, accounting in the books of Lease is done. Accounting treatment in the books of lessee is done, done and done. Now, without making any further delay, let us directly start with accounting in the books of lessor. Sir, in this accounting in the books of lessor, though, two kinds of important questions they can ask. 90% they will ask from lessee only, but out of that 10%, so again 90% there are chances that they will be asking, what should I say, that dealer lessor ka question and this unearned finance income. I mean, this finance lease ka treatment in the books of lessor they will ask. Normally from IndAS 116. So there are high chances that they are going to ask IndAS 116 ka lease accounting from the point of lessee. But sir, suddenly if they want to give typical type of questions, they can ask lessor treatment also. Sir, then also lessor treatment of finance lease they will ask. They will slowly learn all the things. Okay? And other thing though, dealer lessor ka question is there. That dealer lessor ka question is also very important. Okay? Fine. Guys, I have already said this point. Sir, lessee books may, whether it is finance lease or operating lease, that will not make much difference. Guys, now the next part is very lighter. Okay, complicated provisions are done. That modification ka part is done. Now we are having light topics. Okay, fine sir. So first, lessor should classify the lease as either the finance lease or operating lease. This kind of classification is required in the books of lessor only, because lessee books may, whether it is finance lease or whether it is operating lease, both are same. Lessee books में whether it is finance lease or operating lease accounting is same ना, but a difference will be there in case of lessor. ठीक है सर. If any one of the five conditions are satisfied, then what they are trying to say is, sir, it will be treated as a finance lease. It will be treated as finance lease. This is important. You have to remember these things. Try to understand. First one, sir, I have entered into lease with, for example, one entity to lease machinery, for example. Okay, sir, 5 years ka lease period is there. Once that 5 years are completed now, that person lessor have given me option to purchase the asset. That person have given me an option to purchase the asset at very less amount, I mean at less than fair value. Sir, after 5 years, the fair value of the asset is 10 lakh rupees, but lessor have agreed to sell the asset for me to 8 lakh only. This is a concept of finance lease, because what they are trying to say is, sir, maximum benefits, how much you have to take, that have already taken by the lessee only. So it's okay, even if it is less than the fair value, still it is totally fine for the lessor. If this option is available for the lessee, that will be treated as finance lease. Sir, second part though, lease term covers majority of the economic life of the asset. Sir, useful life of the asset is 10 years. Okay, lease period though is already 8 years, which means lease term is covering the majority of the economic life of the asset, then it is treated as finance lease. Sir, I have calculated the present value of the lease payments and it is substantially equals the fair value of the asset. Sir, fair value of the asset is 50 lakh rupees. I have just calculated the present value of the future lease payments. It is coming to 49 lakh rupees. Oh, this present value is equals substantially to the fair value of the asset, which means it is a finance lease. Sir, what is the meaning of substantially? Standard have not defined. You have to check the accounting policy of the entity. Standard have not defined the word substantially, but you can say like this, 90%, at least 90% of the asset ka value, if it is equal to the present value of the lease payments, then that will be called as a finance lease. Sir, last point, so asset is very specialized, only lessee can use. Oh, only lessee can use this because it is very specialized, which means if the lease term got completed, that asset will become useless, and anyways lessor will sell the asset to the lessee only, because it is very much specialized. First part, so sir, ownership will be transferred to the lessee at the end of the lessee lease term. Sir, once the lease term got completed, ownership will be transferred to the lessee. If all these conditions, if any of these conditions, if any of the one condition, if any one condition out of the following 5 conditions are satisfied, that will be treated as a finance lease. Okay, sir. Sir, what will happen in case of, guys, this finance lease, so already you have know at interlevel also. At interlevel also similar type of 5 conditions will be there. If I am not wrong, same conditions will be there. ठीक है सर. Sir, can you please tell us what is the operating lease का treatment and what is the finance lease का treatment? Guys, super duper easy it is. Sir, if it is operating lease treatment, asset will be there in the books of as lessor only. So depreciation will be charged by the lessor only if it is an operating lease. Lessor should recognize the lease income on SLM basis over the lease term. So as and when lessor will be receiving the lease rentals, you have to recognize the lease income on SLM basis over the lease term. So this thing though they will never ask in the exam only. What is there? Nothing is there. Operating lease. Lessor will be continued to charge the depreciation on that asset and lessor should recognize the lease income on SLM basis over the lease term, sir. So will this question comes in the exam? No. Sir, then what will be coming? Finance lease. Sir, have they asked it earlier? Yes, they have asked earlier. So this finance lease is a little bit important. Focus, 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 focus. Sir, what is the meaning of finance lease? Finance lease means nothing but, sir, I have purchased the asset. I am a lessor. I have purchased the asset, but my intention is to give the asset on lease. Lessee is there now, that lessee will take the complete benefit from that asset. If you observe majority of the asset useful life will be used by the lessee only. Therefore, lessor have to de-recognize the asset. I am a lessor. I have purchased the asset and I have given the asset to lessee at finance lease. Finance lease I have given. Oh, so now what will be happening is whatever the asset which I have purchased in my books now, that asset should be de-recognized. No depreciation will be given since the asset itself is not there. From where you will get the depreciation? Not possible, guys. Sir, but the second part, if you observe, they are saying lease receivable ka balance will be recognized by the lessor. Lessee books में lease payable balance is there. So lessor books में lease receivable balance will be there. Sir, at which value I have to recognize? You have to recognize at present value of the future payments. You have to recognize at the present value of the future lease payments. That's it, guys. That is also called as net investment in lease. Okay, sir. Sir, next what I have to do? I have to recognize the finance income on such lease receivable in each reporting period. That's it. Sir, first of all, if carrying amount is there, that will be de-recognized. Lease receivable will be recognized and finance income will be received. Finance income will be received, guys. That's it. Very, 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 very easy thing. Now comes the super important discussion. Based on this discussion only, exam they will ask question. Sir, what is this discussion? What is the meaning of net investment in lease? Let us try to understand. What is the meaning of net investment in lease? Let us try to understand. Sir, first of all, net investment in lease understand करने के लिए पहले तो you have to understand what is the meaning of gross investment in lease. What is the meaning of gross investment lease? That also you have to understand. So let us quickly go for little basics. Okay, fine, sir. Sir, first of all, if you observe earlier, what I have said is, sir, while calculating lease payments, I have explained, if you observe, sir, fixed lease payments will be increased. Variable lease payments also, if it is related to index or interest rate, that also should be included. Okay, so next part though, I have said that guaranteed residual value promised by the lessee, that also should be included in the lease rental ka calculation. Guaranteed residual value ka promised by the lessee also should be included. Okay? Yes. So here, while calculating lease payments, you also have to add this guaranteed residual value also promised by the lessor. Lessee. Yes. Sir, now what will happen is you have to understand, now think from the viewpoint of lessor. Okay. Sir, who is the actual owner of the asset? Lessor is the owner of the asset. Sir, if this lease term got completed, the residual value, if there is any, that will be obviously belonging to the lessor only now. Sir, assume 50,000 is the total residual value, and out of this 50,000 residual value, 30,000 is the residual value which is promised by the lessee, and that is called as guaranteed residual value. 30,000 is the residual value which is guaranteed by the lessee. It is guaranteed residual value. Sir, what about balance 20,000? Balance 20k is called as unguaranteed residual value. Balance 20,000 is called as unguaranteed residual value. And now you have to understand, guys. If you are a lessor, you will get yearly lease payments also. Oh, and I will also get this guaranteed residual value also, and I will also get this unguaranteed residual value also. So that's it. Lease payments also will be received by the lessor. Guaranteed residual value also will be received. UGRV also will be received now. Guys, actual pay whether it is received or not, that we don't know at the starting. Initially, we are expecting only the residual value. If I expect 50,000 will be the residual value, 30 will be the guaranteed and 20 will be the unguaranteed residual value. This I am at the time of initial recognition itself I am doing all these calculations. After the end of lease period, okay, it is that is another thing. Whether I will get the actual residual value or not, that is altogether a different discussion. But here, so what are the amounts which lessor is getting, that I have to calculate, and those are nothing but yearly lease payments, guaranteed residual value and unguaranteed residual value also. Okay, sir. Sir, gross investment in lease is nothing but total lease payments made by the lessee plus unguaranteed residual value. I have to take the total lease payments made by the lessee plus unguaranteed residual value. Guys, in this total lease payments, so even guaranteed residual value also will be included, because that will also be paid by the lessee only now. Sir, simply speaking, this gross investment is there now. This is without time value. This is without the time value of money, sir. Example, I have paid 1 lakh rupees for 10 years. So it will become my 10 lakh rupees. Sir, unguaranteed guaranteed residual value, to assume 50,000 is there. Sir, unguaranteed to 20,000. Therefore, my gross investment in lease is how much, sir? 10 lakh 70,000. That's it. That much simple. Sir, no time value of money. Then it is called as gross investment in lease. But suddenly, they will say net investment lease. Sir, what is the meaning of net investment in lease? Net investment of lease is nothing but present value of the gross investment in lease. That's it. Just to calculate this with time value, then you will get net investment in lease. That's it, guys. Present value of the gross investment in lease will become my net investment in lease. Then comes our institute's favorite question, this one. They will always ask you to calculate the unearned finance income. Sir, what is the meaning of unearned finance income? Guys, that is nothing but interest component. Difference between gross investment and net investment will give you unearned finance income ka value. Sir, what about this UGRV? Arre Baba, unguaranteed is nothing but total residual value minus gross residual value. Sorry, guaranteed residual value expected to be paid by the lessee. Guys, just by heart these 4 formulas. Whatever the question they have asked, you are able to solve this question. Sir, gross investment in lease to total lease payment made by the lessee plus unguaranteed residual value, and net investment to present value, and unearned finance income to gross investment in lease minus net investment in lease, and UGRV to total residual value minus GRV expected to be paid by the lessee. That's it, guys. You have to remember these 4, and one exam question let us solve right now. Question number 2 pe jayega, and we will be solving that exam question. Beautiful question, very short question. See, the beauty of these questions is your answer will be completed in only 5 to 6 steps. That's it. 5 to 6 lines, not steps. But you have to write some sort of theory to get the full marks. Okay? Quickly check the question number 2. Question number 2. Where is it? Where is it? Where is it? B is limited ka question, I think it is. Check this. Sir, they are saying B's Limited has leased equipment over its useful life that cost 7 crore 46 lakh 55,000 for a 3-year lease period starting from this. Sir, they have given the value of the item is how much, sir? They have given the present value, guys. Present value is how much, sir? 7 crore 46 lakh 55,000 for a 3-year lease. After the lease term, the asset would revert to the lessor. You are informed that estimated unguaranteed residual value would be how much, sir? 1 lakh rupees. Sir, what is this 1 lakh? This 1 lakh is nothing but UGRV. And they have given this point also. Just read this, you will understand the question. That's it. First one though. The annual lease payments have been structured in such a way that the sum of their present values together with that of the residual value will equal to the cost. Are Baba, they are saying, sir, whatever the present value of the future lease payments plus residual value का present value, if I have calculated at this interest 10%, it will be equal to this value, is what they are trying to say. Sir, do you know what they are saying? Sir, they are saying this thing. Net investment in lease is there, na? This is nothing but present value of future lease payments plus present value of UGRV. This is what they have given in this formula. The annual lease payments have been calculated in such a manner that the sum of their present values with the residual value will equal to the cost. Sir, what is the cost? Cost is, try to understand guys. Sir, the cost is, normally in all the questions they will be giving the future lease payments and you have to calculate the present value now. But in this question to reverse. In this question to reverse you have to do. Sir, what is the meaning of reverse? Sir, they have already given the present value. Sir, what is the present value? Present value to 746 55 100. This they have given. Sir, this I will be getting like this. See, let me write annual lease payment. Okay, let me write lease payment only. I don't know this lease payment. They are asking me to calculate that thing only na. Asset in the lease payment and unowned finance income. Okay? First let me do that part. Sir, this how I will be getting, let us calculate. This is the answer they have given, but let me calculate this part. Sir, see, annual lease payment into annual lease payment into, sir, present value annuity factor 10% 3 years I have to take. Present value of annuity factor 10% 3 years I have to take, sir, but for this I have to add unguaranteed residual value ka PVIF 10% 3 years. That's it. If you calculate this annual lease payment, you will get the value, guys. You will get the value, sir. How? First of all, please tell me. Very simple, sir. 1 lakh into 10% 3 years ka value is 0.751. So 74655 100 minus 75100 if I do, I will get divided by, sir, if I add these two figures 0.909 plus 0.826 plus 0.751 if I do, here I have to take 2.486, then I will get my annual lease payment. Sir, how much is your annual lease payment? Sir, it is nothing but 3 crore. It is nothing but 3 crore and that's it, guys. Answer is done, done. This much simple it is. Just check the ease of the question. Okay, just a moment. Guys, first question is done. See, normally you will be calculating the present value, but in this question though they have given the present value and you have to calculate the annual lease payment. Guys, this is not the first thing which you are doing like this. In your SFM, you have already did this number of times. In your SFM though, already you have did this number of times. Okay, fine, sir. Second part, sir, what is the meaning of unearned finance income, guys? Starting onwards, I am saying this only now. This is very simple, sir. This will be getting by gross investment in lease minus net investment in lease. Sir, gross investment in lease, though, how I will get? 3 lakh is the, what should I say? What should I say, sir? So this 3 lakh is, the 3 crore is lease payment, correct? So, sir, this 3 crore I will receive for 3 months, so 3 years plus 1 lakh is the residual value, sir, minus 746 55 100 is there now. If I do this calculation, I will get this figure, guys. Cross check. Into 3 plus 1 lakh minus 746 5 100. If you do 154 44 900, and that's it, guys. That's it. That much easily they will give this kind of a question. This is exam question, by the way. 7 marks they have already asked in the examination. Okay, so don't miss this question. Aram se just closely understand this question once again and just try to solve this question. All the calculations I have written here only, which is very easy for you. Okay, fine. So now we are moving towards end of the standard, guys. So this part also done. Now some important discussions are there. You have to really understand these important discussions. Okay. So first one though, lease and non-lease component in a contract. Sir, in a contract, sometimes it contains both lease ka component also and non-lease ka components also. Sir, what is the meaning? Can you please give me an example? Answer is yes, I can give you an example. Sir, assume I have decided to take one building as a lease. Along with that building, there is one lift also which comes with the lease. Now, whatever the consideration which I am paying to that lease, it also includes some maintenance services from that building also. Some maintenance services for that lift related maintenance and all also they have been given in the contract itself. In this contract, if you observe, just think from the point of view of lessor. Lessor will give you the lease ka services also, and along with this maintenance ka services also the lessor is giving na. Sir, in this though, lease ka component is also there, non-lease ka component is also there. So here what we have to do, very, very simple. You just have to understand the treatment in the books of lessor also, in the treatment of books of lessee also. Guys, this is important. So listen. From this point also, already one question is asked in the examination. So let us focus 100%. Sir, in the books of lessor, though, what we have to do, guys, you have to allocate the consideration between lease and non-lease components in the ratio of their SSPs. Standalone selling price ke basis pe we have to allocate the consideration. Sir, IndAS 116 related lease component, whatever the lease component which is there na, as per IndAS 116, we have to do the accounting. Sir, what about non-lease component? Non-lease component, you can go for IndAS 115. Whether it is a performance obligation which is satisfied over a period of time, or whether it is a performance obligation which is satisfied at a point in time, you have to find out those and you have to do the allocation cutting. But allocation is must. Allocation should be done between lease and non-lease component in the ratio of their SSPs. One question is there. Let us solve this question. Okay, sir. Sir, in the books of lessee, what I have to do? Lessee books also, you have to do the allocation. 116 related component, lease component should be accounted using IndAS 116, and non-lease component is there na, that will be recognized as an expense. And one thing is there, lessee is there na. Lessee has the option to choose entire contract as a leasing contract. Practical expedient. I don't need to separate. This option is available only for the lessee and not for the lessor. Lessor have to do the bifurcation and have to do the accounting separately. No choice at all for the lessor. But when it comes to lessee, he have an option. He have a practical expedient, which means there is no need for him to separate the leasing component and non-leasing component, but there is option, guys. If the lessee wants, he can definitely follow whatever the prescribed treatment, which means you can bifurcate the things. But if the standard is saying, okay, even though that is not required, that is still fine. Which means I can take the benefit of this practical expedient ka thing. Okay, sir. Done, sir. Done. So, the next part, if you observe, I think there is one question also based on this. So, what we'll be quickly doing is, quickly check that question. Sir, what is that question? Where is that question? Yes, I think this thing. This thing, guys, read the question, very, very simple it is. Sir, they are saying ex-limited entered into lease to lease an entire floor for 9 years. Annual lease rent to 1,40,000. Ex-limited entered into another agreement to use the facilities just specifically mentioned, charging to 2 lakh rupees. The ownership is violated. Incremental borrowing rate is 10%. Okay. The facility agreement shall coexist with the lease agreement and will terminate along with the termination of the lease agreement. facility is there na, that will be there till the leasing agreement is there. So if it terminates, then this agreement also will be terminated. And what they are saying is they have calculated the standalone prices also. Standalone prices of the lease agreement is 2,40,000 and this is 1,60,000. Okay, this is 2,40,000 and this is 1,60,000. X separate has not elected to apply the practical expedient of not separating the lease components, which means now we have to do the separation. Sir, what is the total consideration? Total consideration to 1,40,000 is for lease and 2,00,000 is for service charges. So if I take the 3,40,000, that 3,40,000 should be bifurcated between the standalone selling prices. Guys, this kind of calculation we already did in IndAS 115. Allocation of consideration should be done based on respective standalone prices. Okay, this 2,04,000, 1,36,000, 3,40,000. This 2,04,000 is nothing but lease rentals. So now what I will be doing is for this, I will assume this 2,04,000 will be the lease rental for every year. Okay, and like this I have to do the accounting basics question. This is also very important exam question, guys, by the way. This is also examination question, so super duper bumper important. Okay, sir. Guys, we still have one important question, which is this lease remeasurement and this super duper important accounting of the finance lease by the dealer lessor. So these two things we'll be discussing in the next class. Okay, most of the important questions I have sorted. Some useless questions I have left. Those questions, so definitely they will not come in the examination. So whatever the questions which I have solved, that are more than sufficient. These two concepts also I will be covering in the next class. Okay, fine, sir. Hi guys. In last class, basically we have completed the maximum important part of the standard. Still we are having a few important aspects. So what we'll be doing is, let us quickly check into those aspects. Okay, this lease remeasurement ka part, let us understand, guys. So whatever the lease remeasurement ka accounting which we are learning, that we will be learning in the books of lessee. Lessor though they will not ask in the exam, that is not at all important for you. So we will be only focusing on this lessee ka part only we will be understanding. Okay, sir. So if change in lease payment is due to two options: change in exercising of renewal option by the lessee or change in exercising of purchase option by the lessee. Try to understand what they are trying to say. Sir, see, you have to understand the difference between lease remeasurement and lease modification. Sir, the meaning of lease modification is, in lease agreement itself there are certain changes, which means assume I wanted to increase the scope of the lease, then I will change in my agreement itself to include such modification part. Or if I wanted to increase the lease term or decrease the lease term, whatever it is, those changes, if they will be made in the lease agreement, that will be treated as a lease modification. But these things though, these are internal changes of the entity. For example, earlier entity have assumed that I will not be choosing the renewal option. But suddenly what have happened is, suddenly I have decided to change my mind and I want to accept this renewal option. I want to choose this renewal option. This is called as a remeasurement, because earlier if I not decided to take the renewal, I will not be including that extended period in my lease term na. But suddenly what have happened is that this renewal option now I wanted to opt, which means I have to include that extended part of lease term also in my lease liability calculation. I have to even include the lease rentals of that extended lease term also while calculating the lease liability calculation में. ठीक है sir. Second part of remeasurement though, sir, earlier I have decided to opt the purchase option. Earlier I have decided to opt the purchase option which is given by the lessor at the end of the lease. But now what I have decided is, I am thinking that asset will be useless, so I don't want to exercise such option. So still now also there will be change in the remeasurement. There will be change in the measurement of your liability, and now what you have to do is you have to again remeasure your liability. Sir, this measurement is a significant remeasurement. Sir, why it is significant remeasurement is, earlier though my decision is completely different thing. Here if you observe, I have thought renewal option may be exercised by the lessee, but now I have decided to change my option. Here also, earlier I have decided to obtain the purchase option. Earlier I have to take the purchase option, but now what I have decided is I don't want to take the purchase option. Which means I already significant changes is there. That is the reason why you are changing your mind and deciding either to opt this or opt this. So that is the reason why they are saying this will be treated as a significant remeasurement and you have to do accounting accordingly. ठीक है sir, but what if it is an insignificant remeasurement? Insignificant remeasurement is nothing but if there is any change is due to future lease payment because of change in interest rate. Sir, if future interest rate is changed, for example, assume if there is any change in interest rate or expected value of GRV may, if any change is there, my lease liability have to be recalculated once again, and this remeasurement will be insignificant because the reason is on the date of the lease commencement itself I know that this variable payment will be changing in the future because it is clear cutly a variable lease payment. And expected guaranteed residual value calculation also, I already know that this is an expected value, and at the time of expecting itself I know that it is going to get changed. Therefore, this kind of a remeasurement, what they will be calling as, they will be calling it as an insignificant remeasurement. Sir, simply speaking, those remeasurements which the lessee have already expected that it is going to change in the future, those will be treated as insignificant remeasurements. And if the remeasurement entity have not expected it is going to change, okay, so these will be treated as a significant remeasurement. Sir, what is the accounting which we have to do? If it is a significant or insignificant, what you have to do is whatever the same accounting as we have discussed in lease modification earlier. Lease modification may whatever modification, which means you just have to calculate the lease liability का value and ROE set the value as of the date of modification. ठीक है? हाँ, as of the date of modification using a new discounting rate you have to find out. All those steps will be exactly same if it is a significant remeasurement. But if it is an insignificant remeasurement, this is one point which you have to remember. Sir, what is that point? Sir, you have to apply the same accounting as in point B, which is lease modification, but you have to use the original discounting rate instead of modified discounting rate. Because since this is an insignificant remeasurement, since I have already know that it is going to change, there is no need for me to give the effect of new discounting rate. I can continue with the original discounting rate is what the standard is basically suggesting. Okay? Yes, sir. Now, we have one question basically, so let us quickly check that question, which is question number 7. Good question it is, remeasurement ka question. So let us quickly check this question number 6. Okay? 1 second. Yes, sir. So check this part, guys. Sir, they are saying entity W entered into a contract for the lease of retail store with entity J in January 1120 X1. They are saying initial term of the lease. Just a moment. They are saying, sir, initial term of the lease is 5 years with renewal option of further 3 years. Sir, as on the date of commencement of their estimation is, initial term is 5 plus renewal to 3. So total 8 years. Okay? But we have to check if the entity wants to opt this renewal, its lease tenure will be 8 years. If the entity don't expect, then its renewal will be only 5 years. Its lease term will be only 5 years. They are saying, sir, the annual payments for initial term and renewal term will be 1 lakh and 1 lakh 10,000 respectively. Sir, during the first 5 years though, my lease rental will be 1 lakh rupees only, and in the next 3 years, which means in the extended period pay, my lease rental will be going to be 1 lakh 10,000 respectively, sir. Original lease term to 1 lakh, enhanced, renewed lease term to 1 lakh 10,000 is the rentals. The annual lease payment, okay, will increase based on the annual increase in the CPI. Guys, this is nothing but variable payment linked to the index. And we have already written this point that it should be included in your lease rental calculation. Observe the wordings carefully. The annual lease payment will increase based on the annual increase in the CPI at the end of the preceding year. Previous year ka CPI you have to take, and based on the previous year ka CPI, my current year ka rent is going to change. For example, 1120X2 payment will be based on the CPI available on 31st December 20X1. Take last year ka CPI ka value, and based on that value you have to calculate the lease liability for the current year, guys. Okay, sir. Entity W's incremental borrowing rate at the lease inception date is 5% and as on 1120x4 is 6% respectively. So they have given two dates. First one to 1120x1, 1120, where is it? X1, that is lease inception date, and second date is 1120x4. Sir, what is this 1120x4? I have not read the question, but I am getting a feeling that on this 1120x4, some modification is going to get happened. Some modification is going to get happened, and because of that only they have given the incremental borrowing rate, which is 6%, and they have also given the CPI at the lease commencement date as on 1120x4 is 120 and 125 respectively. Sir, CPI as on commencement date is 120 and 1120x4 CPI is 125. Very very careful guys. Sir, commencement date ka CPI is 120 and next year, I mean 1120x4 on the date of modification it is 125 respectively. Let us understand the question guys. Let us understand the question. Okay. So we are currently standing on 1120x1. This is the lease inception, correct? Yes sir. Sir, 1120x2 is done sir. 1120x3 is also done sir. 1120x4 is also done sir. Okay. Fine. Sir, what they are saying is, one second, let me just read the question. Okay, sir. Sir, first though, if you observe, sir, see, this 1120x1 may, sir, till this year, 1 year got completed, and till here, second year got completed, and till here, third year is also got completed. Okay, yes sir. Sir, year 1 is this, year 2 is this, and year 3 is this. Now try to understand, sir, this lease rental is dependent upon the CPI as on this date. This lease rental is depending upon the CPI as on this date. I mean during this year. Similarly, sir, this lease rent will be dependent upon the CPI during this period. And this lease rent will be depending upon the CPI as on this. Now, if you observe the wording, sir, they are saying CPI as on lease commencement is 120 and as on 1120x4 is 125. Which means, sir, next period jo hai na, this period. During this period, my CPI is 125. Which means, while calculating 1120x4 ka lease rental, I will not be considering the change 125 because previous year ka change I have to consider na. If I want to calculate this 1120x4, I have to consider 20x3 ka index. It have not changed. What have changed is 1120x4 ka interest is changed, and therefore year 4 ka rental income will be changed. Sir, how it will be changed? Guys, very simple. Sir, 1 lakh is there na. 1 lakh is for 120. 1 lakh is for 120, but now the index got changed to 125 na. So this will give me 1 lakh upon 120 into 125. If I do, I should get 1,04,167. 1,04,167 would be the lease rental which I have to pay on this date, which is 1120x5. 1120x5 का lease rent will be 1,04,167. ठीक है sir. Next, here comes the major part, guys. At the lease commencement date, they are saying did not have a significant economic incentive to exercise the renewal option. Oh. Starting what I have assumed is I don't want to opt this renewal option, but suddenly on this date though, on 1120x4 though, my opinion got changed and I wanted to exercise the renewal option. Which means if you check this part in the question page, this point is there. and this point is also there. Sir, which means in the question though, if there is a significant remeasurement also and if it is an insignificant remeasurement, if both are there, then we will be doing accounting assuming it as a significant remeasurement. Sir, but what if only this insignificant remeasurement is there? Then we will be calculating the modification using the original discounting rate. Sir, but what if it is both significant and insignificant? Then I have to assume it as a significant remeasurement only. Nothing, guys, very, very normal it is. Okay, so now what I have to do is, sir, my lease term is 8 years. My lease term is, sir, original 5 and balance 3. Sir, currently though, first year is done, second year is done, third year is done, so 5 years are left. 5 more years are left. Sir, and if you observe, sir, for these first 5 years only, na, for these first 5 years only, my lease rent is 1 lakh. Sir, next enhanced period though, it is going to be 1 lakh 10,000, na. This is what they have written here. Okay, sir. Sir, here 1,04,167, 1,04,167, and 5 years got completed. Therefore, for the balance period, though, 1,10,000 should be the base rental. Sir, but how you have got this figure, guys? That is nothing but 1,10,000 divided by 120 into 125. If you do, you should get this 114,583. 1,10,000 divided by 120 into 125. If I do, I will get this 114,583. That's it. Sir, but at what value you have to calculate the present value, sir? Guys, I have to take this. I have to take the discounting rate as on the rate of modification, and that's exactly you have to solve the question. I have taken the discounting rate as 6%, so the rest of the calculation is pretty normal. Here they have written the following table shows, okay, the CPI has increased by 4.167%. So revised lease liability will be 4,91,376. I think if you calculate the present value, you will get this 4,91,376. Sir, but on the date of lease liability, on the date of remeasurement, my value is only 1,95,244. Sir, but how you have got this? They have calculated working note 1. Sir, if you observe, earlier though, I don't know na. Sir, what you don't know, sir, earlier though, I don't know that my index is going to change. Earlier, I don't know my index is going to be changed na. So if you observe this part, I have to take this 1 lakh only for the 5 years. Okay, so my lease liability का present value will be 4,54,600. This is initial liability का calculation. Sir, what is this? This is initial recognition का calculation. But we also have to calculate both the values as on the date of modification also, na. Sir, 3 years are only done, na. So after 3 years, my outstanding balance will be 194,244. This is my lease liability ka existing balance. Sir, but how much it should be? It should be 491,376. But actually, it is only 195,244. So the difference is there, na. The difference 296,312 to lease liability will be credited and ROU set will be debited. Same I have calculated ROU set ka balance also for the first 3 years I have calculated, and it have got to 181,840. Guys, very, 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 very easier question. Okay, just calculate once again. Aram se you will understand the question. The only thing which you have to be a little bit careful is this index ka payment. You have to interpret this thing carefully. Based on the annual increase in the CPI at the end of the preceding year, our index is going to get changed here. So based on that only our calculations are going to get changed. Okay. Yes, sir. I hope this question is pretty clear, but you have to practice this question definitely, guys. Then only you will be able to understanding this type of questions. Okay, sir. So I think this is done. Sir, if question may both significant is also there and insignificant is also there, we have to give the preference to the significant remeasurement only, guys. Okay, sir. Now the last concept which is pending is accounting of finance lease by dealer lessor. Accounting of finance lease by dealer lessor. Let us understand this because this is important aspect. Examiner will ask questions on this aspect. Okay, fine, sir. So next concept, guys. Sir, dealer lessor. First of all, you have to understand. Sir, what is the meaning of dealer lessor? What is the meaning of dealer lessor? Okay, so assume there is one person whose business itself is to give the assets on lease. Sir, I am a dealer of items also, and my business itself is to give the assets on lease. For example, Alibaba, if you observe, any automobile car dealers, if you observe, sir, their business to hai na, their business to definitely assets will be transferred, and their main job itself is to transfer the assets on lease, which means whatever the asset which is there in their books, that will be given as a finance lease. So here what they are trying to say is similar accounting treatment like finance lease you have to follow. But another thing you have to understand is asset is already there in the books of dealer na. So first of all that asset should be de-recognized. First of all that asset should be de-recognized and lease receivable should be booked. Asset should be de-recognized and lease receivable shall be booked. Okay, that is normal setting. Sir, but here in addition to that transaction, since he is a dealer, what you have to take is, since you are a dealer, what you have to take is, you have to book the profit also on transfer of this asset, on transfer of this good basically. On transfer of this good, what we have to do is, you have to also book the profit as well. So what is the meaning of also book the profit? Guys, very simple sa calculation. So just to follow this entry, aram se you can sort any question which I have given. Any question which I have given in this, we can aram se sort. Sir, first of all, since it is finance lease, in my book, so I will be getting lease receivable. ठीक है सर, लीज रिसीवेबल इज नथिंग बट नेट इन्वेस्टमेंट इन लीज का वैल्यू आई विल बी टेकिंग. नेट इन्वेस्टमेंट इन लीज का वैल्यू आई विल बी टेकिंग. सर, दिस नेट इन्वेस्टमेंट इन लीज इज नथिंग बट प्रेजेंट वैल्यू ऑफ द फ्यूचर लीज पेमेंट्स प्लस अनगारंटीड रिसीवेबल वैल्यू. Normal sa point. Sir, to asset will be credited carrying amount. Whatever the carrying amount is there, that will be credited. But another thing is sales and cost of goods sold also should be taken. Sir, what about this cost of goods sold and what about the sales account? Guys, here what I am trying to say is, sir, there is no doubt that since the person is a lessor, you have to book this finance list. But another thing is, since he is a dealer also, you have to book the profit on sale of that asset. You have to also book the profit on sale of the asset. Sir, if I imagine the trading account of my earlier days, in this trading account, the opening stock I will write, purchases I will write, closing stock I will write, and the closing figure will be my sales. Closing figure will be my sales. Sir, this sales ka figure to anyways I have written down here. I have to write this sales ka figure here. But another thing what I have to write is debit side though I have to take the cost of the asset. Debit side though I have to take the cost of the asset. And while taking cost of the asset, I have to make the adjustments for opening stock less purchases minus closing stock. Na? Similar to that, we have to do adjustment like carrying amount. Okay, carrying amount is there now, whatever the carrying amount which is there. While writing this sales ka figure, you have to take the net investment in lease, but from this net investment in lease, you have to deduct something which is called as present value of the unguaranteed residual value. Sir, why I have to deduct this present value of unguaranteed residual value? Try to understand. There is definitely logic, guys. Okay. Okay, sir. So here, as I have been saying that since he is a dealer of the asset, he also have to recognize the revenue because the asset is now transferred. Okay. So sir, as per IndAS 115 though, I have to record the revenue. Correct? Yes, sir. So what will be the revenue? You have to remember this part. Sir, because revenue may this IndAS 115 is saying one thing, that while recording whatever is certain, you have to recognize the same amount. Okay, in IndAS 115, if you remember, you will be recognizing only that part of the revenue which is probably certain to get recovered. Okay, we also know that, sir, this present value of unguaranteed residual value is there. That unguaranteed residual value, though there are high chances that lessee will not be paying only because it is not at all guaranteed. Okay, not high chances, there are no chances that lessee is going to pay. So out of this net investment in lease, if I deduct the PV of UGRV, I will be recognizing only that much amount which I am reasonably certain to receive. Okay, so that is the reason this amount will be credited And since you have deducted the PV of UGRV calculation in the sales amount, the same amount while calculating cost of goods sold also should be deducted. But here, sir, the sales amount too will be deducted from net investment in lease, but the cost of goods sold amount will be deducted from carrying amount of the asset. So entry will be here, if you are writing cost of goods sold, carrying amount of the asset minus PV of UGRV we have to take. Sales amount may be NIIL minus PV of UGRV we have to take. Okay, fine, sir. I hope this point is pretty clear to you. So now what we'll be doing is, let us understand last. The thing is, there are no questions which are asked from this portion. So what we'll be doing is, let us understand this sale and lease back transaction. What let us do, sir? This sale and lease back transaction. Here the thing is very simple, guys. Sir, first of all, there is one person. Okay, and that person will be selling one asset. So whoever the seller is there now, after transferring the asset, he again wants the asset as a lease. He again wants the asset as a lease, and this is called a sale and lease back transaction. Okay, so first of all, the seller have gone ahead and transferred the asset, but the thing is he wants the asset back. Sir, why usually this kind of a situations can take place? Guys, assume a situation like this. Sir, seller is there now. Seller is badly in need of the funds. So what he is doing is he just transferred one of the asset to some new person, but still he needs the machine to do day-to-day operations. So what he have decided is he have requested the buyer and asked him to give the asset on lease. So in this case, if you observe, the seller and leasee both are the same parties. Seller and the lessee both are the same parties. In the same manner, buyer and lessor also will be the same parties. So this buyer lessor jo hai na, this seller lessee will be taking the asset back on the lease. Here what you have to understand is, sir, if control of the asset is not passed to the buyer lessor, then it is treated like a financing arrangement ka transaction. Sir, if control is transferred, then it is fine. Then it will be treated as transfer of asset is taken place. Then it is said that sale will be recognized. But if control itself is not transferred, what they are saying is it is just a financing arrangement, which means the seller lessee wants some funds. So it have designed the transaction in such a manner that it look like sale of an asset. But since control is not transferred, they are saying normal loan ka accounting we will be doing in our books. Okay? But if the control is transferred to buyer lessor, then we have to do the accounting for sale and lease back. Sir, what we have to do, guys, very simple. Sir, if any asset is transferred, first my bank will be debited. And credit to, sir, I will be giving to asset ka carrying amount. Correct or not? Sir, bank account data to asset account. Okay, sir. Sir, another thing is, since I am the lessee right now, I will be recognizing the ROU asset also na. And along with this ROU asset, I have to recognize the lease liability also. Okay, sir, see, if you check this entry, we have to recognize the cash or bank for the sales amount. So whatever the amount which you have received at the time of the sale, that we will be recognizing the cash or bank amount. So next thing though, we have to de-recognize the asset sold at carrying amount, which means, sir, whatever the carrying amount of the asset is there now, that carrying amount of the asset should be de-recognized, which means it should be credited. Sir, now we have to recognize the lease liability also na. Sir, this lease liability also I have to recognize, but at present value of lease payments, normals accounting, guys. Now ROU asset you have to take, because now I am getting the right of use such asset. So here, don't take the complete lease liability. You have to take the proportion. You have to take the proportion of the carrying amount to its overall fair value. You have to take the proportionate ka amount, and only that proportionate ka amount will be appearing in this ROU asset. Okay, just remember this part, guys. Balancing figure will be treated as a gain or loss on sale and lease back. If the difference comes to debit side, that will be treated as a loss on sale and lease back. If the difference comes to credit side, that is treated as a gain on sale and lease back. Okay, guys, strictly speaking, this sale and lease back though, it is little bit complicated as well. But the thing is, our institute pay, they will not ask any question because there is no content at all in this, but we have discussed a little extra. But what if they have asked any question? Okay, so that is the reason how we have to do also, I have explained here. So since no questions are asked, I am not going this into in depth. But what we have to do is, in case of a sale and leaseback transaction, first I will be debiting the bank for whatever the amount which I have received, and I will be crediting the asset ka account, and I will be crediting the asset ka account at whatever the value which I have transferred the asset na. I mean whatever the carrying amount of the asset transferred is there, that will be credited. But now, sir, since I got the right to use the asset, I will be recognizing the ROU asset also. Oh, if your ROU asset is recognized, you have to also recognize the lease liability also na. But while recognizing this ROU asset, now you have to take the proportionate value only of the lease liability. Now this figure, balancing figure, will be treated as a gain or loss on sale and leaseback. That much if you understand, more than sufficient, guys. Okay, fine, sir. Sir, now what have happened is, based on this part, dealer lessor ka, we have one question. So let us quickly check this question number 8. Guys, this is also very important. This is also very important. So in this chapter though, I have been trying to solve almost all the types of the questions. Okay. After completion of this, I will be explaining what all the questions or what all the concepts which are very important from this IndAS 116 ka perspective. Let us slowly analyze those part as well. Okay. Fine, sir. So if you check here, only they have given the word dealer lessor. Dealer lessor they have given, which means you have to straight away remember two things. Sir, first of all, I have to recognize finance lease. First of all, I have to recognize my finance lease receivable. So lease receivable will be debited, and credit though I have to give the carrying amount of the asset. Credit though I have to take the carrying amount of the asset, and the debit though I have to give to the lease receivable. That you have to get in your mind. And since again they have used the word dealer, you have to also book the profit on sale of that asset also. Since that asset got sold, you have to also book the profit also as per IndAS 115, but the treatment also have been given in IndAS 116 only. Okay, if you simply remember this, our job is done. Okay, lease receivable pay, it will be recognized at NIIL. Sir, what is the meaning of NIIL? NIIL is nothing but present value of the future lease payments plus unguaranteed residual value. This future lease payments ka calculation may I will be also taking the guaranteed residual value, because future lease payment means all the payments which are made by the which are agreed to be made by the lessee. We will be taking all those points, which means, sir, while calculating net investment when lease na, I will be taking all the future lease payments along with the guaranteed residual value, and even the unguaranteed residual value ka present value also I will be taking. Okay, sir. So if you check the question, you will understand, guys. The equipment is not specialized in nature and is expected to have an alternative use to lessor at the end of the 10-year lease term. Under the lease, they are saying lessor receives annual lease payments of 15,000 payable at the end of the year. 15,000 for 10 years you have to pay, guys, which means you will be aram se calculating the present value using this calculation. They are saying lessor expects the residual value to be 50,000 at the end of the 10-year lease term. Lessee provides a residual value guarantee that protects the lessor from the first 30,000 of loss for a sale at a price the below estimated residual value at the end of the lease, that is 50,000 rupees. So total expected residual value to 50,000, out of that 30,000 ka guarantee to lessee have been given. Sir, but what if the loss is above 30,000? If the loss is above 30,000, then lessor only have to bear the loss. Then who have to bear the loss, sir? Lessor only have to bear the loss. So UGRV ka value to how much, sir? See, total, one second, total residual value to 50,000, out of which GRV to 30k and UGRV to 20k. Okay, sir. Again they are saying, sir, the equipment has an estimated remaining life of 15 years, a carrying amount of 1 lakh rupees and a fair value of 1,11,000 rupees. Okay, sir, the lessee do not transfer the ownership to lessee at the end of the lease term or contain an option to purchase the underlying asset. Sir, they are trying to say that the lease may, once the end of the, what should I say, if end of the lease term is completed, they are saying that it is not having an option to purchase the underlying asset. Guys, if you remember those 5 conditions of the asset, whether it will be treated as a finance lease or not, you will understand what I am trying to say. Okay? And they are also given interest rate implicit in the lease is 10.078%. In this dealer lessor ka question, though, always they will give the finance lease only. Always they will give the finance lease only, because if you check, they are saying estimated useful life of 15 years. What is this 10-year ka lease they have given, which means we cannot say that, we cannot straight away say that this is substantial lease payment. this period is there in a lease term, that is not substantial economic life. Okay, if you just calculate the percentage, just a minute. It is coming to 66.67 percentage. So what I have to see is, if you check this part, the equipment is not specialized in nature and is expected to have alternate use, which means they are indirectly saying that the lessee is not ready to purchase the asset at the end of the lease. Also, if you check this part, they are saying the lease do not transfer the ownership to lessee at the end of the lease term. There is no option also. Sir, one more thing also we can calculate, and what is that is nothing but present value of the future lease payments I have to do. Sir, why we have to do this? Because they have given the fair value of the asset. And if this is substantially equal to, if this fair value is substantially equal to the present value of the future lease payments, then I can say that this will be treated as finance lease. This will be treated as finance lease. So strictly speaking, sir, this net investment in lease is there now. So here I will be recognizing lease receivable. Lease receivable will be debited. Sir, credit I have to give to asset. Credit I have to give to asset. So here COGS revenue both are fine, sir. Sir, this net investment in lease ka value, to we already said that, sir, this value will be recognized at NIIL. This will be recorded at carrying amount. Revenue will be recorded at NIIL minus present value of the UGRV. And this amount will be recognized at carrying amount minus present value of the UGRV. That's it, guys. Answer is very simple. If you check the answer, sir, where is the answer? Net investment in lease का calculation if you do, sir, I have to take 10 years का 15,000 value and 10th year में only GRV का calculation I will be doing. Guaranteed residual value will be 30,000, so my present value is 103,340. But UGRV का present value also if I take, which means 20,000, it will be coming to 7,660. Sir, if I add these two figures, I will be getting my net investment. Which means, sir, 111. Sir, if you check the fair value in the question, sir, fair value of the asset is also, they are trying to say that exactly 111,000, which means it is equal. Fair value, future present value of the future cash flows is exactly equivalent to the fair value of the asset. So this is going to be a finance lease only. This is going to be a finance lease only, sir. So here I have to take this 1,111,000, and if I deduct the present value of the UGRV, which means 1,111,000 minus, if I do 7,660, I will get 103,340. I will get 103,340. So where is it? So this will be the entry which I have to pass. ठीक है sir, asset का carrying amount they have given 1 lakh rupees now. So 1 lakh carrying amount will be credited. Sir, debit, so I have to take carrying amount minus PV of the UGRV, which means 1 lakh minus, sir, UGRV ka amount, to what they have given, sir, 7,660. If I take, I will be getting 92,340, which means it is exactly correct. They have written some theoretical part, so much of explanation they have given, but this much explanation is not necessary also, first of all. Okay. How should the lessor account for the same in its books of accounts? Okay. This entry will be the normal entry which we have to pass, and the thing is, this is the normal entry which they have passed. Sir, cash to 15,000 will be received. Net investment in the lease to 3,813. Interest income to 11,187. Like this, we have to do the accounting. Okay. Normally, instead of this, what we'll be doing is lease receivable. We will be normally doing. Okay. They have passed the net entry, but we have to go ahead and book. You have to go ahead and book every year. So unwinding of finance income we have to do. Okay. Fine, sir. So this question is also very nice question. We have completed even this question also. Okay. Yes, sir. Now if you check additional questions, all we have completed. Sir, this fifth question though, very chotu sa question, easiest question. You please try this question, no complications at all. Very basic sa question. So I think you can able to manage this. Even if you don't do this question, still it is fine. Fourth question also, same thing, sir. We have already explained. What should I say? Theoretical part is already I have explained in the standard itself. That's what we have to do with this ROU asset. How we will be getting lease liability you will take plus lease payments made to entity you will add, and lease incentives you will deduct, initial direct cost you will add. So finally you will get the what's this lease liability ROU asset ka value. This also I have explained. So aram se if you have time you can check this part. Second question also I have solved it. So the last question which we'll be solving is this first question. Okay? Yes sir. So last question which we'll be solving is this first question. Fine sir. Okay, so the last question, let us quickly start with this little bit typical question. I'm not expecting this question they will ask only for 7 marks, because in this question though it is a very comprehensive type of a question wherein they have mainly focused on both lessee as well as lessor ka accounting treatment also. Okay, so it makes a little bit the question a little bit complicated. There is one typical adjustment which they have did in the question. That kind of adjustment though normally we should not do in other questions. Okay, so whatever the concepts which we have learned in solving all the other questions, that is different, and only one type of a typical question is there. Sir, is this question from our institute ka resources only? Answer is 100% yes. This question is taken from ICMAI ka study mat only, so we shouldn't ignore this question. So what I have thought is this type of typical questions though, I have been saying this from the very starting itself, that these questions will be called as ambiguous questions. So students should always take the benefit of these ambiguous questions. You have to remember these questions, otherwise with the normal conceptual understanding you cannot solve these type of questions. Okay? So let us go through the question first of all. In this though, in lessee accounting treatment there is no complications at all. Lessee accounting treatment though normally we will be doing, but the real complication is lying in lessor ka accounting treatment. And what is that complication? Let us try to understand the question normally. Okay, sir. So if you observe lessor Y leases out an equipment having 5 years carrying amount to 1,36,000 to lessee X for 3 years of annual payment of 50,000 rupees at the end of the year and residual value to 50,000 rupees guaranteed by X up to a loss of 30,000 rupees. Sir, here by having the first reading of the question, what I have understood is Y is the lessor, X is the lessee. Lease payments though 50,000 for 3 years, which are payable at the end of every year, carrying amount to 1,36,000. Its useful life is 5 years. Okay. And the interest rate implicit is how much, sir? 10%, which means this we will be using for calculating the discounting rate. This we will be using for calculating the discounting rate in the books of both lessee also and lessor also. Okay. And they are saying, sir, residual value to 50,000 hai. So if you analyze the thing here, what they are trying to say is that the residual value is only 50,000. Residual value to 50,000, but out of which guaranteed residual value to how much, sir? 30k rupees is the guaranteed residual value. Which means, let us try to understand like this. Sir, after the end of 5 years, what have happened is lessor Y have tried to sell the asset. At the time of selling, sir, he have realized 40,000 rupees. He have realized how much, sir? 40,000 rupees. So he have realized. Now Y will ask S, you have guaranteed 30,000, correct? So I have realized only 40,000. Therefore X have to pay 10,000 in this case. X have to pay how much, sir? 10,000 in this case. Okay, sir. Second case, let us analyze. Sir, second case, so residual value is 50,000. Let us assume, sir, after end of the useful life though, Mr. Y have realized 30,000. Now again Y will go to X and ask, X, you have guaranteed 30,000 ka residual value. I have realized only 30,000, which means I have lost 20,000. So that 20,000 is within your promised amount, which is 30,000. Array, you have decided to compensate 30,000 na, but my loss is only 20,000. So you please compensate me 20,000. That is more than sufficient for me. Like this, who will request? Y will request to Mr. X. Therefore, now X will compensate how much, sir? 20,000. So X will compensate. Now another typical scenario, sir, at the end of the useful life, so assume Y have realized only 20,000. Again Y will go to X, I have got 30,000 ka loss, and you have also promised me 30,000 only now. So please pay me 30,000. Please pay me 30,000. This is the situations. But let us imagine this worst case scenario. Sir, he have sold the asset and he have got only 10,000. Now, Y is saying X, I have sold the asset, I have got only 10,000 rupees. Now, can Mr. Y ask Mr. X to please pay me 40,000? Answer is no, because the guaranteed residual value is how much? 30,000 only. The guaranteed residual value is how much, sir? 30,000 only. So Mr. X can give balance 30,000. This is what you have to understand the meaning of guaranteed residual value. It is nothing but the maximum amount which will be compensated by lessee to lessor in case lessor fail to realize the expected residual value. Okay, that is the meaning of guaranteed residual value. Fine, sir. And they are saying at the end of the lease though the equipment is valued at 33,000 rupees. At the end of the lease though the equipment is valued at 33,000. Guys, you have to understand, sir, on the date of starting of the lease I am expecting 50,000 as the residual value, and out of which only 30,000 will be paid by the lessee. But this 33,000 is there now after completion of lease term. Why have sold the asset and he have got 33,000 rupees? Try to understand. Okay, sir, but this point though we will know only when the lease term is completed, na? Fine. So first let us talk about show accounting treatment in the books of X. Now my question to all of you is, sir, on the lease starting date, do we know that the realizable value after the end of 5 years is going to be 33,000? Answer is no. This you will know only after the completion of the lease term, na. So what they are trying to say is they are asking you to calculate and they are asking you to show the accounting treatment in the books of X. Guys, very very simple sir treatment. Sir, can you tell me what are the lease payments? What are the what should I say? What are the lease payments which should be included? Very very simple, sir. That 50,000 for 3 years is an annuity ka amount, and while calculating the lease liability ka present value, I will be taking that. Sir, what is the discounting rate? Discounting rate to 10%, that also they have given, and I will be taking guaranteed residual value also, sir. And what I will be taking is, guys, guaranteed residual value, which means 30,000 ka present value also I have to take. Okay, fine, sir. So here I have taken a lease payment ka 50,000 ka present value, and here I have taken guaranteed residual value ka amount also. ठीक या नहीं ठीक? ठीक है sir, but now what have happened is, if you check, sir, after the end of 5 years, so what have happened is 33,000 you have realized. So now try to understand, sir. Mr. X have returned the asset, and Mr. Y have sold the asset and he have got 33,000 rupees. Now lessor will go to lessee and ask AXXX. I have got only 33,000 rupees, which means the loss which I have suffered is how much? 17,000. But you have promised me to pay. But you have promised me to pay how much? 30,000 na. So you have to pay me not full 13,000, but I want this 17,000 rupees. I want this 17,000 rupees at the end of the lease term, Baba. At the end of the lease term, though, sir, how much I have to pay? I have to pay this 17,000 rupees. I hope you have understood the point. Okay, sir. So first, sir, can you please tell me what is the value of my lease liability which I have to record, sir? Lease liability ka value, so present value of all the future lease payments na. So if I add this present value at this item also, I will be getting this 146,882. Okay, let me cross check and confirm. So 45,454.55 plus 41322.31 plus 37,565.74 plus 22,539.44. If I do, I will be getting 146,882. You can ignore the decimal for the time being. Okay, sir. Sir, they have here calculated the amortization schedule ka thing. They have calculated the amortization schedule ka thing, sir. Year 1 ka balance to 146,882, sir. If I charge 10% interest and 50,000 is repaid, first year end ka closing balance is this. In the same manner, if I repeat for second year also and third year also, third year end pay, my residual value should be how much, sir? 50,000. Third year end pay, my balance should be how much, sir? 50,000. Sorry, 50,000 also will be repaid, and my closing balance should be only 30,000, because if you remember, you have taken this value only. Okay? So this will become 30,000, out of which I have to pay how much? I have to pay 17,000 only. I have to pay 17,000 only. Try to understand. Okay, sir, but this 30,000 to 17,000 to I will pay. Sir, what about balance? 13,000 balance. 30,000 is remission of guarantee, which means for me, no need to pay. Sir, what you will be doing? I will be transferring this amount to PL account. I will be transferring this amount to P&L account because this is a remission of a guarantee. Remission money, you can say like this, cancellation of a guarantee amount, which means that should be an income. So lease liability will be debited and credit I have to give to the P&L account. Try to understand this part, guys. At the end of the 5th year though, since he have received 30,000 from the sale of asset lessor, he will come to lessee and ask, pay me the guaranteed amount. But this person have guaranteed only 30,000. But the loss is not that much now. Sir, here the loss is how much, sir? Only 17,000. Therefore, please pay me balance 17,000. I hope you have understood the point. Okay, sir. Here they have calculated ROI asset ka depreciation schedule also they have calculated. 3 years is the usable, 3 years is the lease term. So I have to do like this. Okay, sir. They have given blah blah blah, some story they have given. So entries also they have passed it. So okay, let's quickly check this entry. ROI asset to lease liability, we know this. Sir, interest at the year 1 lease payment. Okay, depreciation also they have charged it. Very good, sir. Interest at the year 2nd lease liability payment, depreciation also. We can write another entry also to transfer the depreciation and interest expense to P&L account. So the entry which I will be passing is P&L account debtor to interest to depreciation. Like this one combined entry also you can pass. Aram se things will work like this. So lease 3 also I will be writing this. And now what have happened is still you are having 30,000 in your bank, 30,000 in your lease liability account. So out of this 30,000 though, P&L pay 13,000 will be transferred and to bank pay I have to pay 17,000. And here your lease liability is there, na? That will be entirely cancelled. That will be entirely cancelled. And if you remember, sir, we will not check whether the lease is finance lease or operating lease in the books of lessee, and we have not checked only, first of all. And we have not checked only in the books of lessee. But now if you observe, lessor ka books mein, as I have said, lessor ke books mein, as I have said, okay, here they have given the presentation of the financial assets also. ROU asset will be presented as an asset, lease liability will be presented as a liability. Okay, P&L account mein, sir, what items will be coming, interest will be coming, depreciation will be coming, and last year may guarantee I have remitted, na, that amount also will be coming. Sir, cash flows may what will be coming is whatever cash payments which you have made, that will be coming in the cash flow statement. ठीक है ना ही ठीक है sir. I hope the things are pretty clear. I hope the things are pretty clear that in the books of lessee. In the books of lessee though, I think the calculations are pretty clear. It is very aram se we can understand lessee ka calculations. There are no complications in lessee ka calculations. ठीक है sir. So now what we'll be doing is, let us quickly check lessor का accounting treatment. Let us quickly check which treatments are lessor का accounting treatment. ठीक है sir. In lessor though, let us analyze. Sir, they are asking interest rate implicit in the lease. Okay, 10% at the end of the lease. This is also fine. So accounting of the lease classified as finance lease also in the books of Y. Finance lease also in the books of Y, sir. They have given some extra information. Let us ignore that extra information from the time being and let us try to solve this question. I hope you have understood what I am trying to say. We will be assuming the lease as a finance lease in the books of Mr. Y. And let us try to analyze the question. So what I want is, just a moment, running notes ka evo, this is fine. So here try to analyze, guys. So in the books of lessor, if it is a finance lease, what I have been saying is, sir, I will be recognizing lease receivable in my books. So lease receivable will be recorded in my books and credit I have to give to the asset which is there in my books. This is the thing which I have been discussing earlier. In the books of lessor, in case of finance lease, lease receivable will be debited and asset account will be credited. ठीक है ना ही ठीक? Yes sir, we have understood the concept and now try to understand, guys. Sir, this lease receivable is nothing but it will be recorded at net investment in lease. This lease receivable will be recorded at net investment in lease. So the meaning of this net investment in lease is present value of the future lease payments which will be made by the lessee plus present value of any unguaranteed residual value. Also, if there is, that ka present value also we have to take. Try to understand. That I have already explained. This lease receivable ka balance, so sir, I will be recognizing this at my net investment in lease. Net investment in lease ka meaning to it should be passed like this. Sir, present value of future lease payments plus present value of UGRV. Sir, future lease payments ka present value as in, sir, here I have to write 50,000 into present value annuity factor 10% for 3 years plus, sir, UGRV to, sorry, guaranteed residual value to 30,000 into present value interest factor 10% comma 3 years if I calculate. 10% comma 3 years if I calculate, Are Baba, this is exactly the lessee books may whatever the present value which you have recorded, it is going to come at same amount na. Sir, so if I check, you can calculate again also, there is no problem, you will understand what I am trying to say. So the value is 146,882. So let me write that figure. So here though the value which I will be getting is 1,46,882. But here sir, I have to also add UGRV ka present value. UGRV ka present value I also have to add, sir. What is the value of this UGRV ka present value? Let us try to analyze. Sir, UGRV to 20,000 ही है. So 20,000 into present value interest factor 10% 3 years. If I take 1 by 1.1 equal to into 20,000, if I take, for this if I add 146,882, so the value which I will be getting is 161,908. I have ignored the decimals. 161,908 should be the lease receivable ka value. Lease receivable का वैल्यू शुड बी हाउ मच सर 161,908 सर ठीक है सर. Sir, credit though I have to give to the carrying amount. Sir, check the question and check for this carrying amount word which they have given. Sir, they have given carrying amount to 1,36,000. So let me credit the carrying amount 1,36,000. ठीक है सर. Excuse me guys, excuse me for the voice by the way. So then again I will be taking the balancing figure as profit from this leasing ka transaction. Profit from this finance lease I will be recognizing as an income in my P&L account. So the difference, if you observe, 161,908 minus 136,000 if I take, I have got the figure as 25,908. I hope everyone have understood this calculation. Lease receivable will be recorded at net investment in lease. Credit though I have to give to the asset, and credit I have to give to the P&L account. This is profit, this is carrying amount. Asset will be derecognized, lease receivable will be recognized, and P&L account पे balance transfer will be transferred. Balance amount, balance ka profit will be transferred there. I hope this point is pretty clear. Yes sir. Guys, now let us try to analyze another thing. Sir, what is the another thing is, sir, if the question may, if the lessor is dealer lessor, if the lessor is dealer lessor, sir, how we will be passing the journal entry? Let us analyze that first part. Sir, sum entry to same. Sir, what is that sum entry? See, lease receivable account data to, sir, I will be writing that 161,908. Okay, this is same. Sir, credit also I have to give to the asset account. So asset account ka value is also 1,36,000 guys. But what I have said is, sir, in case of this dealer lessor, though, I have to book the profit also. I have to book, where is it? I have to book the profit also on the sale of the asset, which means, sir, in the credit though I will be writing sales. Sir, but at what value you will write? There I have already explained, net investment value minus net investment value minus present value of the unguaranteed residual value. Sir, present value of the unguaranteed residual value is how much, sir? Just a moment. Here the difference is there. Now this figure is 15,026. This is nothing but the present value of unguaranteed residual value. So this figure I have to deduct. So 15,026, then how I will get 161,908 minus 15,026. If I do, I will be getting 146,882. And debit pay, I have to recognize another thing which is called as cost of goods sold account debtor. So here what is the amount which I have to record? So that also I have explained. 1,36,000 minus present value of this amount should be deducted, guys. So 136,000 minus 15,026. If I do, I will be getting 120,974. 120,974, sir. If it is a dealer lessor, I have to pass this entry, sir. If it is a dealer lessor, I have to pass this entry. So try to analyze this part also. So check the totals whether they have matched or not. 120,974 minus 136,000 minus 146,882. It is matched. It is matched, which means smart student will understand this part. Sir, whether it is dealer lessor or normal lessor, our profit is same. Sir, how are you saying that the profit is same, guys? Analyze. Sir, here though my profit is 25,908. Here though my profit is 25,908, sir, but in case of dealer lessor, I have presented this 25,908 in a different manner. Sir, how you have presented? See, this part though same. This part though exactly same, but the real difference is there in this cost of goods and sales. Sir, whether I can say my total profit is 25,908 or sir, my sales are 1,46,882 and my cost is only 129,744, guys, both are same. That is net presentation, whereas this is gross presentation. That's what I am saying. If you are a dealer, you have to calculate the gross profit. But if you are a normal lessor, you have to calculate net profit. Guys, only presentation different. Whether you are a dealer lessor or a normal lessor, the things are pretty normal, guys. But here, see, if you observe, you can aramse understand this part. Sir, what are you saying is 146,882 minus 120,974 if I do, which means this and this figure is exactly same as what I have written as 25,908, which I have written the profit as net profit in the earlier entry. I hope you have understood the concept. Okay, sir, we have understood the concept. So both are same. Yes. So if this wording they have not given, if this wording though, if they have not given, what I will be doing is I will be passing this journal entry in my books. I will be passing this journal entry in my books, or even this entry is also fine. I will be passing either this entry or this entry in my books of accounts. And if it is a dealer lessor ka transaction, then I have to pass like this. If it is a normal transaction, I have to pass this. Both are same, guys. Somewhere in the down wala format though, it is like a gross profit, dealer lessor ka thing. But here if you observe, it is like a net profit. It is like a net profit. Okay, sir, we have understood the concept, but suddenly they have used some different wordings. Sir, what they are trying to say? The rate of interest income on the net investment is 19.274%. The rate of interest income on the net investment in lease is 19.274%. Guys, this net investment in lease is also called as lease receivable. This net investment in lease is also called as lease receivable. Okay, sir. If you check, I will be passing this entry in my books, and every year too I will be realizing finance income. I will be realizing finance income on this amount, and bank pay I will receive 50,000 to lease receivable. This should be the entry which I have to pass normally, but since they have given a different figure 19.274%, what I will be doing is now I will be discounting. Now I will be, while charging interest ka amount, I will use this 19.274%. I will use this 19.274%. To recognize the finance income and all, I have to use this. Sir, why we have to use this? Because they have given in the question. Since they have given in the question, we have to use this item only. This is the little ambiguity in the question. You will get clarity after completion of the solution. ठीक है, if you still have any doubts, those will be clarified once we solve this question completely. ठीक है, don't worry guys, I will explain you the logic. Now, हाँ, this lease तो lessee books में totally there are no complications at all. हाँ, so here if you observe, sir, they have taken 19.274%. But listen one thing. Here, don't take that 161 ka figure. What we have got 161,908. Don't take, sir. Why we should not take? I will explain. First, let us understand what the question have did. What ICMAI have did. Let us analyze. Then I will explain the logic and reasons. Everything I am going to take care. Don't need to worry at all. Okay. So yeah. So like this. Starting ka figure to I should not take 161. I will be only taking 136,000. On this I will calculate 19 point. Excuse me. So on this I will calculate is 19.274% as the finance income and 50,000 जो है ना 50,000 तो payment. So if I deduct this 50,000, I will be getting this 112,213 as the first year का closing balance. ठीक है sir. Second year तो I have to add interest income again and lease payment if I deducted, I will get 83,841 like this. Please repeat the process. So at the last year तो closing balance तो you will get 50,000. So if you observe, this is the normal amortization schedule, but they have presented little differently. But you will understand. Take 136,000 as a opening balance, add finance income, and deduct this lease receipt. Then you will get this 112,213 at your calculation. Okay, sir. We will understand that part. Next. Closing balance will be 50,000, but sir, out of this 50,000, lessee will pay me 17,000. This let us understand a little bit later. First, let us analyze the journal entry. Let us analyze the entries which we have to pass. Sir, here at what amount we have to recognize the lease receivable at 136,000 but not 161. Sir, why? I will explain. Okay, but let us take this lease receivable ka value as 1,36,000 only and let us pass the journal entry. Sir, now the entry will be how much, sir? Lease receivable account debtor to carrying amount of the asset to PPE. So lease receivable account debtor to PPE 136,000. Okay, sir, we have understood the concept. We have understood this sentence. Sir, whether it is net investment in lease or lease receivable, both are same. Both are same. Okay, sir. Sir, at the end of the year 1, first of all, I have to recognize the finance income to that lease receivable and then I will be recording the banker receipt. They have passed the net entry but totally fine. Sir, what we'll be doing is this finance income will be added to this asset. So the entry will be finance asset, that is lease receivable account debtor to finance income and bank account debtor to lease receivable. That is the entry which we have to pass, but they have passed the combined entry. Okay, no problem. Sir, like this only I will be passing all the entries and at the end of the year 3, after receiving this 50,000, my closing balance is 50,000. Lease receivable ka closing balance is how much, sir? 50,000 rupees. Now, this 50,000 is there now. This 50,000 to debit balance is there for my lease receivable. So I will credit that lease receivable first. Credit though I will be giving for 50,000, but a debit, guys, try to understand. Sir, I will get the PPE whose value is 33,000. At the end of the lease term though, the person will return me the PPE na. Sir, what is the value of the PPE right now? 33,000. So I have received the PPE ka value of 33,000. Sir, what about this 17,000? This 17,000 to lessee have to pay to me. So I will credit the bank. Sir, what happened to this 33,000 is when I sell the asset, I will write this entry. Sir, bank account debtor 33k to PPE 33k. While selling the asset, I will write. But now, though I have received the asset now, so I will record the asset again. Okay, sir, we have understood. Sir, but why they have did like this? Try to understand. Sir, if they have, where is it, sir? If they have received this entry, if they have recorded this entry, the lease receivable which they have to record in their books is 161,908. Try to understand. This is the value which they have to record in their books of accounts. Okay, sir. But if you understand, they have not recorded their lease receivable at this amount, rather they have recorded at something 136,000. 136,000 is what they have recorded, which means now try to understand whatever exactly I am trying to say. Okay, sir, if I passed this entry, sir, my profit of 25,908 should be immediately recognized in my P&L account, correct or not? If I passed this entry, my profit will be immediately recognized in P&L account na? Yes, but they have not passed this entry, which means this profit is not recorded in my P&L account in the current year. Since this entry have not passed, I am saying, sir, I did not recorded this 25,908 in the current year. Now, what I will be saying is, sir, the entity though have not decided to record this entire profit in the inception of the lease. Sir, how you are saying this, guys? How I am saying is they have not passed this entry, which means they have decided to defer this profit. They have decided to defer the profit on sale. Sir, how you are exactly trying? Let us analyze. I will make you understand this concept in a different manner. What I am saying is that the entity have decided to defer the profit on sale. Defer the profit on sale to further years. Sir, how you are saying? Let me explain that part. Sir, what I am trying to say is, if the above entry is passed, if the above entry is passed, what I will be writing is profit to be booked in year 1. Sir, profit to be booked in year 1, so how much, sir? 85,908. And the total finance income, sir, total finance income to be booked. Guys, this is called as unearned finance income if you observe, sir, and this is exactly nothing but gross investment in lease minus net investment in lease. Ka difference is nothing but my finance income which will be recorded in further years. Sir, what is your gross investment in lease? Guys, very simple. Sir, 50,000 into 3 plus 50,000 ka residual value. Guaranteed also we will take, unguaranteed also we will take. But ignore time value. That will become your gross investment in lease. Sir, from this I have to take the net investment in lease ka value, which is 161,908. Sir, which means 2 lakh minus 161,908, if I take, I will get 38,092. Sir, which means, can I say that the total of this is how much? Plus 25,908 equals to 64,000 is my total profit. 65,000 should be the total income, out of which 25,908 will be recognized as finance, will be recognized as profit and loss in the first year. And this amount is there now. This amount though, this amount though should be recognized over further years. But now let us analyze what they have did. Sir, if above entry not passed, which means in our situation though, sir, in year 1 though profit we will book 0. Profit booked in year 1 to 0. Next, sir, this is important. Finance income to be recognized. Let us check this part. Sir, finance income to be recognized, if you check, if you check, sir, see, this is the finance income, this is the finance income, and this is the finance income. Sir, if I add these 3 highlighted figures, I will get 64,000 rupees. I will get 64,000 rupees, which means, sir, this both are same only. Now I can confidently say that, sir, this entry is not passed now, which means this profit which they have been booked, that is deferred. That is deferred. I hope you have understood what I'm trying to say. I hope you have understood. So, sir, if this entry is deferred, I should not pass this entry, which means my lease receivable though should not be there at 161,908. It should also be there at 136,000, which means this also don't take. This also don't take. Or for simplicity purpose, take this entry. Don't recognize this P&L account ka value, which means, sir, my lease receivable is also 136,000 and my asset ka carrying amount is also 136,000. This is what the entry which they have passed here. And everything is pretty normal after this. The only thing which you have to understand, sir, why we did like this in this question is they have given the rate on the income is, the interest rate on the income is how much, sir? 19.274%. This they have given in the question. In this typical question only, we have to defer the selling profit. Normally, we have to recognize as per the journal entry which we have passed. But in this question, though, since they have separately given this 19.274% as the interest rate, we have to follow that rate. We have to follow that rate. Again, I am saying this is least important question. Least important, I can say. But in your exam, you have to understand, sir, if they have given, they may ask only lessor ka treatment, and in lessor treatment pay, if they have given this, we have to solve like this. We should not recognize the profit on such lease in the current year only. We have to postpone. We have to defer that income. I hope I have explained this question with full clarity. This is the last preference which you can give, but very, 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 very brilliant question. If a student don't know what he have to do with this, gone, completely gone. Okay, so I think we have completed leases very nicely. We have covered, I think, all the questions I have discussed. This third question though, you can try this very, very aram, so you can understand. Just ignore this answer. Ignore this answer. I think they have mismatched it. I think they have forgotten to give in the figures, but aram, so you can understand, guys. In case if you still have any difficulty, please let me know. I will make you understood that, because this is a very basic question. And all other questions we have completed in this leasing ka standard. Very, 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 very important. Okay. So the next standard which we will start is IndAS 115, which is dealing with revenue from contracts with customers. So this standard is also very, 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 very important according to me. So this standard also, a student should never miss this standard. Okay. So let us quickly go to the theoretical part of the standard, and once this is completed, we will be immediately starting with the problems as well. So first we have to understand, so when this IndAS 115 is actually applicable, and then what you have to understand is it will be applicable to all the contract with the customers if entity provides goods or services as a part of ordinary course of its business in exchange for consideration. Which means I am an entity, I have some goods or services, and my ordinary course of business itself is to provide those services, to deliver those services, to transfer those services, or to transfer those goods. Then if I have entered into contact with my customer basically to deliver the goods or services, and if it is my ordinary course of its business, and of course it will not be done for free, it will be done for some exchange of consideration. If these things are satisfied, then IndAS 115 is going to be applicable in that. Okay, sir. But sir, there are some exceptions in all the standards. So the first exception is leases, because leases ke liye we have a separate standard which is IndAS 116. There we understood that how exactly we have to do the accounting for leases and all, that is dealt in a separate standard. We have already covered that standard, so now no issue with this leases ka part. Second, sir, insurance contracts. Second one, sir, insurance contracts. If insurance contracts have entered, the thing is, for this insurance contracts also we are having a separate standard, but that is not there in our syllabus, so we will not be discussing anything with respect to that thing. But sir, next though we have another standard which is relating to financial instruments, which is covered in IndAS 109. So since it is covered in another standard, it is specifically excluded from IndAS 115, that also they have mentioned. And the last parts are non-monetary exchanges between entities in the same industry. Sir, if two entities are there, if both belong to same industry, if any some exchanges have been happened with those two entities, then what they are trying to say is, sir, it will be treated as an exclusion from IndAS 115. So if you want, I can give you one example also for that, which is not that much important, but just for understanding perspective only I am giving. So let us quickly check that part. So the thing is, just a moment. Ha. Sir, assume there are two companies, first one HP Limited and second one to IOCL Limited. Sir, this HP Limited is basically having its distribution channel. Okay, I think you all guys have known that HP Limited and IOCL are nothing but gas ka companies. Okay, so whatever the companies which will be supplying gas, these are there now. This HP Limited is having a huge distribution channel in Himachal Pradesh, and this IOCL is having a huge distribution channel in Bangalore. Now, sir, what have happened is, for this IOCL, one customer have approached and asked this IOCL, we want distribution network in Himachal Pradesh region, and another customer from Bangalore have reached HP Limited, and he have asked that HP Limited, that we want your distribution channel in our region, which is Bangalore. Now try to understand. Assume in Bangalore though there are no other customers for this HP Limited other than whatever the customer which he have been searching for this HP Limited. Other than that customer, there are no other customers. For Himachal also, if you observe, only one customer is there for this IOCL and there are no other customers. Guys, it will be very, 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 very expensive if for only one customer, if I have to set up the distribution channel there. So for IOCL also it is very, very expensive, and for HP Limited also to set up a distribution channel in Bangalore only for a single customer will be very, 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 very expensive. So what have happened is, these two parties are there now. These two parties have entered into non-monetary consideration के लिए exchange they have did. So this is also operating in gas industry. This is also operating in gas industry, and they will be doing some non-monetary exchanges. Sir, what is the meaning of non-monetary exchange here is, this HP Limited will say that, okay, IOCL, I will supply to your customer in Himachal. You please supply to my customer in Himachal. Sorry, my customer in Bangalore. Okay, like this, if you observe, non-monetary exchanges between the entities running in the same industry have been happened. So here they are specifically saying there is no commercial substance involved in this. Since there is no commercial substance involved in the transaction, what they are saying is this will be excluded from the scope of IndAS 115 is what the standard is trying to say. Okay, sir. Next, if you observe, sir, we have something which is called as 5-step model for revenue recognition. Sir, what is the next part, sir? We have something which is called as 5-step model for revenue recognition. So these 5 steps are very, 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 very important, which you have to always remember. So the first one, to identification of a contract with a customer. First one, identification of contract with a customer. Second one, to identification of performance obligations in the contract. Third one, determination of transaction price. Fourth, allocation of transaction price to the performance obligation, and last may recognize the revenue as and when the performance obligations are satisfied. 5 steps, very, very important. First, you have to analyze the contract and you have to identify, sir, what is the contract? What is the contract? This is very, very important. This is not that much easy as I am saying. You just have to really go into the contract and you have to find out what is exactly is the contract. Okay, fine. But for exam perspective, the first one and second one are completely theoretical. The real deal will start from third step onwards, because third step onwards, mathematical calculations will be there. So my first step is, I will be identifying the contract with the customer. Once that is done, I have to find out, sir, what are the performance obligations which should be satisfied in the contract. Sometimes the contract is very, very simple. It is having only one performance obligation, and sometimes the contract may be a little bit complicated. Sometimes it may have multiple performance obligations also. Next, what we have to do, sir? Next, we have to find out the transaction price. This transaction price, though, in most of the cases, it will be fixed in nature. But in some cases, though, there are chances that it will be variable also. Okay? So, what exactly we have to do with this variable consideration and what exactly we have to do with the fixed consideration and all, we will be learning a little later. Okay, sir. Next, sir, assume in second step though I have identified there are totally 3 performance obligations which are there, and I have find out the transaction price as per this step number 3 also. So now what will be happening is whatever the transaction price which we have find in step number 3, that should be allocated to each of the performance obligation. For example, sir, my contract may there are 3 performance obligations and the transaction price, sir, assume it is 3 lakh rupees. Now I have to allocate this 3 lakh rupees between these 3 performance obligations. Sir, do I have to allocate equally? Answer is no. We have to allocate this transaction price to the performance obligation in the ratio of their SSP. Sir, what is the meaning of SSP? Standalone selling prices. We will have a little discussion after after going further, we will understand. The last part to recognize the revenue as and when the performance obligations are satisfied. We will be checking the performance obligations. Assume you are having 3 performance obligations. If the first performance obligation is satisfied, you have to recognize the first revenue recording the first obligation. If second is done, we have to recognize the revenue belonging to the second. If third is done, we have to recognize the revenue belongs to the third. So like this, we have to go ahead and do the recognition as per the each performance obligation got satisfied. So now if you observe the steps, the first step is identification of the contract. We just have to go through the contract and these 5 items to just go through, you will aram se remember this. So first one though, approval should be done. Whoever the buyer, whoever the seller which is there, they must have approved the contract. And second one, sir, rights of entity and customer are identified. Sir, if I am an entity, the contract between entity and customer is basically I will be receiving 1 lakh rupees ka cash from the customer, which means, sir, here my right is I will be receiving 1 lakh rupees from the customer. And if you analyze the right of the customer ka right is he have to receive the goods from the seller. Okay, so this is the meaning of identification of the rights of entity and the customer. You have to analyze from both the parties what are the rights of entity, what are the rights of the customer. Both we have to find out. Okay. Payment terms should be identifiable. You have to identify the payment terms. Sir, identification of payment terms means it is not that only fixed consideration should be done. No, it can be fixed, it can be variable, anything it can be, but through the contract it should be very clear to identify what is the payment terms. Okay. Next part, sir, contract should be for providing goods or services to the customer. My contract is to provide the goods and services to the customer. Last part, sir, it is probable that there is reasonable certainty that entity will collect from the customer. This is very, 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 very important. Sir, what is the point of recognizing the revenue if customer itself is not ready to pay to you? If customer is not ready to pay to you, then what is the point of recognizing the revenue? Sir, what will happen? Just to try to analyze, sir, if the customer is not ready to pay me, see, for example, I have made the debtor account to sales account 1 lakh rupees. Okay, sir. Sir, generally what have happened is cash may 80,000 debtor have paid and this bad debt to 20,000. At the time of booking the sale itself, if I know that this 20,000 so I will not be recovered, then I will not be recognizing the revenue for 1 lakh rupees. Sir, why record the revenue for 1 lakh rupees and again reverse the same in the form of bad debt? Instead of that, if it is probable that the customer is not able to pay to you, then you should not recognize. But sir, if all these 5 conditions are satisfied now, then I can say that valid contract is there. Okay, sir, then I can say that valid contract is there. Fine, sir. Now, the next part, sir, if entity receives any advance or deposit, what they are saying is without satisfying any of the conditions, such advance will be treated as a contract liability. For example, there is one person who is Ravi have decided to give a brand new BMW car to Prasad for 50 lakh rupees. Okay? 3 lakh rupees ka advance amount he have received. So sir, at the time of advance to assume any of these 5 conditions are not satisfied. If these 5 conditions any of the condition is not satisfied, then I cannot go ahead and recognize the revenue. So then what we have to do? I have to treat the advance as a contract liability. I have to treat the advance as a contract liability. Sir, what is the meaning of contract liability? It will be sitting as an liabilities का part में, contract liabilities में it will be sitting in your balance sheet. So the reason is also very simple. See, these 5 conditions should be satisfied. Only then I can go with the, what should I say, revenue recognition. Okay, at the time of advance received itself, these are not happened, these conditions are not satisfied. So at the time of recording the revenue, though, the entry which I will be passing is this one, bank account data 2. Sir, I should not pass revenue, I have to write contract liability account. Sir, how much is the advance? 3 lakh rupees. Now try to understand. Sir, Prasad have paid me balance 47 lakh rupees also. Prasad have paid me balance 47 lakh also. In this case, the entry which I will be passing is, now I will recognize the revenue. Sir, bank account with 47 lakhs I have received. Sir, what about 3 lakh rupees? The 3 lakh earlier already I have received. Now that 3 lakh is there in contract liability account. So 3 lakhs to revenue 50 lakh rupees. To revenue how much, sir? 50 lakh rupees. Like this you have to do. Sir, secondly, customer is there now. This Prasad don't wanted to buy this BMW. Now he is interested in some another Mercedes. Okay? So he don't want the BMW car right now. So what have happened is, sir, but he have already paid 3 lakh rupees advance now. But me is saying, I am saying, no. Even if you don't want, whatever the advance which you have paid now, that will not be refunded back to you. That will not be refunded back to you. So therefore, whatever the contract liability which I have recorded earlier, that will be recognized as a revenue. That will again be recorded as revenue because I will not be paying you. So whatever the 3 lakh which is there, that will be treated as revenue in my books of accounts. Okay? Theoretical part they have written here. It will be recorded as revenue only when entity has no balance performance obligations and substantial consideration is received and non-refundable, which means in the first case, the customer have paid me balance 47 lakh also. Now I have delivered the car also. So now there are no performance obligations. So now I can recognize the same as a revenue, which means 50 lakh example if you observe here. Second part, though, contract is terminated and consideration is non-refundable. Contract is terminated and consideration is non-refundable. Second case may that person is not ready to pay me 50 lakh rupees. So what I will be doing is I will be terminating the contract and 3 lakh I will not refund to the customer. If it is non-refundable enough, you can recognize the same as revenue, which means out of these 2 conditions, any 2 conditions have to be satisfied. Only when any 2 conditions are satisfied, then I will be recognizing as a revenue. So whatever the contract liability which I have recorded earlier. Okay, sir. Next part, guys. Combination of contracts. Sir, what is the meaning of combination of contracts? Try to understand. Sir, sometimes 2 or more contracts entered with the same customer can be combined if the following conditions are satisfied. Sir, it can be done in number of cases. 2 or more contracts entered with same customer can be combined if the following conditions are satisfied. Let us understand the help of an example. Okay, sir. Sir, what have happened is, there is one entity which is A Limited, another entity which is, A Limited have decided to purchase the SAP software from SAP Limited. Okay, fine. So sir, what will be happening is, along with this software, assume the name of the software is CRM, Customer Relationship Management. Sir, along with that software, what will be happening is SAP will also be delivering A Limited, though they will also deliver installation ka services also, because A Limited people don't know how to install that. So at the time of delivering the software itself, SAP Limited will also provide them installation services also. Sir, but not only this, they are ready to even provide after sales service also. Sir, what is the meaning of after sales service? Later after installation, if any doubts are there for this A Limited, this SAP Limited people will be immediately there to advise all their doubts and resolve all their queries. Okay, sir. So now if you observe, sir, here there are 3 contracts. By looking, you may understand there are 3, those are not 3 contracts, technically speaking, 3 performance obligations are there. So now you have to understand, sir, whether these 3 are different performance obligations lying in the same contract, or whether these 3 contracts are treated as a completely separate contracts. Because, sir, assume I am not purchasing the software right now from this SAP Limited. I have already purchased some 3 years ago. Okay, now I am having an after sales का service. So now I have to enter into a new contract with this SAP in the form of after sales service. Or assume I have already purchased SAP software 6 months ago, but from then I have not installed it. So at the time of purchase, though I have not taken this installation services, but now since I want to enter this installation services ka contract with this SAP, can I do so? Answer is yes. Which means if you observe technically, these three may be treated as a different contracts, but IndAS 115 will ask you to even these three contracts can be combined for the purpose of revenue recognition. For the purpose of revenue recognition, even multiple contracts entered with the same customer can be combined. Multiple contracts entered with the same customer can be combined. So, sir, where you have written this? Here I have written. So, what they will be saying is, sir, two or more contracts entered with the same customer can be combined if the following conditions are satisfied. Okay. The first one though, sir, contracts are negotiated as a single package. Sir, if while negotiating itself, I have negotiated for these three items, I will be paying a single purchase consideration. I will be paying a purchase consideration which I have already taken into account these all the three performance obligations. Okay. If negotiation itself have taken as a single sub package. Second point though, sir, consideration in one contract depends on the price of the another. Consideration in one contract depends on price of the another. Sir, what you are exactly trying to say, try to understand. Sir, if I have taken customized software itself alone, I have to pay 80,000. If I take installation services itself, I have to pay 15,000. If I take after sales service itself, I have to take 20,000 rupees. I mean, separately, if I take, I have to pay these amounts. But since I have been taking combinedly, they will be only charging me 1 lakh rupees. Normally, if you don't purchase the software from us, we have to pay 15,000. But since you have purchased the software, for you, installation also and after sales service also, both will be given at a discount. Which means I can say that, sir, this consideration of these dependent upon this performance obligation. Consideration of this have dependent upon this performance obligation, then only the consideration is 1 lakh rupees. Sir, if this interlinkage is not there, if you add these two items, you will get 1,15,000. But since you have purchased all these three items together, the consideration is only 1 lakh rupees. Which means if you read the second point, consideration in one contract depends on the price of the another. And last measure, goods or services provided in a contract represents a single performance obligation. So there should be a single performance obligation. At one time only you have to deliver me all the things. Okay, those are not multiple performance obligations. Then what they are saying is, okay, you can combine these contracts as a single contract and you have to do the accounting. Okay, sir. First point is done. Let us quickly move to the step number 2, which is identifying the performance obligations in the contract. What is step number 2, sir? Identifying the performance obligations in the contract. Sir, first of all, this performance obligation is not a new term. Performance obligation is nothing but my promise, entity ka promise to transfer the goods or services. If I have entered into contract to deliver, for example, a car to the customer, that promise to deliver the car is one performance obligation. Or with that car though, I will be providing you two free servicings. So it is a promise to deliver the services. So those two services are there now. Those two free services will be treated as a performance obligation. If I decided to go ahead and purchase one water purifier, so that water purifier ka delivery will be one performance obligation. So along with that water purifier, to installation will be in performance obligation. After sales ka service will be treated as another performance obligation. Guys, it is nothing but a promise to transfer the goods or services. Okay, sir. Sometimes it can be either distinct goods or service. Sometimes, sir, it can be either distinct goods or service. Sir, what is the meaning of distinct? Distinct is nothing but it will be treated as a separate performance obligation. It will be treated as a separate performance obligation. We will take examples, then you can understand. Now, Or sometimes what will be happening is it will be a series of goods or services which are same and have the same pattern of transfer. Then it will be treated as a single performance obligation. So what exactly trying to say? Let us understand with the help of an example. See, sometimes this performance obligation can be distinct. Distinct means those are separate. If those are directly separately identified, then you have to treat each of those as a separate performance obligation. And sometimes what will be happening is they are not distinct. They are series of goods or services which are substantially same and have the same pattern of transfer. Those are series of goods or services which are substantially the same and have the same pattern of transfer. Then they will be treated as a single performance obligation, and the revenue will be recognized over the period of time. ठीक है सर. सेकंड के लिए लेट मी गिव वन एग्जांपल, देन यू विल आराम से अंडरस्टैंड. See, sir, yearly Netflix subscription, if I take, then if you observe, sir, the pattern of consumption is usually the same. Is usually the same. Sir, sometimes in 1 month though I have watched the Netflix fully, and sometimes in 2 to 3 months though I have not watched at all. But still, your pattern of consumption would be same. See, every time you open the Netflix, you will not be getting a complete new set of services. Content may be new, but the service of delivery will be the same. Okay? Or even if you observe newspapers, sir, delivery of newspapers also, sir, every day the newspaper vendor will be delivering you newspapers. But if you observe, sir, the pattern of consumption is same. Of course, whatever the paper which I have studied yesterday, that I will not be studying now. But the thing is, pattern of consumption is same. Okay, goods may be distinct, but still the pattern of consumption may be same. So here what they are saying is, specifically in this item though, it will be treated as a single performance obligation, and the revenue will be recognized over the period of time. And what is the meaning of period of time? Just hold on, you will understand. Okay, this is super duper important point, so you have to remember this. Sir, what is the meaning of distinct goods or services? We have this. We have what should I say, discussion right now. Here only it is there, so don't worry. Fine. So this is little bit important from exam perspective. They already have asked questions from this area, so let us understand. Okay, sir. If a contract provides customers with options to purchase additional goods So now if you observe, sir, bank may have received 5.8, but revenue I have to charge is 6.3. Sir, what about this point 0.5? Point 0.5 is nothing but the contract liability which you have created earlier, na, that will be set off. That will be cancelled by debiting the same. Okay? See, you have to understand this entry. Sir, initially the customer will pay me 100, but I will not recognize this 100 entire as a revenue. I will be recognizing only this 90 as revenue, and balance 10 to I will be temporarily charged to contract liability account. I hope you have understood. Sir, have you have identified this 90 based on my past purchase? Based on the estimation I have estimated, based on what should I say, the past experiences, I have made an estimate that the person will make 28 lakh containers. Okay, very, 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 very important. Journal entry understanding and this calculation also. How much amount the customer will pay, this you have to write in your exam, guys. What will be the revenue which should be recognized? This is exactly called as cumulative adjustment, cumulative catch-up basis. Later I will use this term. So what is this, sir? It is called as cumulative catch-up basis. Very, 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 very important, guys. You have to understand this part. Sir, what should be the total revenue which I have to recognize? From that you have to compare what is the revenue which is already recognized. If excess revenue you have to recognize now, you can recognize that, but I have already recognized extra amount only. Now you have to reverse. If there is revenue to be recognized, please go ahead and recognize. Sir, but you have already recognized excess revenue, then you have to reverse the revenue which you have recognized earlier. Okay, sir. Guys, these two items are very, 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 very important. These two examples, so you have to definitely practice. Okay, sir. So now this is little bit important theoretical point. Variable consideration will be included in transaction price only when there is high probability that significant reversal of revenue will not occur. Significant reversal of revenue will not occur. Only then I can include the variable consideration in the transaction price. See, at the time of recognizing the revenue itself, if you are sure that its reversal also will happen in the future, then what is the point of recognizing now and reversing in future? Rather, don't record now only. Basics are point, but you have to remember this and you can quote this point in whatever the question, if a question may any relevant point comes, you can quote this point. Important, guys. Variable consideration will be included in the transaction price only when there is high probability that significant reversal of revenue will not occur. Okay, sir. Next part though. Sir, refund liability का component little bit important. Refund liability means, sir, some items so entity will sell to the customer with an option to return. Now you have to see based on the past experience, sir, if I sell 1,000 units to the customer, based on the past experiences, I know that 10 units will be refunded. Okay, so what they are saying is at the time of giving itself, at the time of selling itself, don't recognize revenue for the entire 1,000 units because you know that 100 units, you know that 10 units, so they will be returned na. So recognize the revenue only for 990 units. Recognize the revenue only for 990 units because you know that they will 10 units will be returned, sir. How I know that? Based on past experiences. Based on past experiences, I know that. So I will be recognizing the revenue only for 90 units and for 10 units, I will not be recognizing the revenue. Okay, sir. So for those 10 units, so what I have to write? I have to write to provision for refund liability. To provision for refund liability, I will be passing the entry, but I will be recognizing the revenue only for 90 units. Sorry, 990 units. For 10 units, it will be, what should I say? Recorded as a liability का part. ठीक है sir. So the next concept is this significant financing component. Just a moment. Significant financing component. Sir, what is this? Let us understand with the help of a following example. But before that, let us understand few things. So check this. If there is a significant time gap between the satisfaction of performance obligation and the payment made, the standard is same. Okay, not only just the transaction price. In this, so significant financing component is also present. Sir, what is the meaning of this? Let us understand with the help of a question, with the help of an example. Just a moment. Back. So check this. Assume this is the date on which performance obligation is satisfied and this is the date of the payment. If this gap is usually, if it is more than 12 months, we will say that here we have to also give the adjustment for time value of money, and which is called as, since significant financing component is present here, we have to separately identify the financing component and we have to do the accounting separately for that. Not only this may happen in the reverse case also. Sometimes the date of payment is very earlier and the date of performance obligation ka satisfaction will be too much later. Here also, if you observe, if the time gap is pretty more than 12 months, then we have to identify, in this case also, significant financing component is present and we have to bifurcate the financing component and then we have to do the accounting separately. Okay? So if you observe the theoretical part what I have written, entity satisfies the performance obligation and customer pays the consideration at a later point of time, which is known as deferred settlement. Settlement is deferred at a later point of time. Then what we have to do is, you have to always recognize the revenue at cash selling price only. At cash selling price only. This we have been doing in number of times. We have to calculate the present value of that and we will be finding out that as usual, very normal thing. And extra amount over the cash selling price will be treated as interest income. And whatever the extra income, for example, the cash selling price of any asset is 80 lakh rupees, but whatever the installment ka value, if you calculate, you are getting 100 lakh as the total selling price. The difference between 100 minus 80 jo hai na, this 20 is called as financing component. So this 20 rupees though we will be recognizing using effective interest rate method. We already know this effective interest rate method discount discussion and all. We have to do the present value of the future cash flows at a discount rate. Okay. Even if customer makes a payment in advance but satisfies the performance obligation on a later date, here also entity shall record such advance amount as unearned income and interest expense on such contract liability shall be recognized as finance cost. This is a liability ka point. Unearned income के name से you have to book in your books of accounts as a liability and we have to charge interest expense on that liability periodically, and once the entity satisfies the performance obligation, then you have to recognize the revenue. ठीक है सर. Important note, this is very very important. Sir, if consideration is based on future events, for example, sir, if any sales based royalty or usage based royalties are there, obviously consideration will be settled only after happening of the sales. I cannot say that here also the time ka limit is there, the time ka component is there, therefore I have to recognize the finance income. No, that is not correct, because here the condition itself is to pay the royalty based on the sales. So until and unless the sales got happened, I cannot pay you the royalty. Therefore, in this the time gap is because of the condition of the contract itself. Therefore, here there is no financing component, so we should not do the accounting for that separately. Okay? Fine, sir. If time gap is due to any other reason other than financing, for example, retention money, etc. This retention money ka thing na, it is the inherent nature of the contract itself. It is the inherent nature of the contract itself not to pay the complete amount. Okay, obviously the contractee will retain some sort of amount as a retention money. So this retention money, why he is paying late is, it is not because of the financing component. It is because of the inherent nature of the contract itself. They are paying little bit later. ठीक है सर. Next thing though, sir, if amount of interest is insignificant, if the financing component is very less, for example, sir, the cash selling price of the asset is 1 crore and it is 5,000 rupees is the finance income. If you calculate this, it is very small amount. ठीक है सर. व्हेन इंटरेस्ट का इनकम इटसेल्फ इज वेरी insignificant, then there is no need for me to go ahead and recognize the financing component separately. ठीक है सर. Last one though, if time gap is up to 1 year, if it is less than or equal to 1 year, no need to choose, no need to separate this financing component. The thing is, we can आराम से recognize this in the normal situation only. ठीक है, just like a normal thing, no need of separating the finance component at all. We can do normal type of accounting. ठीक है. Then comes non-cash consideration. Non-cash consideration. Sir, what is the meaning of non-cash consideration? Very, very simple. I have sold one pen to you. I have sold one mobile phone to you. You are not paying in cash consideration. Okay, so whatever the asset or whatever the item which you have received, please calculate the fair value. Okay, I will be recognizing revenue at the amount of fair value of the consideration received. Sir, what if the fair value of the consideration they have not given? Then we have to record it SSP of goods or services transferred. Sir, what is the meaning of SSP? Standalone selling prices. Then I have to record it standalone selling price of the goods or services transferred. Okay, sir. Next part to last part, sir, consideration payable to customer. Consideration payable to customer, sir, in some cases, even though customer have to pay me the consideration, in some cases, me as an entity also needs to pay some amount to the customer. Sir, can you please give us examples? Answer is yes. See, if you look in any departmental stores like DMart and all, so usually those items will be displayed in such a manner that customers have to attract with the items are displayed, because even if you don't want any item, but if you go to DMart, obviously you will end up purchasing more than the items more than what you required only. Okay, so that is the reason many companies will pay to DMart. Many companies will pay to DMart in such a manner that their products are displayed first. If their products are displayed first, then obviously there are high chances that their products will be sold very, very faster. If their products are sold very, very faster, again DMart will come to me and it will make additional purchases. Try to understand the linkage. If I pay some amount of consideration to DMart, obviously whatever the products which I have sold to DMart will be sold faster. If they sold faster, again DMart will come to me and again my sales will be increasing to DMart. Okay? So the thing is, for this amount, what will be happening is I will be paying some consideration to customer. So it can be in the form of even rebates also or coupons also. So if any rebate or coupon which they have been given in the situation, you have to understand that will be deducted from the transaction price. That will be deducted from the transaction price, sir. But if me and customer are having another contract, it is a distinct good or service not at all relating to the current contract, then what you can do is that can be treated as a separate contract itself. But if it is not for distinct good or service, then you have to adjust the same in the transaction price. Okay, sir. Other than this, the discussion is not required. If any consideration payable to customer, if they have given in the question, you have to check whether it is for distinct good or service. If it is for distinct good or service, which means customer have also entered into contract with me that he will be supplying something, I have to pay something. Okay, this is altogether a separate contract. But if it is not for distinct good or service, then I have to definitely adjust the same in the transaction price. Okay, so now comes the step number 4, very, 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 very important, which is known as allocation of transaction price to the performance obligations. So my contract may I have gone ahead and analyzed that there are 4 performance obligations. And I have also calculated the transaction price of 1 lakh rupees. Now this 1 lakh rupees should be allocated to each of the performance obligation. So now you have to understand, sir, should I apportion equally to all the performance obligations, or for first performance obligation 60, second 20, third 30, fourth 10, like this there should be some basis. So in this step, let us understand, sir, what is the basis through which I can allocate the transaction price to the performance obligations. Always remember, general rule is it is allocated in the ratio of their SSPs of each performance obligation. It will be allocated in the ratio of SSP of each performance obligation. Try to understand. Sir, first one, though, there are totally 4 methods are there. First preference you have to give to the observable price method. Sir, what is the meaning of observable price method? Observable price method is nothing but the price at which the entity charges for goods or services in similar conditions. If this price is directly given in the question, then aramse we can take this, which means it is just like a similar good in similar condition. If the entity wants to charge to any other person, whatever the price it will be charging, that is nothing but observable price method. Sir, what if this is not there? If this is not there, we have to give our preference to the adjusted market assessment. Sir, what is the meaning of adjusted market assessment? Let us understand. Sir, now we have to understand. Sir, For example, see, this pen is there. This pen is there, sir. This observable price method though is not available in the market. So now I have to check from the customer perspective. Sir, what is the amount that the customers are ready to pay for this item? So I have to estimate what the customers in the market would love to pay with this good or service. That is called as adjusted market assessment ka approach. Sir, this is also done. This is also done, sir. I am not getting this price also because the item, the asset is completely customized that other than this customer, no other customer will buy that asset only. Which means I cannot even find out this adjusted market assessment ka approach also. Sir, then poor person, what can I do? You have to go to this expected cost plus margin ka method. Then I have to go to the expected cost plus margin ka approach. Sir, what is the meaning of this expected cost plus margin ka approach? Guys, you have to calculate from the cost perspective. Sir, what happened to my cost? Whatever the total cost which I have incurred, I will be taking that expected cost of completion plus I have to add approximately, I have to add obviously some margin. So this margin plus the cost if I take, I will be getting the expected cost plus margin method ka standalone selling price. Sir, this also I have tried, but I am unable to find this also. Then the last approach which you are having is nothing but residual approach. The name itself, residual approach, will be saying that first of all, if there are any multiple performance obligations, first three performance obligations, so I am able to find the value. Sir, what about fourth? Balancing figure will be the fourth. Sir, what about the fourth? Balancing figure will be the fourth. Okay, sir. So these four approaches are completed, but they will definitely ask one practical question from this aspect. So you have to be very careful. Okay, 4 steps. Step number 4, allocation of the transaction price to the performance obligation. Okay, 4 methods: observable price method, adjusted market assessment, expected cost plus margin, and the residual approach. Sir, we want some examples, so let us try to understand with the help of this example. A Limited is there, customer B is there. A Limited have promised to sell product A and product B and product C for how much? 10,000. And they have also given the standalone selling prices also. Sir, A, B and C together for 10,000 they have decided to sell. But if you observe the SSPs of each product, sir, A, if I want to find 5,000, if I want to sell exclusively A, I have to sell at 5,000. If I want to sell exclusively B, I have to sell 2,500. But if I want to sell exclusively C, I should sell at 7,500. Here I have given, sir, this A is nothing but directly observable, this B is nothing but adjusted market, this C is nothing but expected cost plus margin. Sir, total is 15,000. First preference though, I should try to find out all prices of these items at a similar method. If it is possible to get the directly observable price for all, best, go for that. Sir, it is not possible, then you have to go for adjusted market assessment. Okay, for any asset, if directly observable price is directly available, you have to take that amount only, nothing doing. So if I sell these 3 products separately, I have to sell for 15,000. But now since I am selling all these 3 items together, I have to sell at 10,000 only now. Which means 5,000 is nothing but the discount. 5,000 is nothing but the discount, sir. This 5,000 ka discount, though, I have to apportion between A, B and C in the ratio of their standalone selling prices. I have written the same here. Sir, A ka value to standalone selling price, transaction price is 10,000. Sir, standalone selling price of A to 5,000 divided by 15,000. In the same manner for B, for C. So the total transaction price of 10,000 is allocated like this. The total transaction price ka allocation, okay, here it is not allocation of discount, basically it is allocation of the transaction price. Small technical mistake, it is allocation of a transaction price. Okay, sir. Very good, easy question. Fine, sir. Now, this is first question, the normal question. They won't ask this type of a question normally. But if you check this question number 2 may, sir, they are saying discount not proportionately allocated to all performance obligations. Sir, what is the meaning of this? Let us try to understand. Sir, this A Limited have decided to enter into a contract to sell X, Y and Z for 1 lakh rupees. Sir, SSPs they have given X, if I want to sell individually, I can sell at 50, Y to 25, Z to 45, so total at 120. But since I am selling these items together, I am selling it only for 1 lakh rupees. Okay, sir. But entity, what it will be doing is, normally if it wants to sell Y and Z, it will sell at 50,000. Normally, if it wants to sell Y and Z, it can do for 50,000 only. Sir, but if I want to sell Y and Z separately, I can sell at 70,000 na. If I wanted to sell Y and Z separately, I have to sell at 70,000 individually means. But if I sell Y and Z collectively, I can sell at 50,000. Therefore, this 20,000 ka discount is separately allocable only to Y and Z. Try to understand. Sir, Y and Z, if I sell individually, I will sell at 70, but Y and Z, if I sell collectively, I can only sell at 50,000. So this discount I cannot give to X na, because the discount is specifically related to Y and Z. So here what I will be doing is allocation of discount between Y and Z in the ratio of their SSPs. Sir, again this is not discount na, correct? This is the transaction price. This is the transaction price. So that 50,000 will be allocated on the ratio of the standalone selling prices. And now this 50,000 should be allocated between Y to 17,857 and X to 32,143. Now try to understand. Sir, this Y and Z to I will sell for 50,000, but X, Y and Z together I will sell for 1 lakh rupees. Sir, Y and Z to 50 and X ka value will be obviously 50 na. X का value would be obviously 50. ठीक है sir, that's it, that's what they have written. Sir, X का value तो 50, Y का value तो 17,857 and Z का value तो 32,153. That's it. That's it guys, very simple. Sir, and last May we are having another thing is this residual approach. Sometimes this residual approach will be appropriate. Sir, what is the meaning of residual approach to be appropriate? Let us try to understand. Sir, X, Y and Z and another product alpha is also there. And another product alpha is also there. So the total transaction price is 1,30,000 sir. Okay, sir. And they have also given Y and Z should be sold jointly for 50,000. In the same example, if you observe, see, sir, Y and Z 70,000, but they can sell at 50,000 also. So this 20,000 ka discount should be apportioned just like the previous question. Just like the previous question, so this will become same. This will become same na. So sir, these 3 items I can sell for 1 lakh. Sir, these 3 items though I can sell for 1 lakh na. Sir, what about 30,000? The 30,000 will become the balancing figure. The 30,000 will become the balancing figure. Okay, sir. Sir, in this question though they have given the range of the alpha is 15,000 to 45,000. But our price of alpha is how much, sir? 30,000. Therefore, this 30,000 is within the range of whatever our estimation is there. Therefore, here residual approach is appropriate. Here residual approach is appropriate. Sir, another thing is, sir, what if the residual approach is inappropriate? Inappropriate means, sir, whatever alpha ka value which I have find out here, if that is outside this range, then what we have to do? If the amount whatever I have calculated, the balancing figure, sir, what if it is outside the range? Let us analyze that part also. Assume the same example but contract price to 1,05,000. Now my alpha ka price would be 5,000. Sir, but the price is, the range is 15 to 45 now, sir, but my alpha ka value to 5,000. So how it can be outside the range? How it can be outside the range? Because of which what they are saying is that entity should review the market data to estimate the standalone selling price. Okay, sir, we have understood this part also. Okay, this is normal setting. We will remember this part. Generally, they will not ask this type of a question. Maybe in MCQ, if they ask, so you can just check this part. Sir, what is this sales based or usage based royalties? Sir, if licensing of IPR, for example, know-how, patent, copyrights, etc., have been given, you have to recognize the revenue till the sale occurs. Till the sale occurs. So the subsequent sale or usage occurs or performance obligation to which royalty has been satisfied. These 2 dates you have to take, and whichever is later, at that time only you have to recognize the revenue. Okay, fine sir. So last one, sir, variable consideration can be attributable to the entire POs in the ratio of their SSPs, but if any discount, if it is specifically related to particular POs, then we should not do, then we should not apportion in the ratio of their SSPs. For example, This one, if you observe, here I have allocated the discount between Y and Z only. Okay? Fine. Fine. We are coming towards end of the standard, so let's quickly take this part. So the last step to recognize the revenue as and when the performance obligation is satisfied. Sir, I have find out the performance obligations and I have also find out the transaction price as per step number 3. And not only that, as per step number 4 though, I have also allocated the transaction price between each of the performance obligations. But now, when I have to recognize the revenue, you have to check whether that particular performance obligation got satisfied or not. So normally speaking, if I entered into contract to deliver a car to the customer, sir, I can say that my performance obligation is satisfied only when I deliver the car now. Only when the control of that car is transferred to the buyer, then only I can say that. Then only I can say that my performance obligation is satisfied. ठीक है सर. So the crux of the standard is the control. So when the control of the goods or services got transferred, then only I can recognize the revenue. ठीक है sir. Now the question is, sir, when exactly this control will be transferred? They will say the definition of the control. Sir, what is the control? The customer ability to direct the use of the asset. It is totally the discretion of the customer that at what manner or at what way the customer wants to use the asset. Who will decide? Customer will decide. If it is decided only by the customer, then only I can say that control is transferred to the customer. Okay, sir. First point clear. Second point, customer should obtain the benefit of the asset. Who have to obtain, sir? Customer should obtain the benefit of the asset. Fine, sir. Third point, though, sir, he should prevent the others from using or benefiting the asset. If control has been transferred to my, obviously I have to get the benefits and I can restrict, and obviously I should restrict others from getting the benefit of the asset. Okay, sir. This is also fine. Sir, another thing, important part of the standard is this control can be transferred in two manners. First one, to point in time. Second thing, to over the period of time. Sir, what is the meaning of point in time? Let us try to understand. Sir, point in time is nothing but if any specific event is achieved. Simple. Sir, if I decided to enter into a contract to sell a car to the customer, obviously the moment I hand over the keys to the customer, the control is transferred. The moment I have delivered the keys to the customer, control is done, which means at a specific point only the control is transferred. But if you observe over the period of time, customer is not getting the complete control of the asset at a single point of time. Sir, can you please give us examples? Of course, I can give you the example. For example, you guys have purchased some regular classes or fast track classes of BCCA. Okay? So what will happen is the moment if you have purchased, you cannot take the complete benefit at that specific point where you have purchased. In other words, sir, as and when I have started, as and when I have going through the lectures, I am going through the lectures, then only I will get the benefit now. Which means the benefit is not at a specific point in time. The benefit is over the period of time. The benefit is over the period of time. Another example, gym. Gym related also. So the moment I pay the gym, I do not get the complete benefit now. It will be done over the period of time. Sir, accounting services. One entity have entered into a contract for me to provide the accounting services at a single point of time. I do not get the benefits. I do not get the control over the period. For example, if April month is completed, April month accounting services the entity have to provide me. If June is done, June accounting services should be provided by me, provided by the entity. Which means in all the cases, transfer of the control at a point in time may not be possible. So then we have to check whether it is transferred over the period of time or not. Okay, sir. Sir, but how can I say whether it is transferred over the period of time or not? Simple. Three conditions they will say. Out of these three conditions, if any one condition is satisfied, then we have to understand that control is transferred over time. If not, then we have to finalize that control is transferred at a point in time. Sir, first one. Customer receives and consumes the benefit as and when the entity performs. Sir, see, as and when the entity performs, if customer receives and he started consuming the benefit also, then I can say that, sir, here it is, control is transferred over the time. Okay, sir. Second point though, entity is creating or enhancing the asset from the customer. What should I say? Controls during the production. I think there are few examples. Let me just check those. If you observe, Sir Ravi and Co. have decided to supply Prasad Limited accounting services. Sir, the contract is 6 lakh rupees. See, the moment I have completed the April ka month, I will provide April ka services. So the moment I have completed this May, I can say that benefit of May is done. The moment I provide accounting services for the June, this moment will be done. I mean, the control is transferred, the benefit is being consumed by such person. So July also, if you observe, the moment this July month have completed, this Prasad Limited have got the accounting services ka benefit. Now, what they have decided is that they want to stop me from this July month. And they have decided to appoint Jyoti as their new auditor or new accounting services ka provider. Now you have to tell me, sir, when this Jyoti starts working, will she performs the work only from August ka month or will he start performing for all the months earlier? The answer is no, na, because the customer have already taken the benefit of these 4 months. Okay, so that is the reason the client, I mean the new service provider, accounting service provider will start his work from here only, which means, try to understand, customer have already benefited the asset as and when the entity performs. So customer receives and consumes the benefits as and when the entity performs. If this condition is satisfied, then it is control over time. Sir, if you observe the second thing, the entity is creating or enhancing the asset the customer controls during the production. Sir, what is the meaning of this? Try to understand. Sir, the entity is there. Na? Entity is basically creating or enhancing the asset the customer controls during the production. For example, see, sir, L&T have decided to construct a limited a asset worth 2 crore rupees. It is a completely customized machinery. It is a completely customized machinery, sir. As and when the time progresses, the customer will be getting the benefit. For example, sir, see, 50 lakh related work is already completed by this L&T. Later, I want to change the contractor. Instead of L&T, I wanted to give the contract to GMR. GMR Constructions. Sir, now what will be happening is this GMR Constructions will be commencing their work where L&T have left, then GMR will start. Sir, they will not start from the scratch now. Unnecessarily, this 50 lakh will get wasted now. They completely start from the scratch. So, this is also not correct. So, if the entity is creating or enhancing the asset, sir, once this asset is ready, who will control? Customer will control. So, during the production time, if customer controls, but you as an entity is creating or enhancing the asset, therefore, it is treated as control over time. And the last one though, the asset created has no alternative use to the entity. Sir, if the asset is highly customized, if the asset have no alternative use and it has right to receive the payment for the completed work, then I can't do anything. Okay? But if it is having any alternative use, then I cannot say that it is control over time. And whatever the work is completed, against that work, if I have the right to receive the payment, then only I can say that control is transferred over the time. Okay, sir. Sir, out of these three, if any one condition is done, you have to observe that control is transferred over the time. Sir, do we have to remember this? Yes, very, very important. Now, sir, if it is revenue over the time, sir, how can I recognize the revenue? You have to recognize the revenue over the period of time. Sir, what is the meaning of over the period of time? In this example, once this April month ka accounting services are provided by the entity, you have to book the revenue for April. Similarly for May, for June, for July. Like this you have to do. Understood. Sir, what are the methods to recognize the revenue? Very simple, Baba. You have two methods, output methods, input method. Sir, what is the meaning of output method? Survey method. On the basis of value to the customer. Sir, some other external certifier will certify this survey method. They will find out the value of the sale. They will find out the value of the value the customer have derived, and based on that we have to charge the revenue. Another method of input method. I think this thing though we have already seen in our AS7 intermediate days. On the basis of cost incurred, you have to calculate the percentage of completion, and through this percentage of completion you have to apportion the revenue. Okay? If this is any audit services, for example, on the basis of the cost incurred or performance by the entity. If it is audit service cutting, then I have to check how many resources are consumed, how many labor hours are consumed, etc. Like this I have to do. Sir, major crux of the standard is completed. Major crux of the standard is completed. Some other normal chotu sir discussions are there. So let us have these discussions quickly. The first one, sir, bill and hold arrangements. Sir, what is the meaning of bill and hold arrangements? This is the treatment. Let us come a little later, but we can quickly check this part. Sir, entity have already billed the customer, but the delivery hasn't made at the request of the customer. I have decided to sell one item to the customer. Customer have already paid me also. Billing is already done. But the thing is, customer himself is asking me to store the product for some time. Because customer का place में its storage facilities is not possible. Therefore, customer is requesting the supplier only to hold the asset for some longer period of time. Sir, this is the meaning of bill and hold arrangements. You have to hold the asset. Don't directly give the asset to the customer. Sir, here what I have to do, very, very simple. You have to identify these three conditions. If these three conditions are done, then it is said to be bill and hold arrangements. See, the meaning is, sir, control is already transferred, but entity is retaining the physical possession. Control is already transferred to the buyer only, but still I am retaining the physical possession of the item. These three, if you have to check, sir, product is separately identified as belonging to the customer. See, sir, the entity is having 10 items of the same product. But whatever the item which I have sold to the customer, that I have to keep separately. I cannot sell this item to any other person, and later if I replace another item there, then it is not correct. It should be separately identifiable and it should be kept separately. This item though I cannot use nor I cannot sell to any other person. This product is ready to delivery. If the customer calls me and tell, okay, please deliver the same tomorrow, I have to do that. It should be ready to delivery. Entity can't use the product, and product is separately identifiable as belonging to the customer. If these are satisfied, bill and hold arrangements, but still we have to recognize the revenue. Sometimes what will happen is, since the customer only have asked to store the product, they will charge you some custodial services ka fee also. That is a separate performance obligation, by the way, and we have to recognize the revenue as such. If any custodial services ka fair market, the standalone selling price is given and all, we have to allocate things. Okay? Fine, sir. Normal setting done. Next, a little important contract cost treatment. Sir, what is the meaning of contract cost? Guys, let us understand there are two types of contract costs. Sir, first one to contract acquisition cost, second one to contract fulfillment cost. First one to contract acquisition cost, second one to contract fulfillment cost. Only listen one thing, sir. If it is a contract acquisition cost, sir, some costs will be incurred even though whether the contract is successful or not successful. Those though you have to recognize them as an expenses. See, if you observe some kind of campaignings and all, many sales people will do these kind of things, but they have to do these campaigns at various places. Sir, whether it will become successful or not, whether the customers will be coming from that place or not, is totally a different thing. Irrespective of that, you have to incur these expenses. And these are called as contract acquisition costs. Sir, whether the contract becomes successful or not, still I have to enter. So these kind of expenses we have to charge to PL. But sir, sometimes incremental cost will be there. Sir, what is the meaning of incremental cost? If I specifically enter into the contract, then only I have to incur those costs. Which means if I don't enter the contract, there is no need for me to pay those expenses. These are incremental, and if it is incremental cost, you have to recognize as a WIP asset, and it will be amortized over the contract term. I have to recognize this item. I should not charge this item to the P&L account. Okay. If the contract price is 6 months, for example, 6 months and it is falling in 2 different years. For example, around January 1st, I have entered into contract. So Jan 1st to 30 June. In 1 year, 3 months. In another year, 3 months. I have to amortize this over the contract term. Okay? Fine, sir. Sir, what is the meaning of contract fulfillment cost? Contract fulfillment cost means that I have entered into contract and whatever the cost which I have been incurring, that is only for the performance of satisfaction of the contract. Then you have to check, for example, any materials or labor to construct a specific asset, I have to capitalize such costs and I have to amortize over the contract term and I have to amortize over the contract term. Okay, sir. Last concept, modification of contract, drill important. Sir, modification of contract means if certain contract may additional goods and services have to be produced. Additional goods and services. See, whatever the contract existing it is there, okay, that is fine. Some changes to the price or some changes to the goods, etc. have been made. So this is a classic case of modification, and let us understand. Sir, modification may, because of this modification, additional goods or services have to be supplied. And price is there now, that price is exactly increased by standalone selling price of such additional goods and services. In this case, the modification is a separate contract because the price is in relation with the SSP. Same point we have seen in lease modification also, if you observe. Similar thing here also. Sir, if it is increased in the nature of SSP, then it is a separate contract only, so don't make any modification in the current thing. But second thing though, sorry, because of modification, if any change in prices or additional goods are made but prices are not increased by SSPs, because of this modification, sir, price is changed or additional goods only. See, sir, normally, I think there are examples. Just a moment, guys. If you check this, sir, normally A Limited have decided to enter into contract with Mr. A to supply 10,000 units at 100 each. 3 months are completed. 3 months are completed. 3 months are completed. Now, additional 50,000 I have to supply at 90 each. Sir, the standalone selling price is still 100, but they are saying if you purchase additional 50, we will give you at 90 rupees only. Sir, why I am supplying at 90? Because the customer have purchased earlier 1 lakh units. Now the customer have purchased additional 1 lakh rupees now. Therefore, I have to adjust this. Therefore, I have to adjust this item in the current contract only. In the current contract only, I have to make a modification and this, if you observe, sir, what I have to do is I have to terminate the old and recognize the new contract. Sir, what is the meaning of this? Let us try to understand. See, sir, A Limited accounting services, Mr. AA, for an annual fee of 7.2 lakhs. Sir, 6 months are completed. Since it is over the period of time, I have already recognized 3,60,000 as revenue. Sir, but now what have happened is from 7th month price is changed. Sir, what is the new price? New price to 3 lakh for balance period. Now, sir, 6 months are there. So 3 lakh divided by 6 I do. I will get 50,000 per month. I will get 50,000 per month. Okay, sir. Understood, sir. Okay, sir. We have understood the point. So last thing, guys. Sir, modification results in increase in scope, that is increase in labor hours, but it is related to a single performance obligation. See, if question may, if any labor hours related adjustment they have been given, we have to adjust on the basis of cumulative catch-up basis. We have to adjust on the basis of cumulative catch-up basis. Cumulative catch-up already I have explained earlier now. Sir, we have to find out revenue to be recognized. This should be compared with revenue already recognized. Sir, if I have to recognize extra, please recognize the extra revenue. Sir, but what if I have already recognized extra revenue? Then you have to go ahead and reverse the revenue. One question is there, you will understand. Okay. The last may service concession agreement. Last may service concession agreement. So this service concession agreement is nothing but PPP, public-private partnerships. For example, tollways, highways and all, if you observe, L&T will construct infrastructure and operates it for some time. Example, highways. See, this L&T and government will enter into partnership. They will say that it will construct the infrastructure and the government will not pay the total amount to L&T right now. It will say that okay, for 5 years you can collect the toll, but after that we will give you payment. Like this also sometimes the government will say, and sometimes the government say okay, initially we will pay you 100 crore, but after 10 years you can collect the toll for another 5 years. Like this also they can say. It is an example of PPP, public private partnerships. Here what I will be doing is, sir, if entity has unconditional right to receive the cash, it is a financial asset as per IndAS 109. So whatever you have learned, effective interest rate, etc., you have to recognize the finance income per annum and all related things will be done normally. But if the entity has a right to collect the toll, that will be treated as an intangible as per IndAS 38. Okay, sir? Yes, sir. We have understood the concept, sir. So here if you come quickly, I will be marking only few important questions. So this question number 1 and question number 2, very easy, I have already explained. These are contract modifications ka points. So just go with the theory what I have written. You can aram se able to solve this question. Okay, little changes here I have made. Here they have given some different figure, but please change to 31st March 19. This is a case 1 modification, by the way. I have already written there, so you can understand this part. This is increase in labor hours ka point, important. So please watch this definitely. You have to solve this question definitely. So whatever the solution which they have given, that is exactly correct. Okay, you can understand this part. This also easily we can solve. So whether the question is single performance obligation is there, multiple performance obligation is there. By reading this question, you will understand. Read entire question with single wordings also. Each and every word is very important. So you have to watch this. You have to understand this question. Very simple. So this question though I will say important. And after this, the thing is what I wanted to say is, this is also a little important. Question number 11 also you have to check. Question number 11, very important. If you observe this, this is nothing but bill and hold ka discussion, bill and hold related point. Okay. This last question is similar question like question number 4, I guess. So I will explain the question. This is also very important. Question number 7 also we have to check. Question number 7, that financing component question. I will discuss this question number 7, don't worry. Okay. The exam asked question, the recent question which they have asked in the exam is related to this point only. So let us quickly understand this question number 4. Okay? Yes, sir. See. So the next thing, one important question I just want to discuss. So let us quickly check this. On 31st March 20, A Limited entered into contract with a customer for sale of goods of 4,000 rupees, granting 50% discount to be availed in future purchase up to 3,000 within 30 days. Ordinarily, 10% discount is allowed on sale, and they are saying ordinary discount would not be available to avail the 50% discount voucher. 60% probability is there that the customer will redeem the discount voucher and the estimated amount of purchase is 2,000 rupees. In April 2020, the discount vouchers are redeemed for purchase of additional goods of 2,800. Find the revenue recognition in 2019-20 and 2021. Okay? So let us understand this question. 1 second. I think the solution is there right with me. So where is it? So check this. Sir, 31st March 2020 they are saying customer have purchased 4,000 rupee ka goods. Sir, but if you observe on this 4,000 rupee ka goods, so they are saying ordinarily 10% discount is allowed on sales. So from this 4,000, if I deduct 10% ka discount, then I have to pay only 3,600. ठीक है, फाइन. But along with 3,600, what they will be giving is, if I have to pay 3,600, then they will be paying me 50% discount voucher they will give to be availed in the future purchase up to 3,000 rupees in 30 days. Within next 30 days, if I visit that A Limited again, and if I make any purchases, I will be getting a 50% discount voucher for additional purchase of 3,000 rupees. If I use this 50% discount voucher, I will not get this 10% discount. Normally, if I don't have this 50% का discount voucher also, still I can get 10% का discount. So now you have to tell me, sir, only because of that discount voucher, what is the additional amount of discount which I was getting? Only because of that additional discount, what is the value of the voucher? What is the value of the discount which I am getting? That is nothing but 40%. That is incremental discount which I will be getting because of the voucher. Okay, fine, sir. They are saying estimated amount of purchase is how much? 2,000, and 60% probability is there. Sir, here what I have to do is I will not be recognizing the entire 3,600 ka revenue. See, because customer 4,000 goods minus 10% discount, which means 3,600 you have to pay. But discount vouchers though, 3,000 rupees worth discount vouchers, 50% they will give. And now I have to calculate on this date only, I have to calculate the fair value. Sir, what is the fair value? See, what we have to do is we have to calculate the estimate sales amount. So what is the estimated sale amount? Estimated sale amount is 2,000 into 60% is the probability that the customer will come again. And what is the incremental discount because of that voucher? It is 50% minus 10%. If I do, I will get this 40%. So if I calculate this amount, the amount will come to 480 rupees. The amount will come to 480 rupees. Now if you observe, this 3,600 is one performance obligation, and this discount voucher is also second performance obligation. I should not recognize entire 3,600 as a revenue, but rather I have to allocate the transaction price. Sir, what is the total transaction price? Total transaction price is 3,600 only. But I will not recognize this entire revenue. I have to calculate the transaction price between these two, and when he redeemed the discount, at that time I will be recognizing this discount value as a revenue. Okay, but here I should not recognize the entire amount as a revenue. The reason is this 3,600 transaction price should be allocated in the ratio of the standalone selling price. The ratio of standalone selling price of the items are 3,600. The ratio of the standalone selling price of this voucher is 480 rupees. So 3176 and 424. So the entry which I will be passing is bank account data 3,600 to revenue 3176 to contract liability 424. Okay, fine. Sir, but now what have happened? They have also given the further data also. As in April 2020, the discount vouchers are redeemed for purchase of additional goods of 2,800. Sir, in April 2020, the customer visited and the customer have basically purchased 2,800 ka goods. Sir, now how much amount will the customer will make the payment? Customer will make only 50% of the payment, which is 1,400. Sir, but earlier also contract liability ka value is there na. So this 424, now I have to reverse and I have to book the revenue. Because, sir, what is the total amount which this person have made? This person have made this 3,600 also and this 1,400 also. Correct or not? This person have made this 3,600 also and 1,400 also. If you calculate the total revenue which he have booked 3,176 also and 1,824 also, which means whatever the exact payment which that person have made, all those will be recognized. But here though, entire revenue we should not recognize, because we know that in future the customer will be definitely coming to us, and we have made an estimate of the purchase as to how much the customer is actually making, and we have to recognize that as a contract liability. Sir, even in future the customer have not visited our store in the next 30 days, those vouchers will be lapsed. Even though those vouchers will be lapsed, we still have to transfer the contract liability to revenue account. Because since those are lapsed, you have postponed your revenue recognition. This 424 worth, so now this 424 worth revenue also will be recognized. Okay, fine, sir. So here there are basically two types of performance obligations: sale of goods also, sale of discount voucher also. I have to calculate the transaction price and I have to allocate this. See, everything I have written in steps. So this solution I will be sharing with you. So you can refer this solution. So just a moment, I will share this. Okay, fine. So good question it is. It is completed. So that's it, guys. Balance the questions. So what I wanted to solve you definitely is this second question. You have to definitely check this. Okay. So finally, that's it, guys. We have completed this IndAS 115 as well. So next we will start with IndAS 110, which is consolidation standard. Very in depth we will go and we will understand all the aspects in that standard. Okay, fine, sir. So that's it.